Ladies and gentlemen, on behalf of the Pakistan Banks Association, I once again welcome you to the inaugural of the Pakistan Banking Summit 2025. This is a trailblazing two-day event, and the outcome is a pioneering collaboration spearheaded by our banking sector. This is aimed at fostering financial and economic dialogue within the nation. We have a lot to be excited about in the upcoming 2 days, as 12 international speakers and 20+ subject experts from across the financial fields in Pakistan are here. And also, most importantly, this is also a convention of leaders from over 45 institutions, including conventional, Islamic, digital, and microfinance banks. Ladies and gentlemen, let us begin with giving you what is to come, an introduction, why the need of this summit was felt so essential, and why we feel it's trailblazing and pioneering. Let's take a look.
The Banking Summit, organized by the Pakistan Banks Association, is a milestone event for our financial sector.
The significance is this is the first time this is happening. And I think that the biggest difference is, instead of PBA being inward looking, we are actually reaching out, engaging, and collaborating.
It's a long time coming, and we've spent the last 3 months putting it together to bring dialogue and decision makers on one platform.
It is also felt that perhaps the role of banking has been not fully understood by all the stakeholders in our economy and in our policymakers.
At the heart of this discussion is a fundamental shift in how we think about banking.
To make everybody realize that banking is at the center of all flows that happen in the economy and all development that takes place. Banking becomes a supporter and a catalyst for that growth.
This conference, the PBA Summit, will help people to get together and find ways of learning from different people across border, and also to apply those practices in Pakistan and help them grow, inshallah.
We need to start working together. We need to figure out how collectively we can work towards the betterment of our people.
As the country has progressed, PBA has also progressed, and we are really reaching out and integrating and bringing the value that we have to share with the industry, with the government, with all the interested participants that are interested in the well-being and growth of Pakistan.
We all look forward to hosting you and inshallah look forward to a very interactive and learning session. Thank you very much.
Ladies and gentlemen, it's a house full, and definitely these are 2 days of insight, of learning, of dialogue and conversations. These are much needed in the present day economic climate, and that is why it is of our utmost pride and delight that the Honorable Federal Minister for Finance and Revenue of Pakistan, Senator Mohammad Aurangzeb, has kindly consented to be our chief guest today and is also present amongst us. Ladies and gentlemen, a big round of applause for our guest of honor. We'd like to formally begin with the opening remarks of the chairman of PBA and the CEO of Bank of Punjab. Ladies and gentlemen, please put your hands together to welcome Mr. Zafar Masood.
थोड़ा सा challenge हो गया तो. Nevertheless, I'll manage. I'll pull it off. FM Saab, Governor Saab, our fellow bankers, industry leaders, our international speakers, local speakers, and my favorite, of course, media. They have to be my favorite. At least for the next 2 days, we'll be relying on them to put a true narrative together in front of everybody. Ladies and gentlemen, welcome to first Pakistan Banking Summit. FM Saab, we owe this summit to you. You were the one who initiated it a year ago. I exactly remember it was January last year when you had first talked about it. I happened to be your senior vice chairman then. And when you talked about it, we had debated it and immediately bought into that idea. So really, this congregation today is owed to you. So thank you very much for that. Thank you very much for your presence also. I know you have a very tight schedule. You just arrived from Lahore last night and you're heading out this afternoon to Islamabad, but thank you for taking the time out. Finance Minister Sahab, ये जो conference है, it's unique in the sense that इसमें जो आपको 12 speakers नजर आ रहे हैं, international speakers, they have all come physically here. Nobody is joining, online. We did not allow that because we wanted more intimate and constructive discussion, not just on the stage here, but beyond the stage as well. Presentation कौन लगा रहा है? जल्दी FM ने आगे निकलना है. थोड़ी सी जब तक presentation लग रही है, Finance Minister साहब, थोड़ी सी शिकायतें आपसे हम करेंगे. कुछ शिकायतें हम अपने बारे में बाकियों से सुनेंगे भी, मगर हमारा दिल थोड़ा सा जला हुआ है लास्ट वीक से, तो हम उसके बारे में आपसे ज़रूर बात करेंगे. क्या हुआ? प्रेजेंटेशन क्या हुआ? अच्छा सर, there seem to be some technological crisis. So begin with, ये बैंकिंग के ऊपर कोई रिफ्लेक्शन बड़ी अच्छी नहीं है, but presentation नहीं लग पा रही. Nevertheless, मैं अपनी presentation जो है वो बाकियों से सबसे बाद में शेयर कर लूँगा. To begin with, Finance Minister साहब, Governor साहब, you will be very pleased to know that banking sector has now become the largest taxpayer in this country. अच्छा, तालियां बजा सकते हैं आप लोग, कोई परेशानी की बात नहीं है. पहले ये oil and gas sector होता था. We beaten oil and gas sector down, not because of the profitability levels, but primarily because the rate has gone over the top. Now we are paying 54% tax all in, and then the recent one, by the way, has added another couple of percent point, which is with windfall tax, and all put together, around 60% of the tax is coming from the banking sector now. And then we remain the largest, largest tax collector on behalf of FBR as well. We expect to contribute beyond 700 billion rupees this year. We are the massive employer, 200,000 plus. And in terms of inclusivity also, we are better than the rest of the industries, thanks to State Bank of Pakistan and their Banking on Equality initiative. Almost 100%, 99.8% of the budgetary deficit support is also coming through from the banking sector. And 49% of the total assets of GDP are also banking assets, which is a reflection of how the banking sector is contributing towards the economy. Global perspective. In terms of global perspective, Finance Minister Saab, the political landscape is changing, and the political landscape is changing very fast. Trade barriers are rising. Climate and DEI seem to be now archaic. And then there is a talk about alternate currencies being emerged. There is a visible dominance of China as far as technology is concerned, and as far as their control on supply chain is concerned. And all of that, to my mind, leads to the first economic world war of the sorts. And interestingly enough, like the other economic world wars, which were fought in Europe. This seemed to be fought in Europe as well. And we being one of the largest exporters to Europe, or at least our exports to Europe, it could be a challenge. There will be a challenge on capital flows. There could be a challenge on the trade side. And I think the banks need to be prepared for it, for the changing world. Although the trends, our technology trends have changed substantially, the name of the game will be lean and mean banking going into the future. Why are we here? We're here for mainly two objectives. One, to collaborate with the industry leaders, with the international players. Again, this is slide 4. With the industry leaders, and we are integrating how to integrate the global banking landscape and collaborate with the international and local players together. But more so, Finance Minister Saab, जिस तरह मैं शुरू में कह रहा था, there are lots of misgivings and misconceptions about banking, and we'll take the advantage of this forum to kind of try and address them and contextualize them. कुछ जो हैं वो शायद genuine हैं, but बहुत सारी जो हैं वो out of context हैं, and I think जब आपने भी इसका idea दिया था conference का, तो गालिबन आपके जहन में भी ये था कि ये बहुत ज़रूरी है कि इनको contextualize किया जाए, इनको constructive way में आगे लिया जाए. मैं आपको ये बड़े यकीन से कह सकता हूँ that we'll be happy to take the criticism on our chin, but please, I would also expect the industry and the media and everybody to appreciate our position and what banking is contributing towards the economy. Next slide. Some of the typical misgivings. मैंने कहा, rather than beating around the bush, Finance Minister Saab, Governor Saab, कि जी वो नहीं इस तरह है. मैंने कहा जी, let's talk about what are those issues, starting from shying away, जो हमें accuse किया जाता है, shying away from paying taxes because हमने ADR पे जाके stay order ले लिया था या windfall tax पे stay order ले लिया था, to now also criticize कि जी हमें शायद ज़्यादा तेज़ी से Islamic banking की conversion की तरफ जाना चाहिए. मैं वो सारे aspects को cover करने की कोशिश करूँगा और जहाँ पर हमारा कसूर है वो accept भी करूँगा, मगर जहाँ हमने कुछ किया है बेहतर, मैं expect करूँगा कि बाकी उसको appreciate भी करें. Next. So shying away from, भाई largest taxpayer हैं of the country, तो shying away कैसे हो सकता है from tax paying? This is to begin with is very unfortunate. And इस पे भी तालियां बज सकती हैं, भाई आप लोगों ने टैक्स दिया है. जरा थोड़ा सा ना आप लोग परेशान ना हो, तालियां वालियां बजाएं. अभी फाइनेंस मिनिस्टर साहब भी आएंगे. We need to appreciate what we doing good, and we need to now start blowing our own trumpet, क्योंकि बॉल तो कोई नहीं बजा रहा, हम तो बजाएं कम से कम. फाइनेंस मिनिस्टर साहब, जो रियलिटी है वो ये है कि जिस तरह ADR टैक्स था, जो डिस्टोर्टिव टैक्स हैं, हम उसके खिलाफ हैं और हम उसको रेजिस्ट करते हैं. We always submit and request that please go for the tax on our income, but do not distort our balance sheet. And this is what our submission is. We have very successfully, with the help of our dear governor, we have been able to resolve the issue of ADR, but the expense of increasing our income tax by 5%. We have now have another unresolved issue to address, and that unresolved issue is with windfall tax. हमारा दिल बहुत जला हुआ है इस पे गवर्नर साहब, बिकॉज जिस तरह हमें ट्रीट किया गया उस पे वो बड़ा फेयर नहीं है, और मैं आपकी इंटरवेंशन चाहूँगा कि इस तरह की चीज़ जो है वो प्लीज़ आप ज़रा FBR को भी कहें कि थोड़ा सा कोलैबोरेटिव एफर्ट की ज़रूरत है. नोटिस भेजने की ज़रूरत नहीं है, हमें डिफ़ॉल्टर करार देने की ज़रूरत नहीं है. जब वो ड्यू ही नहीं है तो हम डिफ़ॉल्टर कैसे हो गए? और हमने एक दिन में 30 बिलियन रुपए जमा करके दिए हैं गवर्नमेंट को. उससे पहले 3 दिन में 72 बिलियन रुपए जमा करके दिए थे 31 दिसंबर से पहले. हमारी जो टैक्स ब्रैकेट है वो हाईएस्ट है in Pakistan, 1.86 times more than the industry, and in the region also we are by far the largest taxpayer. We are also fighting for our survival in terms of getting rid of taxes like windfall tax, because there is no end to it. This is today on FX income, tomorrow on interest, and the day after maybe on something else, which is very unfair. Next. एक और जो हम पे बड़ा क्रिटिसिज्म आता है कि जी हम सरकार को पैसे देते हैं और प्राइवेट सेक्टर को नहीं देते, थोड़ी इंट्रोस्पेक्शन की जरूरत है. गालिबन government needs to the industry needs to step up as well and act in a more responsible manner of what needs to be done. The fact of the matter is, Finance Minister Saab, and I'll say this all the time, कि budgetary deficit financing बैंकों के लिए ना करना is a no choice situation. Just imagine if we pull the plug tomorrow for not funding the government, the crisis that would happen. Trust me, there will be no financing available for the private sector either. And people don't realize that. 99.8% funding of, other than the tax that I talked about, coming from the banking industry, and that must be appreciated than anything else. मेरी या favorite analogy है fountain head and pond की. The leakages in the fountain head leads to a dry pond, and that leads to the dry pond because the fountain head, both on the liquidity side and the credit side, banks have a deficit. If the documentation is there, they're not part of the taxation system, banks cannot help. And this needs to be appreciated. The industry needs to step up and get themselves documented. 52% of our sectors are currently, unfortunately, not part of the formal documentation. Next. I know that. Cashless economy and financial inclusion. वो कह रही हैं कि you have to keep your language in English. मैं जान के उर्दू में कुछ बातें कर रहा हूँ, तो मीडिया के लिए ज़रूरी है कि ज़रा वो उर्दू में भी सुन लें. Cashless economy and financial inclusion. Finance Minister साहब, हम पे इस पे भी बड़ा इल्ज़ाम लगता है that on the cashless economy and financial inclusion, perhaps we are not doing enough. I think again, to some extent fair, but to a very large extent very unfair acquisition. There is substantial improvement. We've seen that 9 times in last 5 years, 9-time increase in the bank accounts. We've seen substantial increase in the women participation, but still there is a long way to go. Same goes for mobile banking, e-commerce, internet banking, all are on the up, but that's not enough. There is still a long way to go for documenting the economy and the currency in circulation, which has reduced from 39 to 35%, but that needs to be further subsided. The POS machines, for example, we are behind in comparison to the region, which is a major catalyst in terms of promoting documentation. However, there are certain complications that Finance Minister, you are very well aware of, but rate kar raha hu, is complex and high taxation piece, no availability of proxy data, women participation still low, and the education about financial education is also something that we need to work on. Next. Then we have been criticized that we don't support SME in agriculture, and it's kind of connected to the previous point, which is lending to the government, the point before the previous one. Both the sectors have huge contribution to the economy, but their participation in the banking sector is minuscule. The three sectors, the 52% of the three sectors, have merely 13% of the total deposits, Minister Saab. Now, that reflects, and the contribution to the tax है, वो तो minuscule है. So therefore, there need to be something to be done about this. And the starting point is that they need to get themselves documented. They need to move away from the informal sector. Again, I will accept the fact that perhaps banks need to make things easier for them to come through, but then they also need to make an effort, and we all have to come somewhere in the middle and take this forward as a larger interest of the country. The deficit for the banks is that we deal in documents, banking 101, we don't deal in goods. So therefore, we will be dependent on documentation, and we expect these sectors to document themselves. Next slide. बैंकिंग ऑन इकोनॉमिक रिवाइवल, हम पे ये भी बड़ा इल्ज़ाम लगता है कि हम शायद गवर्नमेंट की हम इकोनॉमिक रिवाइवल की तरफ काम नहीं कर रहे, सिर्फ डेफिसिट फाइनेंसिंग पे काम कर रहे हैं. सो जस्ट टू other than the contribution on the fiscal side, both taxation and non-taxation and debt side, the recent success story, the PBA, your legacy, Finance Minister Saab, ये जो आज summit भी है, this is your legacy, has been rebranded. There is more better collaboration that is quite obvious and witnessed by everybody and acknowledged by everyone. The recent success stories, starting from PIA, which is the largest restructuring that has been done. Although we are not very happy about certain terms of that, it could have been managed better. And I'm sure, Finance Minister Saab, you empathize with us. We have been able to resolve the ADR issue and the MDR issue. Thank you, Governor Saab, and your team for getting that resolved. Long pending issue. And then recently, Finance Minister Saab, we are working with the FBR on the data collaboration. ये जो नया अभी law आया है, इसमें किस तरह data पे काम हो सकता है? We believe that जितना बड़ा stakeholder FBR उसका है, उतने ही बड़े stakeholder हम भी हैं. So we are working very closely with them to figure out how to make it more robust. The collaboration with the private, again, another legacy of Finance Minister is that when he came here, he asked us that forget about the fiscal support coming through in terms of interest or for that matter in terms of first loss guarantee and work on your own. So we are developing this ecosystem of priority sector financing, which I briefly touch upon later on. And PBA is spearheading that. Governor Saab is supporting it fully on this one. And Finance Minister Saab, you are spearheading that too. मेरी इस मौके पे गुजारिश ये होगी that we are now working towards resolution of circular debt issue. बड़ी मेरी मुद्दबाना गुजारिश ये है फाइनेंस मिनिस्टर साहब, उसको हमें इंसेंटिवाइज करना है बैंक्स को, फोर्स नहीं करना सर, बिकॉज हमें ये फीलिंग आती है कि हम पे ये इम्पोज किया जाता है, ये फोर्स किया जाता है. उसको ज़रा हमारी गुजारिश होगी कि आपकी इंटरवेंशन की हमें ज़रूरत पड़ेगी कि वो इंसेंटिवाइज हो, वो फोर्स ना हो. ताली बजा लो यार इस पर. नाउ गवर्नर साहब, जो नेक्स्ट पॉइंट है वो इस्लामिक बैंकिंग से रिलेटेड है. एंड मेरे ख्याल से ये भी बड़ा अनजस्ट है कहना कि हम स्लो है कन्वर्जन. बिल्कुल स्लो नहीं है. द इंटायर इंडस्ट्री इज फुली कमिटेड टू दिस. 2027 is our deadline. We are moving in that direction. However, there are 3 or 4 major things which needed to be boxed in. And आपकी और गवर्नर साहब की प्रेजेंस का मैं एडवांटेज लेते हुए वो आपको गोशगुजार भी करना चाह रहा हूँ. उसमें जो सबसे इंपॉर्टेंट एलिमेंट है वो ये कि जो गवर्नमेंट की अपनी बोरोइंग है और जो फ्यूचर की बोरोइंग है उसके लिए एक एसेट लाइट सकूक स्ट्रक्चर इज नेसेसरी. एंड वी विल हियर फ्रॉम आवर guest over the next 2 days of how this has been done elsewhere in the world, and then they will be able to assist us how we can do it in Pakistan. But this is the major aspect which is kind of need to be boxed in before we talk about conversion. We also need to figure out how the correspondent banking arrangements will work. We need to figure out that with the international DFIs, चाहे वो climate side पे हो या trade side पे हो, आपको पता है IFC ने पैसे दिए हुए हैं, ADB ने किया हुआ है, AFD ने किया हुआ है. All those have to be figured out, that they need to be carved out, or we have to let go of them. That need to be taken care of as well. The last point on the Islamic side is the fact that the foreign banks, the branches of the foreign banks, and the banks which are majority owned by the foreign entities, which are not in Sharia compliant business, how to treat with them as well. But this is a major aspect, and these are the 3 major big constituencies that we need to address. Next. फाइनेंस साहब, ये जो अगली वाली है ये आपकी लेगेसी है. आपने ये इनिशिएटिव लिया था फाइनेंस मिनिस्टर बनने के बाद. यार चेंज करो स्लाइड. ये आपने इनिशिएटिव लिया था ऑफ सेटिंग अप द इकोसिस्टम. अब इस पे भी हम पे बड़ा क्रिटिसिज्म ये आता है, बल्कि हमारे अपनी रेगुलेटर के पास से आता है कि जिसको तेज तेज करें, जल्दी करें। तेज और जल्दी नहीं हो सकता। 70 साल लगे हैं इस इकोसिस्टम को यहाँ पहुँचने में, यहाँ से आगे ले जाने में 5, 7, 8 साल लगेंगे। सो वी ऑल हैव टू बी पेशेंट एंड ऑल हैव टू बी वर्किंग टुगेदर इन टेंडम, और एक दूसरे को क्रिटिसाइज ना करें, साथ काम करें इस पे, क्योंकि ये बहुत इंपॉर्टेंट एलिमेंट है that we have to develop this ecosystem which has been lacking for the last 70 years in this country. SME index, perception index has already been established, Finance Minister Saab. Within this year it will be launched, which will help in lending to the SME sector. We are trying to collaborate with the NCGCL so that, you know, the blended risk could be taken care of and taken it forward. SME definition has to be revised, and that's something which is lying with the cabinet. We need your assistance in getting it sorted out. On the agriculture side, EWR, मुझे पता है फाइनेंस मिनिस्टर साहब ये आपके दिल के बड़ा करीब है। इसके अंदर गवर्नमेंट ऑफ पंजाब, Pakistan Agriculture Coalition and Pakistan Banks Association are very closely working to see how we can revive this, and you will hear a very good news inshallah in the next couple of months on this front. On the Islamic product side, I would urge our Islamic banking experts here to please guide us how we can come out with the products on the agriculture side to ramp up the efforts there by the conventional side as well. Digital, we're talking about PE fund, we're talking about data exchange, by the way, which is my favorite. अगर ये data exchange ठीक हो गया, Governor साहब, Finance Minister साहब, तो trust me, इसमें एकदम से बहुत boost नजर आएगा आपको, क्योंकि आज proxy data हमें available नहीं है. And then housing के अंदर, I must, ladies and gentlemen, appreciate that our finance minister was one step ahead of us. He called me and said that he's meeting up with the Chief Justice, and he wants to take up the matter of foreclosure law and also FIRA for microfinance sector, and he did. So thank you very much, Finance Minister, for doing this. Next. Other than these ecosystem development, we are working on certain products. Agli yaar slide. We are working on these efforts, Finance Minister, with the federal government. Taxonomy, I know another subject which is very close to your heart. We've already given our feedback to the central bank and taking it forward. This is the most important element for tapping into the climate financing locally and internationally. So we are very much working with State Bank of Pakistan in taking it forward. Second one is the fan financing, efficient fan financing, working with Ministry of Power on this. I will not get into the details of these elements, but just to highlight and share them with you. The other one is solarization of tube well. You're aware of it, working with your ministry and Prime Minister's office, and EV financing with Ministry of Industries. Next, please. What do we expect from the industry? We expect from the industry, खुदा के लिए अपने आप को डॉक्यूमेंट करें. प्लीज मेरी गुजारिश है, हमें ना क्रिटिसाइज करें कि बैंक फाइनेंस नहीं करता. पहले आप खुद तो डॉक्यूमेंट करें, फिर हमारे पास आए और हमें कहें जी हम डॉक्यूमेंट हो चुके हैं, आप अब हमें फाइनेंस करें. तो द क्रिटिसिज्म इज जेन्युइन, बट उसके बगैर क्रिटिसाइज करना इज स्लाइटली अनफेयर. सो प्लीज गेट योरसेल्फ डॉक्यूमेंटेड. नंबर 2, ट्रीट बैंक्स एज योर पार्टनर्स, नॉट एडवर्सरीज. वो हर चीज पे ये होता है कि जी बैंक्स जो हैं वो बड़े खराब हैं, वो ये नहीं करते, वो नहीं करते. सर थोड़ी सी अपनी भी इंट्रोस्पेक्शन देख लें और ये देख लें कि क्या आप हमें भी तो कुछ चीज़ बेहतर करने की ज़रूरत नहीं है. हमें भी, हम आज ये इस फोरम पे खड़े हुए हैं आपकी बात सुनने के लिए कि हमें क्या चीज़ बेहतर करनी है. आप भी ज़रा प्लीज़ ये देखिए कि आपने क्या चीज़ बेहतर करनी है, so that we work in collaboration and in partnership. And please recognize the efforts of the banking sector towards the economy, जो मैंने आपसे भी शेयर किया, and towards providing you the state-of-the-art service. अगला आइएगा. Last slide, Governor साहब and Finance Minister साहब, आपको बहुत अच्छी तरह पता है, बट मैं ये for the benefit of everybody, I'm just repeating and reiterating it. Banks are the trustees of the depositors and the shareholders, more so to the depositors than the shareholders, and perhaps their employees too. And this one sector is probably the favorite sector of the foreign investors other than oil and gas. And in this context, we have certain submissions for you, Finance Minister Saab. Number 1, the government schemes, whether these are restructuring or financing, these must be incentivized and not forced, please. So this is the first submission. The second submission, and most importantly, we need to please, sir, with your offices, ask FBR to work with us as our partner, as part of the team, and not in a hostile manner as they did in the windfall tax. So, the distortive tax regime must go, sir. This cannot go on like this. The high-handedness must finish, sir. My submission, very humble submission to you is, sir. I would also like to submit, sir, that, we should not be treated as a scapegoat, a tool for revenue target achieving, but the policy in banking should promote and encourage investment. But the recent episode of windfall tax, I'll just say it again because हमारा दिल बहुत जला हुआ है कि उसमें ज़रा थोड़ा सा बेहतर तरीके से मैनेज हो सकता था. इस तरह फोर्स करने की ज़रूरत नहीं थी, सर. We were already ready and we did that and we delivered it. With that, thank you very much, sir. Thank you very much for your coming. Looking forward to hearing from you.
Thank you, Zafar Saab. Your comments and your address really set the stage. This is what we can expect from the next 2 days of the summit: candor, ground realities, insights, and of course, an inward and outward reflection of what can really bring things together. लेकिन जब मैं आपकी बातें सुन रही थी, and again, we're picking a bit of Urdu here and there, so my apologies to our foreign delegates who perhaps may be struggling, but I think passion knows no language and bounds, so you must be able to grasp the essence of it. This reminded us of शिकवा and जवाब शिकवा. जिस तरह कहा जाता है कि दिल से जो बात निकलती है असर रखती है, पर नहीं ताकत परवाज मगर रखती है. So we've had the shikwa. Now it's time for jawab shikwa, and for that, ladies and gentlemen, may we request you to put your hands together to welcome the Honorable Federal Minister for Finance and Revenue, ladies and gentlemen, Senator Mohammad Aurangzeb.
Bismillah ar-Rahman ar-Rahim. Chairman PBA, CEO PBA, distinguished participants, ladies and gentlemen, it's a real pleasure to be here this morning. I would like to start by actually congratulating Atif and the steering committee for having gathered galaxy of international speakers, practitioners who are going to be panelists here, who are going to be speaking around various topics, and this augurs very well, of course, from all the galaxy of people, academics and practitioners here from Pakistan as well. It augurs very well for the rigor and vigor of the debate and the deliberations that are going to take place over the next couple of days, inshallah. And hopefully, we will not only look at issues, but more importantly, come up with out-of-box solutions. And I look forward to looking at those recommendations and views and ideas after a very passionate and fact-based speech from Chairman PBA. Before we come to Pakistan and the banking industry, I would like to talk a little bit about emerging markets, because some of the themes coming out of those resonate with us, and I'll go through that in a moment. Governor Jameel Ahmed and myself, we were in Alula last weekend. This meeting was being co-hosted by Excellency Al-Jadan, the Saudi Finance Minister, and Christina Georgieva, Managing Director of the IMF. And it included primarily the finance ministers from the emerging markets, so GCC, Africa, Russia and Central Asian republics, and LATAM. and there were a few governors and central bank governors there as well. Now, I thought this was a very, very good conference or get-together, because आम तौर पे जब हम in conferences and power hours में जाते हैं, a lot of stuff is scripted. So we already know what's going to happen, and then, of course, those communiques come out. What was different around this day and a half discussion in Alula was this was all informal, candid, open. And I thought it was important to share with this August audience some of the themes which were coming out of that conference, because that's where we start, the emerging markets, and then we come to Pakistan. So what I learned over that couple of days was that emerging markets do have specific vulnerabilities, whether it's on the fiscal side or on the external account side. But by and large, emerging markets have a good story to tell, because they have avoided a macro crisis for the last 25 years. GFC was very much an advanced market discussion back in 2018. And certainly, emerging markets have entered 2025 on a strong note. And this is on the back of macro stability. Actually, across emerging markets, a very stable banking system, structural and bold reforms, which are underway in a number of emerging markets. Now, this is very important, because in the wake, and I'm sure this is going to come up for discussion over the next couple of days, everything which is happening outside, but what we can call externalities, whether it's geopolitics, demand fragmentation, protectionism, threat of spillovers, and this goes beyond financial spillovers. And almost there was a consensus among the emerging market finance ministers that we need to focus on what is controllable, what is in our hands, and therefore stay the course. And in fact, it's President Jin of AIB, and I quote him saying, "Keep the caravan moving while there are clouds on the horizon." Now, some of the key themes which were coming out of this conference over the last weekend, I'll just go through those. Number one, most of the finance ministers were laser focused on productivity-led growth. Most of the finance ministers talked about private sector leading their countries in their own jurisdictions, whereas government only providing the policy framework and policy continuity. Most of the finance ministers are very clear that improving governance and therefore ownership and accountability at the government level is the right thing to do. Deregulation, cutting the red tape, putting the bureaucracy down. In fact, from Argentina, the minister who represented Argentina was not Minister of Finance, was actually Minister of Deregulation. No surprises there. The third one was fiscal prudence, domestic resource mobilization, and prioritization on the expenditure front. So differentiating between good costs and bad costs, which obviously require very tough policy choices, as we are seeing here in Pakistan as well. The second last thing I would mention is, which was very important and was very encouraging, because in this whole scheme of things, you can appreciate there are countries which are well endowed, and there are countries which require help. And the topic of this discussion was shared challenges and shared future. And the fact that this South-South collaboration, where well-endowed countries are willing, ready, and able to step up to help other emerging economies, working with each other in terms of not only increasing investment and trade flows, but also the technical support, because that's where capacity building comes in. And the last thing is that everyone appreciated the fact that global trade may not be a lever of growth anymore because of everything that we are seeing. However, the regional connectivity and the corridors, and whether we can work with each other, and agar main Pakistan ke context mein dekhun, what we need to do more with GCC, what we need to do more with Africa, what we need to do more with Central Asian republics, Turkey, etc., it made a lot of sense that we move in that direction from a South-South collaboration perspective. So I just wanted to mention this to this audience because as far as I'm concerned, and the governor was there as well, that these themes resonated. These are the themes which we are working on ourselves as well. And so उसमें ये जानना कि पाकिस्तान का ये ना कोई बहुत idiosyncratic risk है और ना कोई ऐसा challenge है जो बाकी emerging markets में नहीं है. But I thought the firmness and the resolve that I saw from the finance ministers of the emerging markets was actually both heartening, and it's all about learning from others as well. Now let's come to Pakistan. As I mentioned earlier in other discussions as well, that alhamdulillah, in terms of macroeconomic stability, we have made some very significant progress. Uske sare jo indices hain aapke samne hain. These are being reported as well, with a stable currency, FX reserves being over 2 months of import cover. Then the bane of our country has been our twin deficits, which is lack of discipline around whether it's on the fiscal side or on the external side. So getting into a primary surplus situation, notwithstanding आप सब लोग लिखते हैं कि ये windfall आ गया, वो windfall आ गया, आप सही कहते हैं, तो उसकी sustainability की हमें ज़रूरत है. इसी तरह जो current account for the first 7 months, notwithstanding the discussion that we've seen in January, is on a surplus on the back of very strong remittance flows, and of course on the diversification of exports as well. I think we've moved in the right direction, but I'll come back to that in a moment. And then, of course, inflation has been a good story on the back of policy rate, which is very much the domain of the central bank. But it's SCIBOR, which is critical for all of you who are in the industry or in consumer finance, because from the peak of 23%, it has come down to 11%, and some of the financing has gone into single digit. So I think it's moved in the right direction. Some of the institutional flows have started coming back in on the debt and equity side. I'm always very careful in taking credit for the stock market. It's okay. I think it's a data point, which is important, representing the confidence of the investors in the economy. But all of this sort of needs to come together in terms of saying कि जो माशी इस्तेकाम है, we are in a good place from that perspective, sort of 12 months into this administration. Now, on the back of that, we are not planning, we have been executing structural reforms. So, pehle taxation ki baat kar lein, and all of you who have appreciated what we are doing on the taxation side, I'm very grateful for that, because any transformation, first of all, needs to start from home. So whatever we are doing in the tax authority in terms of people, process, technology transformation in FBR itself, people changes have been made, more people changes will be made, but ultimately it's all about end-to-end digitalization. जितना हम इसको automate कर दें और पहले जो process हैं उनको rectify कर दें, because if you automate a broken process, it will still remain a broken process. So end-to-end digitalization, uski ek example is the faceless customs, where the GD clearance has come down from an average of about 118, 120 hours to about 18, 19 hours. And the reason for that is कि जितनी human intervention वहाँ कम हुई, तो ये GD clearance में होता क्या था? अब वो बड़ी simple सी बात है कि वो negotiation होती थी. And now that we are in a sanitized environment, so I can't say very earnestly everything has gone away, but I would say 80-90% of that negotiation has gone away, because that 80-90% of the negotiation was simply about speed money and facilitation money. Corruption, in very simple words. So the moment we sort of continue to move in that direction, it'll help the client side. It'll help us in terms of the revenue increase, but this one example. The other is, and I'm very grateful, I keep on saying it in every forum, we are very grateful to the provincial assemblies and the chief ministers for getting the agriculture income tax cleared through the relative assemblies. तो हर एक बात ये करता है कि जी ये कब होगा और फिर ये आगे एग्रीकल्चर इनकम टैक्स आएगा कि नहीं आएगा. From my perspective, you have to walk before you start running. तो 75 साल की हिस्ट्री में ये नहीं हुआ. So I think अगर ये structural reform नहीं है तो मुझे नहीं पता और structural reform आप किसको कह सकते हैं. Obviously through the National Tax Council. Thank you. The National Tax Council, we will start moving in the right direction in terms of making sure, which I chair as the federal minister, the provincial finance ministers are there, where we will start monitoring in terms of the execution of this as we go forward. इससे भी ज़्यादा जो structural चीज़ हुई है, and there I'm very grateful to the cabinet, where we have taken the tax policy out of FBR and put it under the finance ministry, ताकि जो policy है going forward, of course it will take us a little bit of time in terms of operationalizing this, but at least at the policy level we start getting into economic value considerations rather than making the math work. So FBR going forward is just going to be focused on collection in terms of income tax and sales tax and FED and custom duty, etc. But policy is going to be led through economic value. और उसमें हम एक advisory board भी बनाएंगे. आप में से कुछ दोस्तों को और all our friends from the industry उनको request करेंगे कि हमारी advisory board पे आएं, हमें उसमें advise करें in terms of how we take this forward. It'll take a few months before it gets operationalized, but that's where we are headed, and therefore we sort of this year we have preponed the whole budgeting discussion. ताकि ये जनवरी में हमने ये बजट का प्रोसेस किक ऑफ किया, because ये कोई ऐसी बात नहीं है, whether it's the banking industry or any other sector, which they are going to come and tell us in April, May, which they won't know or they can't convey at this point in time. We also know where we are. We are in a medium-term fund program, so we know what our constraints are and what we can do or not do and what we can phase in or phase out. तो इसलिए ताकि ये by the time we get to the budget, हम थोड़ा सा इसको suspense को कम करें कि ये क्या आने वाला है budget में. So that's where I'm also reaching out to various forums, chambers. I was at Sialkot, I was in Faisalabad over the weekend, I'll be in Peshawar next week, and of course with Pakistan Business Council, with Overseas Chamber, we are taking that forward. Energy side, again, Minister Lagari is taking that forward. जो सारी discussion है in terms of tariff reduction, and I do take your points into consideration in terms of how things need to be negotiated or renegotiated. But the fact that discos or most of the discos now have private sector sort of in majority at these boards, the chairpersons are from the private sector. 3 discos have already been assigned to the privatization. The sell-side advisor has been appointed. इसी तरह जो SOEs की reform है, privatization, we have had a bit of a hiccup, but inshallah PIA is being relaunched, and as I said, the outsourcing of the airports, the discos, we will continue to move forward in that direction. And the last thing I just want to mention is public finance, because I do think that's a very important component of this overall homegrown economic agenda. और उसमें ज़फ़र मसूद साहब मैं आपका बहुत शुक्रिया अदा करना चाहता हूँ, because you helped us in a very big way in your capacity and with your team in terms of working on the homegrown economic agenda, which the Prime Minister announced on December 31 under Uran Pakistan. So we greatly value your contribution, Zafar Saab, in that space. But public finance may, in terms of reducing the footprint of the federal government, reducing that expenditure, I do think is a very important component of what we are trying to do. और इसमें मैं तकरीबन हर फोरम में मैंने आपके पाकिस्तान बिजनेस काउंसिल के फोरम में ये बात की थी कि the study that Dr. Isha did during the PTI administration was a very, very good study, and dealing with 43 ministries and 400 attached departments. But what I've discussed with him is is not the what and the why part of it, but the how part of it. So what we are doing at this point in time is that we are taking it piecemeal. We are taking 5 ministries, we deliberate on that in the right sizing committee, which I chair. We take those deliberations, recommendations into the cabinet, get those ratified back into the implementation committee. उसमें कई ministries जो है हमने कहा है कि उनको merge कर दें, एक ministry को abolish कर दिया है, कुछ attached departments हैं, which are going to go away. Of course, there's a huge pushback because every single ministry came in saying everything that they're doing is strategic and essential. And of course, that is not the case, because if that were the case, we would not be in the situation that we are in at this point in time in the country. So we are doing what we are doing. So we are almost sort of halfway through in this, and we will monitor the implementation of it, because ultimately it has to result in the upside on the expenditure side and in the budget. And then, of course, the pension reforms. तो उसमें जो हमने ये कहा है कि the government colleagues who are joining or who have joined as of July 1 are now going to be on defined contribution. It has never happened before. It's never happened before, because what this has allowed us to do is to stop the bleeding. The stock is still there, and we still need to manage the stock. But flow में जो bleeding थी, उसको हमने रोका है as we go forward. Now, two other things I just want to mention before I say where do we go from here and coming to the banking industry. Two existential issues for Pakistan, and I've said that, I will continue to say that in all forums. One is population, the other is climate. So while we had talked about the structural reforms and the homegrown economic agenda, and of course the 5 Ps sort of covers that under Uran Pakistan, but unless we deal with these two existential issues, the sustainable and inclusive growth for Pakistan is going to remain elusive. We are still growing at the rate that we are growing, और उसके basis पे जो दो बड़े issues हैं from the population perspective, child stunting. Any country which has children under the age of 5, unfortunately 40% of them suffering from child stunting, and then learning poverty, which is essentially girls out of school. Then in terms of climate, both in terms of resiliency and decarbonization. And that's where we are very grateful to the 10-year country partnership framework that we have just signed with the World Bank, because इस दफ़ा हमने 6 issues पे focus किया है in this 10-year partnership framework. 4 of those are dealing with population and climate. 2 dealing with fiscal and the private investment side. So I think it's important that we work with our partners, both in terms of financing, but more importantly, capacity building. Now, where do we go from here? And when you get into a bit of a stabilization phase, and we have seen it over the last few decades, and also in the last few years, there's almost a sugar rush. Let's put the foot on the pedal and let's go for it. And we were with Prime Minister's Economic Advisory Council. Saqib, aap wahan the, maujood the us council mein as well. And I think it's not only the academics, but also the business community, which is cautioning the government in terms of making sure that this time around, when we go for growth, it's sustainable. Because these boom and bust cycles we have seen forever, and it's very easy to get into that trap again and say, let's go for it. And that's where we get into trouble. The imports go haywire. We run out of dollars. We get into a balance of payment problem, and we go running back to the lender of the last resort. So ये जो movie है हम ये पहले देख चुके हैं, stabilization वाली. So while I'm very grateful for all the support that we have received, but this time around this opportunity has to be used very judiciously कि हम इसको आगे कैसे लेके चलें. उसमें जो main चीज़ है in terms of road back to the market, where we say this is going to be the last IMF program, there it has to be export-led growth. We have to fundamentally change the DNA of the economy. And the export-led growth is not only through textiles. It's a fantastic sector. We will continue to help, support, assist that sector. वहाँ value addition भी हो रही है. जो home textiles is doing extremely well, etc. And should it move from 18 to 24 billion dollars? Absolutely, and we will be there to help and support that. इसी तरह IT and IT services में जो growth आई है, I think is a very welcome change. Hopefully, the agriculture part will also continue as we move forward in the growth trajectory. But that is not going to be the answer. Every single sector in this country has to contribute to export. Period. Period. And the spectrum can be from 1% to 100%. Because जो मैंने पहले बात की है और उसी को मैं लिंक कर रहा हूँ जो emerging markets finance ministers की जो बात है, productivity-led growth. Productivity means that we have to be internationally competitive. और उसमें हम आपकी support करेंगे, help करेंगे. The industry is there. Of course, we are on the right side of the rate cycle now. Taxation and energy are still elements where we need to support and help you as industry as we go forward. But every single sector, किसी के पास ये गुंजाइश अब ये नहीं होगी कि आप सिर्फ जो है local segments को और local society को, of course, we are 240, 250 million people and therefore it's a very large market. But every single sector has to contribute to the export equation. इसी तरह जो FDI है, and I start with the local investors, local investment आएगी तो FDI आएगी. I'm very clear about that. So again, we have to focus on those investments which lead us to exportable surplus. That's very important. And the last thing is international capital markets, so that we get back into the Committee of Nations. We have had very engaging discussions with the rating agencies. You've seen some actions from the rating agencies over the last 12 months. We just had a very constructive meeting with Fitch, who were here on ground about a week back. Or इसी तरह back in the spring meetings in DC, we'll engage with them. And our hope and desire is that we get into a single B category during this calendar year. And inshallah, if we stay the course, we have all this good opportunity that we get back into that so that we can access euro, US dollar market. But before that, we are hopeful that we can go for an inaugural Panda bond as well during this calendar year. Now, coming to the banking industry. Zafar Masood Saab, आपने जो बातें की हैं, I'm the first one to acknowledge and recognize all the contributions that the industry has been making over years, over decades. Certainly starting with COVID, or COVID made the way industry stepped up, or usme, I genuinely believe, having had the privilege of being in your position at that point in time and working very closely with the central bank, because COVID के दौरान वो जो एक famous जुमला कहा जाता है, there are decades where nothing happens and there are weeks where decades happen. So that's, from my perspective, exactly the banking industry stepped up at that point in time when the infrastructure was closed. About 40 to 50% of the branch network was closed during COVID period, and there was seamless service provided by the banking industry, and I do believe you never look back. Now, having said that, there are areas where आपने भी उसको identify किया है, and the areas where I would request help from the banking industry to stay the course and continue the journey. जो पहली बात हुई है around exports and the remittance agenda, whether it's on the PRI side or the Roshan digital account in conjunction with the central bank, I do think we have a good story to tell. But jitna ye inflow through the formal channels aata rahe, that is going to help the country and keep our current account in a sustainable form. I talked about privatization. I would encourage all the banks to actually come in and help us. You can be on the sell side, you can be on the buy side in conjunction with the foreign partners but we're very serious, and we will pay you. So I think इस पे ज़रूर इसको आगे लेकर चलें. आपने priority sectors की बात की है, SME, agriculture, finance, housing and construction. Now, a lot of banks are already doing this, especially when it comes to SME. A lot of mid-sized banks are actually playing a very important role, especially around the S part of the SME, right? And whatever you are doing in terms of moving from collateral lending into cash flow lending and using algorithmic models, etc., that's the way to go. But I would encourage other large banks to come in and help the SME sector. Please don't say कि ये नहीं हो सकता, वो नहीं हो सकता. अगर mid-sized banks आपको करके दिखा रहे हैं, इसमें आप आइए. Because देखिए, one thing that I've been very clear in the government and in the cabinet, we are not going to go back into directed lending. That's the wrong thing to do, and it does not serve anyone's purpose. So आपने जो बात की incentivization की, we will do what we have to do in terms of providing the necessary subsidy, in terms of providing first loss guarantees from Ministry of Finance. वो हम आपको ज़रूर support करेंगे. इसी तरह agriculture finance, whether it's crops, and even more importantly, what we need to do in terms of dairy and livestock. And then housing and construction. जैसे आपने ज़िक्र किया, I did meet the Honorable Chief Justice, Yahya Afridi Saab, and he was very reassuring in terms of the foreclosure laws and getting those going. उन्होंने जो मुझे नोट वापस भेजा उसमें in terms of special and specialized benches and also the training of the judiciary in the judicial academy. So it's very encouraging that he responded within a couple of days of meeting him. लेकिन हम आपको उसमें help करेंगे. इसमें देखें financing भी है ज़फ़र मसूद साहब और capacity building भी है. तो आपने ये बात दुरुस्त की है कि आप अपनी बैलेंस शीट्स को दुरुस्त करें, आप अपनी इनकम स्टेट्स को दुरुस्त करें. लेकिन आई नो रहमत हसनी साहब इधर बैठे हैं, जब इनके प्रेडिसेसर यहाँ होते थे, he did a very good job at National Bank in terms of getting to some of the trainings for the SMEs. तो आप समीडा के साथ मिल के काम करें, because ये उनका रोल है. As far as I'm concerned, मैंने तो प्राइम मिनिस्टर का कहा था कि इस समीडा को बंद करें. इन्होंने 30-40 साल से किया क्या है इस मुल्क में, अगर ये कैपेसिटी नहीं बिल्ड कर सके. But any case, the Prime Minister has taken it under his wings. But आप उनके साथ काम करें और कैपेसिटी बिल्डिंग में आप हमारी जो है हेल्प करें. The next one is digital banking and financial inclusion. I think we have come a long way. From my perspective, digital is not an end in itself. It's a means to end. It's better, it's cheaper, it's faster. And also, Atif, आप भी ये बात करते रहते हैं, war on cash, right? And whatever we need to do in terms of getting the POS machines and QR codes, और देखें ये जो अलूला में भी बड़ी बात हुई, most of these emerging markets are now on their digital transformation journey because they know कि इसमें not only financial inclusion, but now some of them are actually advanced enough to talk about AI and digital assets. I know we have our own views at this point in time in terms of regulatory regime कि अभी हम CBDCs की बात कर रहे हैं, etc. बात कर रहे हैं. But the reality is कि अगर crypto already in vogue है in the informal market and the numbers are what they are, even if they are 1/4 of what the numbers are being moved around, we need to think through and be ahead of the cycle in terms of the regulatory regime and think through कि हम ये AI और digital assets को कैसे आगे लेके चलें. Infrastructure finance, public-private partnership, again, some of the banks are already participating in that, both on the debt and equity side. I do think we need to scale it up. Green financing की बात हुई है. It's good to know that the State Bank is now going to roll out the green taxonomy. I do think we are late. We should have done it some time back. Some of the banks are actually already ahead, and they're already working on green taxonomy because the green taxonomy आएगी तो पता चलेगा which projects can be designed, structured, monitored, and reported on international standards. So, मैं 2-3 दिन पहले Senator Shahri Rahman asked me to join the Senate committee on climate change, and I said the same thing there. कि ये financing तो जो avenues हैं वो हमारे पास multilateral से भी हैं. Some of the VC funds are coming in and all of that, but ultimately it's coming up with bankable, investable projects. And that's where I do think the banks can play a very important role. इसी तरह जो transition to Islamic banking, आपने जैसे जिक्र किया, the industry is moving in that direction, but take advantage of the international experts that you have in this conference. Tansari is here. I had the pleasure and privilege of listening to him a few months back or a year back. My good friend and ex-colleague Rafe Hanif, he's here from Malaysia. मेरी इकबाल खान साहब से मुलाकात नहीं हुई. I look forward to seeing him during the break. It's all about learning from others. ये जो हमारा mantra है कि हमें सब कुछ पता है इस मुल्क में, इसको थोड़ा सा एक साइड पे अगले 2 दिनों के लिए इसको साइड पे रख दे. हमें बहुत कुछ पता है. But let's take advantage of learning from others. Governance and compliance. The banking industry was off the gates in a very big way in terms of KYC, AML, sanctions, transaction monitoring, in terms of getting us on the right side of FATF. लेकिन ये जो मैंने देखा है आपके प्रोग्राम में कि आप eKYC को लॉन्च करने जा रहे हैं और उसकी फॉर्मल लॉन्च है, आपको बहुत मुबारक हो. I think that's going to go a long way in terms of client service, but also using the blockchain technology that you're using to get things moving in the right direction. And the last thing I would mention is that banking industry and capital markets have to go hand in hand, because ये जो आप पे सारा बोझ पड़ता है, whether it's on the government side, on the private sector side, capital markets को actually gone back. It was back in 99, 2000 that we were talking about WABDA mini retail bonds, mini bonds was what. So some of the other, we've gone in the wrong direction. So the way I look at it, you and capital markets are joined at the hips, and whatever you can do in terms of, sukuk structure, REITs, etc. And now the banks have been allowed in terms of equity capital markets. I never understood how can banks not be allowed. I mean, most of in the global world, ECM is one of the fantastic way that you leverage your balance sheet. So वो अब आपको मिल गया है. So not only at the GEM board, but in terms of the mainstream advisory and structuring of IPOs, and it's good to see the new IPOs which are coming up in 24 and 25. With that, ladies and gentlemen, I again want to thank you to PBA for the kind invitation. I wish you all the very best for the next 2 days, and we will support the banking industry, Zafar Masood Saab, any way we can. Thank you very much again. Thank you.
Thank you to the Honorable Finance Minister. We'd like to present him with a token of our appreciation and a small memento. For this, may I request the Chairman, Pakistan Banking Summit 2025, Mr. Atif Bajwa, to please join us up on stage. May I also request the Chairman of PBA, Mr. Zafar Masood, and the CEO and Secretary General of PBA, Mr. Munir Kamal, to please join us up on stage. The Chairman, Pakistan Banking Summit 2025, Mr. Atif Bajwa, presenting to our Honorable Federal Minister for Finance and Revenue for Pakistan, Senator Mohammad Aurangzeb. May I at this occasion also request the Pakistan Banking Summit Steering Committee to please join us up on stage for a group photograph. May we request Mr. Irfan Siddiqui from Mizan Bank, Mr. Nasir Salim from HBL, Mr. Yusuf Hussain from Faisal Bank, Mr. Ahmed Bozai from Citibank, Mr. Basir Shamsi from JS Bank, Mr. Rehan Sheikh from Standard Chartered Bank, Mr. Munir Kamal is of course with us. Ladies and gentlemen, the Steering Committee of the Pakistan Banks Association. gentlemen, we'd like to follow with another group photograph with the Executive Committee. This is the steering committee of the summit, the Pakistan Banking Summit, ladies and gentlemen. A big thank you to the Pakistan Banking Summit Steering Committee. Thank you for your presence, for your participation. May I request the common members of the Executive Committee of the Pakistan Banks Association to please stay with us, and also the other members of the Executive Committee of the Pakistan Banks Association to please join us up on stage. Ladies and gentlemen, the Executive Committee of PBA, for a group photograph now. This, of course, includes Mr. Kamran Zaidi, Mr. Amir Masood Khan, Mr. Noman Ansari, Mr. Noman Chughtai, Javed Iqbal Sahab, Muhtashim Ahmed Ashai Sahab. Ladies and gentlemen, the Honorable Governor of the State Bank of Pakistan, Mr. Jameel Khan Sahab, joining us. A big thank you and congratulations to the Pakistan Bank Summit and the Executive Committee for the inaugural Pakistan Banking Summit 2025. Ladies and gentlemen, with this, the summit is officially open. We are going to break for a short tea break. We'll reconvene for our first session in just about 20 minutes from now. Thank you once again for your presence and participation. We'll see you in about 20 minutes. everyone. Um, Once again, ladies and gentlemen, may I request you to kindly take your seats. We are now about to begin our program. We shall resume with the first session. May I request you to be seated. Welcome back, ladies and gentlemen. We are now resuming our first session of the Banking Summit. Ladies and gentlemen, this is Pakistan Banking Summit 2025. We are resuming our first session. May I request all our distinguished participants to please be seated. I'm now about to invite our first speaker in. So our first session, ladies and gentlemen, is titled as The Interconnected World, the Global Economy and its Impact on Pakistan. If we look around it, and just a couple of days back, I was at the Pakistan Retail Conference, which was about, reimagining retail. And it talked about how important a strategic position do we have. I think there are chapters written on it. This is something which is drilled into our memory and our understanding since the very beginning. Once we are in schools, we are told about how strategic Pakistan's location is. But even if we speak as a marketplace, economically speaking, if you take a 1-hour radius around the country, which is by flight, you will see that 80% of the world's population is located in this part of the world. And of course, our connectivity, how we are impacted by the trends and the ripples and the insights of the world. I think this is an interest area for everyone. More importantly, our international speakers are going to shed light on how they have been able to convert this potential into a real opportunity, have been able to realize it. I think we have a lot to learn from our next speaker. I must apprise you of the proceedings of the session as well. We have two worthy speakers in this who will each be making a presentation, followed by an interactive discussion and conversation with them. Our moderator of the day will also be inviting questions from the audience. Our only request will be to make them into crisp, sharp questions and not mini speeches masquerading as questions. So ladies and gentlemen, without any further ado, let me now take this opportunity to invite our first speaker. He, of course, is the chairman of the Malaysia International Islamic Financial Center, the MIFC Leadership Council. He is the chairman of this organization. Also, he has served as the managing director of the Khazana National Jihad, the managing USD 40B AUM, and as the chairman of the Lembaga Tabung Haji Malaysia, overseeing the USD 20 billion AUM. He currently serves as the World Economic Forum's Global Future Council on Investing and the steering committee of the Global Ethical Finance Initiative and the Investment Advisory Council of Saudi Arabia. Ladies and gentlemen, please put your hands together to welcome our first speaker, who will be speaking on the subject of the interconnected world, global economy, and the impact on Pakistan, Tan Sri Azman Mukhtar.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala barakatuh, and a very good morning uh, to the Master of Ceremony. Thank you for the kind introduction. To the PBA, thank you so much for your kind invitation. I brought a few books I wanted to show shortly. But I'm also honored, obviously, to be here at this very conference from a very dear country to us in Malaysia, that is Pakistan. And I'm honored to come after listening to Finance Minister Aurangzeb and to meet the governor and many of your distinguished, or all of your distinguished leadership and more from the Banking Association. Taking the cue from the Finance Minister, I also had a scripted speech actually, which shall be made available, but I decided to go off the cuff and sketch because I think it's more interesting, certainly a more spontaneous reflection on the topic that's been given, which is on geopolitics, which, right up front, a caveat, I am not a geopolitical expert. Perhaps I can do a little bit more on the economic realities. And then its impact on Pakistan. I do not obviously claim to know enough about your beautiful country, but I will try, and perhaps something I can speak with a little bit of authority is how Malaysia has been navigating those trends, and indeed the latest round of disruptions even that we are seeing that was outlined by the minister. I have three key points actually, which I thought I'll throw it up front, and then I'll try to drill down, right? The first, I noted the theme of this summit is about the interconnected world. I guess this was supposed to have been done late last year, but things are changing. There's a case to be made that if not quite disconnected, the world is certainly disconnecting and perhaps already somewhat fragmented to begin with. I note, coming to Pakistan, history is not my subject, but it is an area of pleasure, which I read a little bit about this country. Obviously, your nation and the Indus River and its tributaries has seen long, 7,000-8,000 years, maybe more, of continuous civilization. You've seen it all. And the great game that was the 100 years ago was being played out in this part of the world. So I think you have quite a bit of experience that Malaysia and others will need to learn on how to navigate the return of great power rivalry. So I'll give my own take, the fragmentation and disconnection, or what I call the shifting sense of geopolitics and geoeconomics. Right up front, when sense shift around, the contours change. And truly, while it may sound like a cliche, within those changes, actually, there are plenty of opportunities, we think. Of course, a lot of challenges. As I reflect back on a career in the area of finance and development, I think for us in Malaysia, the 1998 Asian financial crisis was extremely disruptive, was extremely concerning, was also, as it turns out, extremely opportunistic, actually. A lot of structural reforms were put in place, a lot of rehashing of things, but trying to do it while exacting stability at the same time is really the challenge. And I'm glad Minister Aurangzeb, His Excellency, I think actually I took that as one of the gists of how the challenge of concurrently doing financial stability and economic stability while not letting off on structural reforms. So the first point is really, those shifting sands on the connectedness, even though it's disconnecting, multilateralism appears to be in a retreat, but there is always, in my little experience, there is always some countervailing forces. Indeed, as you know, in the Holy Quran, Allah Ta'ala says not once, but twice, with hardship, indeed comes ease. Not once, but twice. And we remind ourselves to that guidance. Second is, the more I stay in this world, on this earth, the more I am convinced, as also the finance minister mentioned, there's so many imponderables on stuff that we cannot control. Why don't we just, of course we need to be aware, generally stuff that we don't control, we have to receive whatever's out there. However, there are many things that are within our control. So the ability to develop inner strength, resilience, economic sovereignty is the key to any successful country. Malaysia had to go through many of this, and I'll try to share how we handled coming out of poverty, how we handled development, how we handled the Asian crisis, how we handled in a region where there are competing forces. Right up front to state, today, Alhamdulillah, Malaysia, and the numbers are real. We just announced last year record investments is the highest in history, actually. And it's not in spite of the great power rivalry that is returning. Supply chains are reconfiguring at a very rapid pace, and we are getting investments on both, whether it's from North Asia and China, or indeed from the United States and Europe at the same time. So the ability to obviously remain neutral, but yet progressive, productivity-led growth, I think is a big part of the story. And finally, I wanted to end on landing it. I'm here captioned as chairing the Islamic finance work in Malaysia. We just completed a study, one of the books I brought, of the last 60 years of Islamic finance development in Malaysia. But, you know, we were, how shall I say, we were quite, not to say quite reflective, in the sense that, Alhamdulillah, we've achieved quite a lot, we think. However, what got us here is not enough to get us where we want to go. And we'll talk about that to share our experience and our approach, bearing in mind that I know Pakistan has set wonderful and ambitious targets on the Sharia compliant side of financing and banking. And I'll make the argument that Islamic finance is not just in banking. Indeed, there are three, the spectrum of capital you can say is actually three parts. Credit is one of them. Equity of risk sharing and reward sharing is even more so. And not to forget philanthropic capital, the charitable side, zakat and waqaf in particular, sadaqah and so on and so forth. And indeed, in Pakistan and other Muslim countries, this is actually very much a rich part of the whole ecosystem and how we could help to unlock that together. So, with that background, I also think it's also acknowledge while I'm standing on stage before all of you here in Karachi, I think many of my own intellectual references over the years are from Pakistan or India of Pakistani origin. Take, for example, of course, Maulana Iqbal, which if I be able to end later, I wanted to read something from Maulana Iqbal, a book that I found yesterday while going to the Frere Hall. There's a nice little book market in front. So, of course, the wisdom of Iqbal is a first edition, which I managed to buy for 250 rupees, which I think is a metaphor that you have beautiful assets here that is grossly undervalued. 250 rupees when I, converted it. I thought the wisdom, obviously, but certainly Maulana Iqbal has been an inspiration, of course, not just to Pakistan, but indeed the Muslim world and beyond. Later, I remember reading Muhammad Asad, Road to Mecca, and I was amazed that this Jewish gentleman whose ancestors were very orthodox rabbis actually ended up as your representative to the United Nations, right? In the newly formed country. Super inspiring. Some of my gurus, some I met, some I've not, from Khurshid Ahmad, etc., of course, either Pakistani or Pakistani origin, and so on. And looking at Professor Kamal Munir, my friend from Cambridge, one of my alma maters, I note that our university, Prof, is quite synonymous with the formation of Pakistan itself. And I recall me and my wife, when we, with a very young family, 25 years ago, we stayed in a part of Cambridge, behind Midsummer's Common, behind the boathouses. And the road we stayed on was actually Montague Road, which I note that Al-Mahdi Chaudhry Rahmat Ali, I believe credited with the naming of the Pakistan itself, actually lived at number 16 Montague Road. We were somewhere about, I cannot remember, I think it was about 32 or 34 was our house. So I remember this distinctly. So in other words, my own journey has intercrossed with Pakistan itself. In that regard, let's go drill down a little bit into the first point about the interconnected world and what this means, right? Fragmentation, connection. But yet, when we heard Finance Minister Aurangzeb in the gathering of emerging market with the World Bank, I think there's always countervailing forces. So one logical, this will close the ranks of emerging markets, which are already about a third of global GDP anyway, and growing. And they're certainly growing faster, right? Of course, not evenly. And I think Pakistan, with all your current and existing links into the Gulf, as was mentioned, into Central Asia, into Turkey, and indeed into China and North Asia, I think you, and Southeast Asia, I think you are very well positioned, actually. That's, of course, at the macro level. Some of the planets may be aligning, the stars need to align too. There's a lot of sectoral level that we heard about. Secondly, if we look at the, let's take a look at, for example, the developments that we saw on artificial intelligence. Yes, this is one of the mega trends of our times, and the impact that this is already having. Of course, the world woke up to news of what some, I think Mark Andreessen, or rather Andreessen, the big venture capital from Silicon Valley, did a Sputnik moment for the world. Of course, the reference to when the Russians first launched into space ahead of the American space program. Of course, he's looking at this perhaps from an American point of view, that recaptured the space race. But DeepSeek is that this kind of innovation can come from outside the United States, outside the so-called developed world. It can come from anywhere, in theory. Of course, China, and I happen to know at least the university is in Huangzhou. I think one of our major investments, alhamdulillah, was Alibaba. Xinjiang University is where those programmers came from. There's many more from where they came from. I believe one of the inherent strengths of Pakistan is your human capital, whether they are in Pakistan or they're outside Pakistan. And to me, this is a very significant and inspiring moment, because the technology stacks that countries will need to do and build for themselves, I think got to be done quite cleverly. I think it's difficult to do it from scratch alone. I think the ability to collaborate and move, and you have wide networks outside Pakistan, some of them are in this room today, and certainly for us in Southeast Asia, we see that we are approaching this from a standpoint of collaboration, right? Then if you take the issues around the philosophy behind the role of business, for example, as you know, there was a time when, perhaps 20 years ago, the prevailing notion of business is the function of business is business and nothing else, right? Shareholder value movement, for example, many attribute it to Dr. Friedman, Milton Friedman. To be fair to Milton Friedman, he wrote much more than that. But the caricature was certainly Friedman-esque. It's basically that. Then we had the big global financial crisis of Lehman Brothers in 2008, 2009, 2010, a lot of navel gazing. And significantly, a few years after that, the Business Roundtable of the United States, which is a very significant organization, declared for the first time that the function of business is not just to serve shareholders, but indeed to look at the whole stakeholder economy. This is a really big move and change, and hence the ESG movement, as you know, took off. With that, the ESG looked at issues around not just the bottom line, but also, of course, into what they call purpose. Within that, how to address both the climate crisis as well as the growing and widening inequality crisis the world was facing. All great, eh? So things like net zero, DEI. So in my work on Islamic finance, sometimes we say, first we had the MDG, then we had the SDG, and then we had the ESG, and then unfortunately there was too much MSG. You know what is MSG? This monosodium, I don't know what is the G, but anyway. But certainly from Islamic finance standpoint, and I'll come to that in a while, we also say, as you know, one of the forbidden things in how we structure things in Islamic finance is what they call gharar, which means uncertainty. There must be transparency where the counterparties are clear, beneficial owners are clear, which I must say my industry, finance, and your industry, over the years, they put layers and layers that there's a lot of lack of transparency, uncertainty, even inherent conflicts within many financial structures, which is forbidden under Islamic finance. So we say when you got too much MSG, including the greenwashing part, when you remove the G, what do you get? MS. What is MS? From Islamic finance, this is Maqasid al-Sharia. This is what we mean, okay? And we'll get to that in a while. So that's the backdrop. In short, the shifting sense just means shifting contours. There will be high points, low points, and there will be opportunities. The point about building inner strength and economic sovereignty, in Professor Kamal, you'll be pleased to know I did carry one or two things back from Cambridge, because I actually entered Cambridge as a rather elderly person to do my master's. Because what brought me there was really having gone through the Asian financial crisis of 98, 99. I was head of research for Solomon, so our moderators from the City Group. I said, oh my goodness, there's much more than just finance. That we need to understand economics, we need to understand society, and this is the interconnected nature of things. So luckily, in development economics in Cambridge, one of our key takeaways was you must build strength through what is called, an author has written about embedded autonomy. I love this phrase. It sounds very academic, but the word autonomy itself has two meanings, actually. One, some degree of independence. Of course, no one is fully independent in a globalized, connected world, but you can, if you put your mind to it. Second, the word autonomy also means strength and the ability to do things. Embedded means actually how to be inclusive, more or less. I work with Dr. Hajun Cheng. I think Hajun has since written, in fact, I'm still a fellow he has moved from Cambridge to SOAS at his center in SOAS. So Malaysia, our story, for what is well, of course, I caveat by saying every country will have its own set of circumstances, and some of this may not be, what do you call it, replicable elsewhere. So but with that caveat, to just share our story, me and my siblings are actually the first generation who went to university. This is quite normal for Malaysia because my late father, in the 40s, a bright guy, but never had a chance. Because poverty at the point of independence in 1957, 10 years after Pakistan, was something like 70%. And for Muslims, was actually even higher. Today, this number is nominal, about 1%, depending, and of course, but we still have issues around relative and urban poverty. In fact, as someone pointed out, if there is an Olympic sport for poverty eradication, Malaysia will be on the podium. This over the last 50, 60 years. Alhamdulillah. Again, as you know, poverty measures can vary a little bit, but by and large, we have other challenges around inequality, urban poverty, relative poverty, naturally. How did we do that? I think we were a country that was not supposed to succeed. In fact, we were a country that was supposed to explode or even implode. Part of the colonial legacy, of course that's quite some time ago, we should stop blaming our colonial masters, was also the racial mix actually made it a challenge for us. This is our circumstance. So Malay Muslims are about 60%, Malaysian Chinese are about 30%, Malaysian Indians and others about 10%. Alhamdulillah, we've been able to do it to some social engineering, some affirmative action. Yes, there are abuses in this system, but by and large, upward mobility is a key part of that equation. So not just poverty eradication. So people like myself and many others from normal families were able to rise. There were institutions along the way. Second, institutions. And I'm glad to hear about structural reforms. Of course, the field that I am in, which is economic institutions, thankfully our central bank, our national oil corporation, Petronas. As you know, many countries that have a lot of oil and gas resources, this can be a fount of mismanagement, corruption, and thankfully our Petronas has done a sterling job to where it is now. And in fact, one of the reflections is that thank God we got oil, but thank God we don't have that much oil. it makes some difference. Okay, then we talk about part of the upward mobility was investment in institutions of education, in women empowerment, women going to schools and employment. I think this is a fairly high percentage. Of course, many women choose to do important things that are not measured by GDP as well, right? Then, if you look at what we did in the area of part of the other institutions are around the judiciary, very important. Frankly, up and down, there are episodes. And corruption, by and large, as you know, later I'll talk a little bit about my experience at building Khazanah National, our sovereign fund. I ran it for 14 years, which was the longest, before or since. But at the same time, as you know, a moment of great shame for our country is the 1MDB scandal. This can also happen. We're trying to deal with it. The courts are ongoing on this and the structural reform. Just like the Asian crisis resulted in a whole wave of reforms on risk management, on governance, standards and practice, and certainly in the banking system, there was a big consolidation of banks from 56 to 9. And along with this was actually concurrently the development of Islamic finance. So that journey in Malaysia to try to achieve that embedded autonomy was very much one of building strength from inside through a lot of pragmatism, for example. So for example, take Islamic finance. We had a choice to go down the asset management route or the banking route. We chose both with an emphasis on the banking system because the banking system was bigger at that time. And we chose to go parallel to both conventional and Islamic finance. Today, the numbers are that our total banking system, about 47% is already Sharia compliant. This number is probably going to cross in the next year or two because it's growing faster. Our capital markets are about 2/3 Sharia compliant. Our takaful market is a bit lower, partly ownership, etc., but it's about 24%. In other words, then we've built a whole ecosystem around that from education, from standards bodies, and so on and so forth. Sure, there are some differences between what we see as Islamic finance with other parts of the world, the issue of tawarruk, for example, but we've taken a very pragmatic approach, gradual approach. I'll talk a little bit in a while about the future and what we have just reviewed and written. So the second point about building inner resilience, economic sovereignty, the journey was one of pragmatism, was one that was tried to anchor on really nation building and institutional reforms and how to be inclusive and open it up to the whole country to get upward mobility of its people, and that's basically what happened. So finally, going forward, for me, coming from outside, it's great. You set up stall with a very a large number to go from 24% Islamic Sharia compliant to 100% within the next 3 to 4 years. Very ambitious, but I like big ambitious goals. I presume that the State Bank of Pakistan and the banking industry are doing more micro targets of how to do this and to do it in parallel fashion. The foreign banks, for example, was highlighted. How do you convert, for example? So to me, numbers are one thing, quality is another. So for Malaysia, we've taken a pragmatic route, as I said. The report that I have available, some copies here, but it's also online, and if you're interested, my colleagues, we will get copies to you. We concluded that the first 60 years for Malaysia on this journey, we take 60 years. 1963 was the formation of Lembaga Tabung Haji, which I had the privilege of chairing. This is the Pilgrims Fund. There's about $20 billion AUM today, 9 million members. That's 1 out of every 2 Muslims in Malaysia, baby or elderly people. Most people are registered, or at least a lot of people are registered. But we said, fine, we did all this, but we now declare we want to move not just Sharia compliant, we need to go into Sharia based or Sharia impact, or in other words, from halal to halal and tayyib. So what is tayyib? Tayyib leans back on the principles of the Maqasid al-Sharia. It leans back on our central bank has got very detailed guidelines on what we call value-based intermediation. We also note that Islamic finance over the years, as it is stated, has moved that there's a lot of emphasis on legal form, on structures, or even naming them, but which many complain are not that much different from conventional finance. We did not, we stated that now it needs to move to also economic substance that is more detailed, right? And to do that, I think we need to go back to the origin of Islamic finance that came out 50, 60 years ago. And many of those pioneers were in the realm of what I think can be called as Islamic economics, where to understand that the field of economics ultimately look at the production function, the distribution function, but also the regulation function, and the function of how to bring public goods and private property rights into a place that ultimately promotes such that finance supports the real economy, and the real economy in turn supports and advances a better and progressive social justice within society. These are the pristine aims of Islamic economics, and many of the pioneers, as I mentioned, from the likes of Omar Chapra and Khurshid Ahmad, Najatullah Siddiqui, are either Pakistani or of Pakistani origin. There's a whole wealth of information. So my own Prime Minister, Datuk Sri Anwar Ibrahim, actually he pushed for this. He said, please make sure Islamic finance next version goes back to these original objectives. And in this regard, I hope to work closely with your thinkers and your institutions here. Second is also to also highlight that Islamic finance, as I mentioned, generally people seem to think it's about the credit markets in the past, banking, sukuk, for example, there's still credit relationships. Forgetting that equity, you can make the case that our Holy Prophet ﷺ himself, before his prophethood, actually did Fund 1, Fund 2, Fund 3, Fund 4, those caravans to Shams, to Syria, where our Holy Prophet was technically the GP, the general partner, and Khadijah alayhi salam was the LP, remember? And he, of course, he is the best in everything that he does. And so it's very much the issues of private equity, venture capital. This kind of capital formation is something I don't understand enough, but I'm sure part of Pakistan's restructuring and revival will rest on this, such that those with the capital needs to put it not just through the banking system, but through the equity markets. And finally, on zakat and waqaf is also another area. So in closing, ladies and gentlemen, I think there are many opportunities. There are a lot of challenges, I have no doubt. And in that regard, I take note that I think you have a long and beautiful history. You have a wealth of things running in your favor, no least the demographics, a young population, agriculture, mining, the ability to have alliances, your geographic positioning. You have many friends, actually, around the world, and I hope Malaysia is counted as in that category, and we look forward to do more with you in Pakistan and indeed within the Muslim world. So if you allow me, let me end on, this will be a career highlight, if I may, to read Iqbal in Karachi from my very good purchase yesterday. The book is a first edition entitled, it's a poem, The Mysteries of Selflessness. So Maulana Iqbal talked about the bond between the individual and community, and I guess the banking system is an intermediary. The link that binds the individual to the society, a mercy is. His truest self in the community alone achieves fulfillment. Wherefore, be so far as in thee lies in close rapport with thy society, and luster bring to the wide intercourse of free-born men and women, I'm sure. Keep for thy talisman these words he spoke, that was the best of mortals. Satan holds his furthest distance where men congregate, the individual a mirror holds to the community and they to him. So ladies and gentlemen, Iqbal goes on to say, he is a jewel threaded on their cord, a star that in their constellations shine. He wins respect as being one of them, and the society is organized. And by comprising many such as he, when in the congregation he is not. This is like a drop which seeking to expand becomes an ocean. It is strong and rich, in ancient ways, a mirror to the east, as to the future and the link between what is to come and what has gone before, so that its moments are as infinite as its eternity. The joy of growth swells in his heart from the community. So ladies and gentlemen, thank you very much. I wish you well.
Thank you, Tansiri, Asman Sahab, because the way we look at all these realities, we live in a world where the transfer of power is happening quite rapidly. The world as we know is changing and transforming before us. So either we take in our hands to write our fiscal destiny, our economic prosperity, or let the tide shape it for us. In the latter case, we of course will be marred in uncertainty. A lot may be arguing that uncertainty seems to be the order of the day. It is the new certainty. But how do we navigate that? That's exactly the subject our next speaker will be taking up. Ladies and gentlemen, the next presentation is titled as Navigating Global World Order and the International Economic Paradigm Shifts. And there are many. Ladies and gentlemen, our next speaker is the Global Head Macro and Strategic Asset Allocation with the Fidelity International, overseeing a substantial 5 trillion in assets under management. Under a distinguished career spanning various facets of global macro and finance, he holds a PhD from the Cambridge University and has garnered an expertise in global macroeconomics, particularly in the intricate dynamics of emerging markets. Ladies and gentlemen, please put your hands together to welcome Mr. Salman Ahmed, the Global Head Macro and Strategic Asset Allocation with Fidelity International.
Thank you very much. Firstly, it was lovely to hear Iqbal in Karachi, so thank you for that. So this is my 15th country since the start of the year where I've been discussing global macro and asset allocation trends and obviously affecting world order shifts. And I was actually the most nervous today compared to any other country I've been, and I have to do another 15, to be honest, in the next 2 months. And the reason being is that, of course, it's the times, it's the location, it's the place. And I was practicing my introduction speech, but then it seems like a lot of us are from Cambridge today. So I was discussing with my dear friend, Professor Kamal, and he said, just scrub that introduction. So I'm going to start with a new introduction. And the introduction is with a joke, actually. And this is with Simpsons. I'm sure you've seen the Simpsons cartoon series. So Simpsons had a superpower, a new hero with a superpower. And that new hero with a superpower was called Mr. Hindsight. And Mr. Hindsight was excellent in explaining what has happened in the last 20 years. And he was articulate, looked at all the parameters and told you, this is exactly what is happening. And everybody loved him. Then came Mr. Foresight, trying to tell exactly, what are the parameters, what are uncertainties, what are the how do we navigate that? And unfortunately, Mr. Foresight was locked up because he was not in sync with the times. So I am wearing a Pakistan pin. So after this presentation, I hope I'm not locked up. So let me start. I think whatever we know about economics, about global finance, capital flows, trade, I think we should just forget about it. The world is changing, and I think it's a very overused term, but it actually, I would argue, it is not changing at all. It is actually going back to the way it was. And let me start. Let me go to the next slide. So what I call this new era is the return of the titans. Thank you. So what are the return of the titans? These are the titans which were locked up in the bottom of the ocean as economics took hold and said efficiency, competitive advantage are the driving forces of economics, capital flows, and trade. I think that is changing. The old titans are back. They are power, sovereignty, security, and control. And if you don't believe me, just look at the FT headline today, where the incoming German chancellor is saying that they want independence from the US. This is a major, major development. And the question to my mind is, who will wield this power most effectively? And now let me go through some of the key dimensions of this new era, which I call the return of the titans, are going to play out. First, the end of economic neutrality. Globalization is not inevitable anymore. So any planning exercise, any modeling exercise which relies on the assumption that globalization is inevitable is false. Or in fact, maybe a symptom of self-denial or delusion. It is no longer an unquestioned virtue, and the reason is very simple, that the voters in the developed world and the Western world do not think so. Economics is a tool of state power by major power players. US isolationism and protectionism is here to stay. And I've been spending most of my time in Europe over the last few weeks, and I've had a lot of pushback against that view, but frankly speaking, not anymore over the last couple of weeks' developments. How the Russia-Ukraine situation settles, what happens to Greenland, are going to be major forces which will shape the economic relationships between the major blocs of our era. So what am I talking about? The two major economic blocs here. Europe. Europe will need a new economic and security model. The question here are, will they turn away from free trade as well? And I will go through some of the tariff risks which are playing out, some of the details which are coming through. But one thing is clear, defense spending is going to shoot up. And according to our estimates, if the 5% of GDP target is met, you're talking about an additional euro $700 billion spending in defense per year. This is huge. China actually has been more prepared for what is happening currently than many give it credit. But China has been shifting as well. It has been shifting from a factory to a fortress. And that has major implications in the next 5 to 10 years. But with the advent of technology, AI, and I'll touch upon that, things can happen much faster than we realize. Now, the key paradigm realities I want to share with you and challenge all this globalization, free trade, competitive advantage, factors which we have been taught and we have lived through, I think are being challenged in the way whereby supply chains focused on reliability and security are far more important. Where do I buy my food from? Where do I buy my defense from is important. Not everybody is equal in this game. Capital flows will become political, and technology will be seen as a national security asset, which means countries can be cut off from AI. Countries can be cut off from innovation. Now, why is this happening? We talk and think about EM a lot, and I completely agree with you in the sense that EM has been seen as very strong growth and versus developed countries. But outside of China and some Southeastern Asian countries, including Malaysia for sure, not so much. There's only one game in town, and that is the might of the American consumer. The reason why we are having trade wars, why we are potentially having geopolitical conflicts, which are going to escalate potentially in the next weeks or months, is because the American consumer just keeps on consuming. So American consumption as a percentage of world consumption is 31.4%. Where is the EM here? Where is the rise of the emerging markets here? It's all America. In fact, Europe's share of consumption has declined massively, especially over the last 15 years. And it is paying a price for that vulnerability. China certainly has risen sharply, but China's share of consumption as a percentage of its own GDP has been falling as China has relied on investment and external sector. You cannot be an economic superpower if you are producing and running current account surpluses versus everybody else. That's not how superpowers work. And that's why you need to go back to the return of the old titans label I mentioned earlier. Now, let's map the current trade war, because I think it's going to be very important and it will shake a lot of people into reality once they are hit by punitive tariffs. Now, US trading partners' tariff differential with the US varies countries. So Turkey, India are actually highlighted as one of the countries which have very protectionist regimes, and US wants that to be rebalanced. And now we can argue whether it's the right thing or wrong thing. The liberal economic establishment is fighting against it, but frankly speaking, they have lost that argument. Now the question is to dealing with the implications of that shift we are seeing. Pakistan, interestingly, is not that high in terms of the protectionism versus other countries. But the countries you need to be worried about are that export heavily to the US. So Canada, Mexico, you can see are off the charts. And that's why they are scared because of that tariff risk, because they can be pushed into recessions by an action of your trading partner. Now, luckily, Pakistan is not that vulnerable. So, because we never played the globalization game, right? The globalization game was played by China, was played by Southeast Asia, was played by India to a certain extent in services, but Pakistan didn't play that game for multiple reasons. Now, what are the kind of tariffs we are talking about? And here we have done some scenario analysis. So the rhetoric was very strong. In fact, if the rhetoric had been followed, we would have gone into the tariff rates of 1930s in the US. Now remember, US is the biggest consumer in the world and remains so. No matter what people tell you about emerging markets, that's not true. I showed you the chart. US is the mighty consumer in the world, and they are willing to leverage it. So what we are expecting is a significant shift up in tariffs US applies on countries. We are likely to see more tariffs on China. We are very likely to see a significant trade war with Europe, which may turn into a capital war as well, which I will highlight in the worst case scenarios. Now, very short term, what we have to look at is if in the tariff definitions, the US adds VAT or GST in it or not. So currently, there is a very significant push in the US to add GST so GST meaning Pakistan has GST of 20%. Locally, US will see it as a VAT, see it as a tariff on US products. Now you can argue whether that's true or not, but that's what they are positioning themselves as. And obviously Pakistan and other countries are not the target. The target here is Europe, which has a very significant internal GST level. So in the next few weeks, it will be important to see what kind of reciprocal tariffs are put in place. And if GST and VAT are added, we are likely to see a significant outbreak of trade war, which requires and will probably see retaliation from Europe. Now, what's happening with China? So China actually has gotten a very soft treatment so far from the US with only a 10% increase in tariffs announced so far, but we think that will change. On the 1st of April, the ongoing investigations on China will be ending, and we are likely to see another phase of tariffs on China. And you can see China goods imports from US by sector as well, because China is obviously retaliating. So far, they have retaliated very narrowly and in a very contained manner, but that retaliation can also broaden out. But that said, that also produces opportunities for other countries, because tariff rates or steady state tariff rates on China are likely to be much higher than the rest of the world. And that has got to do with US-China decoupling, the great power rivalry we are going through. Another point I just want to quickly mention is US immigration. Not a lot is covered outside of US media here, but I think there are a couple of international implications. Firstly, US is cracking down on immigration very hard. The arrest rates are multiple times last year. In fact, now they are touching 1,000 a day. There are some short-term constraints on how quickly they can deport people, but we are expecting the flow of new immigration to the US to almost collapse to zero level. They have already seen numbers collapse on the southern border, but more importantly, they are cracking down on immigrants which are already economically active. So around 20%, or at least the documented numbers are around 20% of agriculture workforce is illegal in the US. I think the real numbers are likely to be higher. Similarly, for 20% in construction, around 8% in leisure and hospitality. This can be a serious inflation shock for the US. And why does it matter for the world is because it can make the Fed hawkish. And there's a serious risk the Fed will have to start hiking again in the later part of this year. And as I mentioned, this is not a cost-free exercise for the US as well, and it will be important to see how the Trump administration responds to any signs of inflation which come through. But what else matters in the long term? And I think Minister Aurangzeb Saab talked about demographics and climate change. And I would like to share some numbers just to highlight, and I think he's completely right. Pakistan's existential threats pass through these two dimensions. But let's look at the UN Central projections. So by 2040, Pakistan's population is projected to be 323 million, so the fourth largest in the world. India will be by far the largest country in terms of population, 1.6 billion. China will see a significant decline in population. And by the end of the century, we are nearing 500 million, but a significant decline continues in China. And then, of course, a decline starts to happen in India as well. Now, there are a lot of assumptions here. Even for US, the assumption is towards ongoing immigration, which is quite questionable right now. But certainly for Pakistan, managing this population growth, A, B, the health points Minister Saab mentioned, but also the skill and assets that, or the strength that population gives you cannot be underestimated, especially in a world where power and sovereignty actually matter. Now, that's the bad news. So these are modeling exercises which we used in 2020, and we published a lot of work on it. This is what is called a damage function approach. I know this is much more, this area is much more seeped into Pakistan, and there's much more awareness, especially after the floods in 2022. But these numbers we were estimating in 2020. And according to these damage functions, Pakistan, India, and Bangladesh are one of the most vulnerable countries in the world in terms of the damage to the GDP versus baselines, as a result of loss of arable land, as a loss of access to water, and so on and so forth. Now, these are not just modeling exercises. Obviously, they are risk management exercises. Of course, we have to think about mitigation and adaptation. But let's not forget that this kind of collapse in GDP in a nuclear-powered country has massive implications. In fact, when we model the implications on Europe, and we have done a lot of elaborate studies on that, the risk to Europe, for example, doesn't come from climate change's direct impact on Europe, but it comes from collapse of one of these major countries and the immigration flow or the migration flow that can trigger. That is where Europe's vulnerability starts to come into play. But it's important, of course, that this topic remains top of mind for Pakistan, even though in the developed world, especially in the US, there is a massive retrenchment going on. Now I'm going to conclude by saying that, and I'm sure there's going to be a lot of debate about this, and already this debate has started with what is happening between US and Europe and US and China. They'll probably get another big boost once we start seeing the results of the Russia-Ukraine settlement. Once the focus moves on to Greenland, and of course, let's not forget the Gaza potential plan. So all of this together Francis Fukuyama, if you remember his piece, The End of History, which he wrote in 1989, basically saying that liberal democracies are the final future of mankind. I think I'm pretty confident to say that he was wrong, because history never died, and it is coming back with vengeance. And the most important feature of that history coming back is that muscle will once again matter. So, Return of the Titans, and I asked the question, can Pakistan be one? Well, there are opportunities, and I agree with any shock to the system, that there are opportunities in an economically neutral paradigm where security and alliances matter more. It's as simple as that. There are going to be some countries which will never trust another country, no matter what economic and competitive price you give them. Technology, especially AI, is moving at a speed which we can't even fathom, I believe. But what is AI doing is that adoption costs are falling sharply. So productive services sector integration can now happen beyond English-speaking countries. So opening up your markets. I think there are a couple of more immediate observations I want to make. In my view, the freelance model is going to die very quickly in the next 2 to 3 years as AI picks up. Which means critically that we have to upgrade our skills, rethink our education programs, rethink our, what are the skills we need in our future generation. The other one is that skilled migration flow to developed world is going to collapse pretty soon as well. US population grew by 1% in the last fiscal year. 98% of that was due to immigrants. Currently, the flow of illegal immigrants to the US under the Trump administration 2.0 since 20th of Jan, because we have to obviously track this data daily, has collapsed by 99%. And you will very soon see skilled immigration completely cut off to the US, very soon followed by UK, or at least in sectors which are relevant to the UK. Of course, reform in the UK is polling higher than Labour right now, which has a very strong view on immigration. But certainly, these are interesting trends. Now, whether they are permanent or not, I think that's a good question to ask, because the demographic profiles of the West is that the population declines are quite sharp in the absence of immigration. But what I do think is what we need is scale and enterprise level operations. This is not freelance, is not going to bail Pakistan out. I mean, you can create pictures out of it and posters, but it's not going to help. The reliability of supply chain dimension, I think, is a very important dimension, which means that external sector value proposition is going to move beyond pure economics. We need to understand, what does the world need? The world needs different things now. Europe needs defense. So as I mentioned, potentially up to 700 billion euros of external, additional defense spending coming through. In fact, we see UK as a big, player in that setup. US needs China diversification, and China needs dependable allies in a world which is stretching out. I think the role of big businesses is underestimated. In exports, SMEs don't stand a chance. Capital market enablers, of course. I mean, China has done it very effectively, and states and private sector partnerships is going to be key. In fact, what China calls public and private fusion strategies. And then lastly, climate change, demographics, and turning into this titan of this new age, I think, at least to my mind, will determine our destiny, which is more likely to be a choice, I agree, rather than just the flow of the tides. I'm going to end by two uplifting notes and one cautionary tale. The first uplifting note. In 1560, under the reign of Akbar the Great, Lahore was made the capital of the Mughal Empire. So it moved from Fatehpur Sikri to Lahore. When I heard this fact, I was shocked. So Lahore, in 1560, was the most advanced city on the face of the planet. No city in Europe or Asia could compete with Lahore. It is said that every craft the human mind could think of was practiced in Lahore at that time. And the uplifting note is that we are the children of the same civilization. It was a civilization which had self-worth and dominated its time. I'm not talking about strong, I'm talking about dominant of its time. So that's the uplifting note. Now the cautionary note is that fast forward 200 years, 1757, Clive of India. Clive of India defeated Siraj-ud-Dawla with an army of 3,000. And out of those 3,000, only 900 people or 900 individuals were Europeans or white. Siraj-ud-Dawla had an army of 50,000. So an army of 3,000 defeated an army of 50,000. Why, one must ask. Three things. Technology. You don't keep pace on technology, you are done. Two, Mir Jafar. Mir Jafar turned on Siraj-ud-Dawla. Unity. Number three, preparation. Clive of India and his forces covered their gunpowder when it rained. Siraj-ud-Dawla's army didn't. Preparation matters. So that's the cautionary tale. So 200 years into 1757. And then lastly, the last uplifting point I would share before I get locked up. And this is a Chinese proverb, and I'm paraphrasing it, but I love this proverb. It says, those who are united are destined to divide. And those who are divided are destined to unite. Ladies and gentlemen, this is an uplifting note because Pakistan and Global South, luckily, is in the second camp. With that, thank you very much, and thank you for listening.
Thank you, Mr. Salman. I hope nobody gets locked up today. But we have these two cars that I first want to make an announcement for. If the car owners are here, please either make sure that the cars are removed or indicate to your drivers to do the same. This is BJ9877 and BF8328. These two cars, unfortunately, are stranded and parked in a way that is creating inconvenience. But thank you for that, Salman Saab. I'm sure that there are tons of questions that the audience has, and now we are going to move into an interactive panel discussion. This, of course, is being led by a very able moderator. I must take this opportunity to introduce and invite him. Ladies and gentlemen, our moderator for this session is the Vice Chairman, Pakistan Banks Association, the Managing Director, and City Country Officer at the Citibank Pakistan. He took over the Country Officer for Citibank NA Pakistan in January 2021 and has been associated with Citi since February 2000. Prior to his current role, he was based in UAE as the Chief Operating Officer for Citi's business across Middle East and Africa, covering 29 markets. Ladies and gentlemen, please welcome Mr. Ahmed Bozai. May I also take this opportunity for inviting our worthy speakers and panelists for this session. Please once again welcome the Chairman, Malaysia International Islamic Financial Center Leadership Council, Mr. Tansiri Azman Mukhtar, and Mr. Salman Ahmed, the Global Head, Macro and Strategic Asset Allocation, Fidelity International. Ahmed Saab, over to you. You'll have about 25 minutes, which includes our Q&A time as well. I will just do that. May we have the timer displayed on the presentation screens, please? Thank you.
Assalamu alaikum, everybody. As I was preparing for this session, for the life of me, I never thought I'd hear a presentation ending with Iqbal and starting with The Simpsons. So it's a great start and shows the power of diversity. But on a more serious note, I think we are incredibly privileged to have heard these very thought-provoking and profound presentations by global thought leaders. And I do think we should give them a round of applause for their contribution. There's a lot to unpack from this session. We've heard about tariffs, we've heard about climate change, we've talked about immigration, AI, and many other things. And it almost reminds me of an ancient Chinese proverb, which some say is apocrypha, but I'll say it anyway, which is, may you live in interesting times. And I do think, by any stretch of the imagination, we are definitely living in very interesting times nowadays. I'll start off my questions first with Dr. Salman. And you talked about mean reversion from a geopolitical perspective and going back to what things were. So if we now think about the post-World War II era, which was a bipolar world, ending in 1991 with the collapse of the Soviet Union and US triumphalism, and we fast forward that, and we find an almost exhaustion from the US in terms of, as you said, policing the world, and a retrenchment back. But it leaves our European friends in a very awkward position that they now have a so-called transatlantic partnership, which was meant to last for centuries, almost seems to be at the end of its tether in some ways. My question is that with Europe now feeling very vulnerable, isolated in some ways as well, falling behind in real terms from an economic perspective as well, do you think that the European experiment and the EU is at threat of unraveling because of the rise of the far right in Europe and these other factors that we just talked about?
Thank you, Ahmed Saab. Certainly, I think this is going to be a big challenge to the whole European project. But what is interesting is that right now, the US policy pivot, which is happening in a matter of days and hours, is turning out to be uniting countries. So we saw after the tariff announcements against Canada and Mexico, which was less shocking for Mexico, but it was very shocking for Canada, that nationalism started to take hold. So, you know, there were boycotts of US products. There was a complete switch in the the front runners of the elections because they were talking tough on the US. So I think if you look at what has happened overnight in Germany, coming back to Europe, the first statement the front-running party, which is CDU, and the incoming chancellor has made, is that they want to be independent of US. So I think it is uniting European forces right now, whilst the far right is seen as a challenge to be put away. But the numbers are rising, right? And there are some buffer systems in the European electoral, the way the electoral designs are, and the roots of those are from the World War II. Please remember that European systems, mostly electoral systems, are not first by the post. They are mostly proportional representation. And they also give, for example, in the case of Germany, advantage to the largest parties. And why am I sharing that? The far right has to do a lot better to be able to create that tipping point. So there are some buffers and shock absorbers in the Constitution to stem the ride of far right because of what happened in World War II. But I think the initial signs are that Europeans are starting to unite rather than, or at least the mainstream parties are starting to unite rather than fracture, which is a good sign from European perspective.
Thank you. Thank you, Dr. Salman. Chancellor Osman, question for you. You talked about the closing of the ranks of the emerging market countries and the potential opportunities that can come from that. President Trump has been very vocal on his views on BRICS, for example. He has not singled out BRI as an initiative as much, perhaps. But do you think that there is a risk for countries, especially in emerging markets, and especially economically fragile countries like Pakistan, that they will be asked to make a decision on which side of the divide they have to sit?
Yeah. Okay. I think, can I call that a Bushism? Because I think it was George W. who said, you're either with us or against us. But of course, updated for Mr. Trump 2.0. Maybe I'll preface, in addition to we live in interesting times, which I think that itself is disputed, right? Whether it's Chinese or indeed one of the senior American politicians, if you were to Google that, by saying that for every action, there is a reaction. Let's not forget, this is the law of physics, the law of society, the law of reciprocity, or, you know, so for every action that America or whoever else takes, there's always a reaction. So my own thoughts are that insofar as can such an isolationist American stance, including their own long-term allies, shocking as it may be, you know, what does it mean to the rest? Can you go all the way, like, in short? That's the first point. Related to that point, as you said, is there space for neutrality? I think there will be, if only for one simple reason. Supply chains around the world are so interconnected that no matter what a decree by Mr. Trump or Mr. Vance, you know, says, it's very difficult to unwind that, including American companies, by the way, in China. You know, take Mr. Musk himself. You know, China, the Chinese market is a big part of Tesla. So it's not so easy to unwind some of this beyond the rhetoric. I think, sure, you can put up tariffs, there'll be counter tariffs, etc. But eventually, that pendulum, I think, will land somewhere that people be pragmatic and they can work with. The one area where I think there is clear American dominion, which we haven't quite spoken about, is the dollar, the US dollar. And the US dollar is not a term created by some, you know, third world economists. It was the term, if you Google exceptional, exorbitant privilege, actually, not even exceptional. It refers to the ability of the reserve currency of the world to do what they do through that, right? From, what used to be unusual monetary policy, i.e. printing money. And we've seen this, and every empire, going back to the Romans and perhaps even beyond, basically has that privilege. As we all know, in some of our lifetimes at least, not quite mine, when Suez happened in 56 or thereabouts, 56. In fact, the US actually did not move in to support the Brits and the French, right, at that time. And suddenly the empire had no clothes. I think it was quite clear that this was the beginning of the decline of post-war, right? Post-World War II. But the thing about dominion and empire is that it takes a long time for the dominant position in the currency part to be removed. There must be someone else taking over. In this case, the United States took over. The Chinese, I believe, Salem, are reluctant, right, to play this role, even if they were capable, which arguably they're not. So I would say on the supply chains, I find very fascinating your Return of the Titans. As they say, there was a different version when you look at Angus Madison, an economist who goes back centuries. The rise of China and India was seen as a reversion to the historical mean, roughly as much as 20–40% of the global economy, right? And arguably and that India was actually including Pakistan, right? Present-day Pakistan. But now, if this return of isolationism, I'm not so sure, but I think, yes, there has been an overshoot of the so-called globalization, and the pushback of the far right is a reaction because this value creation was not for the many, hence the pushback all over the world. In fact, arguably even more so in the developed world. Hence, 1/3 of polities are now on the far right. But it's basically not quite revision to the mean, but the pendulum basically finds its way somewhere in the middle, and that pushes other things. And I believe that eventually this will also come to a more, I don't know how strong or how optimal the equilibrium will be, but there'll be an equilibrium on the real economy side. The financial economy side, I'm a bit more worried because of the way, funds flow and dollar. Of course, there are counter movements that we can talk about on, cryptos and CBDCs and stable coins and so on and so forth. And certainly Islamic finance and ethical finance is part of that. So for developing countries, emerging markets, including Malaysia, including Pakistan, I think there'll be new configurations. For example, if Germany says we want independence, quote unquote, economic independence, let's work with the Germans, right? Already the Scandis, for example, the Scandinavians, have always valued, this is a core principle of them, the principle of lagom, the Swedes, which means just enough, a beautiful concept, a bit like Mizan, they work with all over the world, right? So I think there will be new configurations. I'm more confident. I'm a bit more worried on the financial system itself, which I can't quite figure out where the end game is going to be with that kind of trends. Thank you.
Thank you. And picking up on that point about the dollar and the future of the dollar and the preeminence of the dollar, Dr. Salman, how do you see that in the next few years?
So I agree with what was discussed in the sense that there's no clear alternative right now as to the dominance of the dollar. China is certainly reluctant. I totally agree with you, because although people say economics is a social science, and it is, of course, but there are certain laws of economics which are as immutable as physics is. And one of them is that if you want to be reserve currency, you need to run a current account deficit, because the current account deficit is needed for other countries to hold your currency against. That's the basic, identity, basically. So China doesn't run a current account deficit, so it cannot be a reserve currency, right? So it's not that US has not weaponized the dollar. It certainly has, but there is no alternative yet. And I don't think there is an alternative on the horizon yet either. And I think the crypto and all these things are, I guess, they are more towards the fad rather than the source of it. Because the history of currency, of the reserve currency, is that it has to be backed by a military power. Somebody has to enforce the contracts. People have forgotten about it, right? That's why the return of history. People need to go and read history books and not take things for granted.
So I take it you're not a big fan of crypto.
No, I'm a big fan of blockchain and the technology, but if you're going to bet on something which moves, there are thousands of things, and please go ahead. But there are three fundamental arguments from a pure economic perspective you need to question. Firstly, is it a store of value? The volatility of, for example, Bitcoin is 50 to 60% per annum. That's very high for a store of value. Does it give you diversification? No. I can replicate the return profile of Bitcoin by buying 7x S&P. So if I hold 7x S&P, I'm replicating Bitcoin. So it's an indirect way to gain leveraged equity exposure. Number three, there's some people say, oh, it is limited supply. That is not true. You have thousands and thousands of cryptos. People are minting Trump coin, Melania coin, Dogecoin. Of course not. It's not unlimited supply. So whoever is thinking about it needs to be very, very careful that A, it doesn't open your capital account unnecessarily. B, 50 to 60% vol is not a store of value.
Fair point. Tansri Yasman, for a second assume you are Xi Jinping, Premier of China, and you are observing the US and Mr. Trump on his comments on Greenland. You are seeing what's happening in Ukraine. How would you be viewing the situation with Taiwan? Do you foresee a risk of a formal annexation, or do you think the status quo will likely to continue?
Right. Thank you. This is kind of fantasy geopolitics. I'll start with a small anecdote. Last December, actually every December, my wife and my family, 4 kids, and one of them is married, we go somewhere for 2 weeks. Last year was China. The reason being 3 of our children were educated in America, and one of them is married to an American. So I said, guys, they've never been to China except for our youngest, who did a little bit of time with the pandas in Chengdu, as a schoolgirl. So I said, let's go. It's time that you see so that you don't hear from me, but you see for yourself. I've been going to China quite a lot. When I was at Khazanah, we opened, our first foreign office was actually Beijing. I started in 2004 at Khazanah, and within about 3-4 years. And I think we caught the wave just right in 2008. China was, of course, booming, very different China. But you can't see the skies because it was polluted, etc. Now it's much changed. My conclusion so far is that its inner strength is much more sustainable at 5-6% than what it was at double, or perhaps in some years even almost treble that rate, right? Yes, there is, some say, a loss of confidence in some of them, but knowing the Chinese, they're very pragmatic. They're saving for rainy day. Many have money, but they're just more cautious. Yes, there are real estate issues here and there. Who doesn't have some issues? Personally, I'm a China bull in the sense that 5,000 years of history, not quite as long as here, but long enough. They're very strategic. I happen to, be in touch with a few of the, people thinking. Of course, I won't know everything. So how would they view? I believe they remain very strategic. They don't want conflict because it's not in their interest. Yes, we got to peel away some of the rhetorical layers. That applies to all, not just the Chinese. The issue is from America, currently we are all watching because we don't know when issues like Greenland can come up and others, right? You just don't know what's coming up the following week. But I think that even that will eventually, I think, stabilize. Earlier you asked, I didn't quite answer directly, apologies. BRICS and BRI, right? Insofar as BRI and BRIC, my own feeling is that BRI 2.0 is going to be more nuanced, I hope. No, in fact, I believe this will happen, and more private sector led in many ways. And as you know, some of the platform companies, as President Xi was cleaning up some of the corporate sector, including Alibaba, Alipay, went through the period of, basically reconfiguring themselves. But now, I believe this period is over and they're ready to go out. For example, one of the last things I did at Khazanah, we put in about $150 million US, good investment into Alipay. I had lunch with Eric Jing, the chairman. I said, Eric, he's got 1.2 billion subscribers, his platform. And with this kind of fortresses being built all over the world, he can't go here and there. Actually, his area of expansion, actually I said, where are you going to expand? He said Central Asia, Africa, Southeast Asia, the Muslim world. So wearing my Islamic finance hat, I said, Eric, here's a book about Islamic finance. You should put a platform, because many of these countries are Muslims actually, into his fintech, or a very large platform. And I totally agree with Salim that it's great to have all this freelance SME stuff, but the world is still being fought out by TNCs and platform companies. So I think BRI, Malaysia pushed back on some of the BRI projects. Dr. Mahathir 2.0, actually we got this East Coast rail system, which is good project, but it was corrupt in some ways. And I would tell my Chinese friends last time, those who are familiar enough, I said, look, you guys were clamping down on corruption back home. Please don't export to our country. And we need to stand up and reconfigure this because it's in their interest. BRICS, sure, Malaysia, took its time, but Prime Minister Anwar Ibrahim has joined last year. In fact, he spoke in Vladivostok across Russia. Now, where is Russia now that Russia vis-a-vis China, now that the Ukrainians are off the table and the Americans are still, talking to the Russians now and again the Chinese. So all this shifting sands, as I call it, hard to predict fully, but your point about preparedness. So I would say the Premier of China or the Prime Minister, the President of China, I think the Chinese will be very strategic. Their frame of reference is 5,000 years. The Americans, I hope, and I believe there are many sensible people in academia, in government, in policy. What is less clear is exactly where the cards are going to land. But inshallah, I think, as I said, for example, on the supply chain reconfiguration, the reality on the ground is that this is so, embedded that you want to do any product, actually the components in China, etc. And actually for the developing world and other parts of the world, another finding, EVs, for example, solar panels from China, actually, you would exclude yourself from consumer, from benefiting from this kind of, higher value, low price points if we cut that out. So I don't think that's going to happen. Sure, it'll be a bumpy ride, I'm sure. But inshallah, I think we'll be in a good place. And what it means for countries like Pakistan and Malaysia is that actually, in the shifting sense where we locate ourselves, I think we can find opportunities. Thank you.
Thank you. I know we're on time, but I'm going to take executive privilege and maybe ask for 1 or 2 questions from the audience before we conclude. If you could raise your hand, we'll try and get the mic to you. And there's a question up front, if somebody can get a mic, please. If you could introduce yourself and limit it to a question, please.
Roxana Narejo from Rakim Islamic Digital Bank. My question is from Dr. Salman. Salman, for last decade, we had seen equity, diversity, and equality taking the headlines. However, under the Trump 2.0, equality has been removed, and subsequently, equality was removed by a few organizations from their objectives. I would want to understand from you the impact of this particular removal on the overall productivity progress of the nation and even on the inflation and maybe the tensions between the countries? Thank you.
I think, as you said, this trend has accelerated quite a bit under Trump 2.0 administration, but it was slowing down going into the elections as well. So the US, especially the Republican states, had already started to push back at not only D&I, but climate change, other social progressive factors, which played an important role in the election outcomes. Now, to your question whether what will be the long-term impact of that, of course, there was quite a bit of, I think, good, strong progress made, but at the same time, there was a lot of marketing as well. So I think the pendulum will start to adjust at a more pragmatic level in the sense that the companies will now get on with it rather than talking about it all the time. So the problem which happened, and if you look at the survey data, Pew survey has done a lot of surveys on this, is that people didn't want to hear about it. They said, just get on with it, do it. Don't make it as a virtue signaling. And I think a lot of the corporate sector was guilty of doing that. But I think some of those genuine policy changes, I don't think the corporate sector will reverse. Why? Because if it's helpful for the business, why wouldn't they do it? Yes, they will talk less about it. And I think that's not a bad thing if they don't talk too much about it and get on with the job of delivering products and services. And if diversity and inclusion leads to better outcomes, then this is a business decision, if you see my point.
Any other question? Okay, I think we're on time and there are no more questions. I want to express my gratitude and thanks to Tansiri Azman Mukhtar and Dr. Salman for this valuable session. Thank you.
Thank you so much, Ahmed Saab. May I request the gentlemen from our first session to please come together for a group photograph. I know a couple were taken while you were sitting. I can request you to be in center stage for a group photograph for the first session, please. Thank you, gentlemen, for a very insightful session. Ladies and gentlemen, a round of applause for the first session as it comes to a close. And we are now moving to our next session. This is themed and titled as Revitalizing Pakistan's Economy, a Path to Sustainable Progress. We've seen the boom and bust cycles. The finance minister has also alluded to them. It is somehow expected. We look at things and we say that, oh, the going is wonderful, but we don't know when the next bust is going to come. Pakistan's economy at best can be described a place where we are trying to heal while surviving. And now that in itself is a paradox. How do you get out of this catch-22? Many are actually banking on digitalization and some of the innovative measures available to do. Pakistan is not an anomaly. Many countries in the region and around the world have been able to bring about this turnaround, a progressive turnaround in a single generation. Is it possible for Pakistan, or are we going to continue being a graveyard for missed opportunities? What are some of the opportunities that lay ahead of us? Our next speakers in this session will exactly be bringing light to that topic. May I first take this opportunity, just staying true to our format, we'll be first inviting the speakers who are making the presentation, and then after that, I will invite the moderator and the other speakers to join us up on stage. So ladies and gentlemen, without any further ado, our next speaker, his presentation is titled as Pakistan's Economic Growth Drivers and the Constraints. And he, of course, is an international economist, a former senior official of the IMF, He specializes in international finance and macroeconomics. He was a staff member of the IMF from 1990 to 2021, where he served as the Deputy Director in the Middle East and Central Asia, European and Western Hemisphere departments, overseeing all aspects of IMF's work in 40-plus countries. Ladies and gentlemen, please put your hands together to welcome Dr. Asim Hussain for his presentation titled as Pakistan's Economic Growth Drivers and Constraints. Asim Saab, just one request in the interest of time. May we request you to stick to the time slot. Unfortunately, we won't be able to play a timer as your presentation will be displayed on the screens. Thank you.
तो थोड़ा सा बैलेंसिंग का मसला है, लेकिन ज़फ़र साहब ने तो संभाल लिया, तो उम्मीद है कि मैं भी कर पाऊँगा। तो ज़फ़र साहब, राज क्या था आपका? Okay, so thank you very much to the PBA for inviting me, and it is indeed an honor to participate and to present before this audience. My talk today is going to focus on the reasons for Pakistan's dramatic underperformance, Pakistan economy's dramatic underperformance. And I'm going to also then talk about how that can be fixed going forward. In outlining how the Pakistan economy fell behind over the last 5 decades, I will highlight in particular the role of rapid population growth, as mentioned by the minister towards the end of his presentation, and of economic policy mismanagement. I'm going to connect that to the principal, what I see as the principal macroeconomic challenges the country is facing now, namely the massive public interest bill and the wall of external debt repayments that the country must face year after year for the foreseeable future. I will then turn to how adopting an IMF-supported program has helped stabilize the economy, but I will talk also, or I will try to identify some of the risks and pressure points going forward under that program. And I'm going to then, after having put forward a number of criticisms, try to come up with a sort of a positive ending to the presentation to discuss what I think might be a better way forward, one that I think is feasible, and try and outline what would need to be done to change or reverse the economic underperformance that we have had. Okay, so I think this slide in a nutshell captures the economic underperformance. On the left is the picture how it was in the early 1970s, and what's graphed here is gross national income per capita. Pakistan, as you will see, back then, 50 years ago, a little over 50 years ago, was the highest among its neighbors. 50 years later, we are the lowest, and it's not by small amounts. So 50 years ago, we were almost twice or 1.5 times India and Bangladesh, higher than Sri Lanka, only by a little. And now we are about half the average of the other three. This is what I consider dismal. The same picture against the average of the other three. It's not a short-term decline. It is a pretty steady decline over the past 50 years. Population growth, or very rapid population growth, was a major factor underlying this relative underperformance. So what you see in this graph is how Pakistan's population has increased over the 50 years. Today we are 4 times what we were 50 years ago. The other countries, less than 3, 2.5 in fact, or even less than 2. Now obviously when you look at GDP or GNI per capita, this is the denominator, and having a faster or a larger denominator mathematically or arithmetically translates into underperformance. But that's not it. There is a feedback effect, and I'm going to come back to that, and I think it's actually very important. Okay, now the underperformance was not limited only to economic aspects, but to socioeconomic aspects as well. So for example, health. And in this slide, I have life expectancy. Pakistan ranked in the, well, was the second highest 50 years ago. Today, we are the lowest. Not only has the progress been the least, but the relative position has deteriorated. This is one aspect of health. Another, stunting. Many people have seen various aspects of stunting. People have talked about it a lot. I think this graphically shows how bad the situation is in Pakistan. We rank worst today in terms of the prevalence of stunting among even our neighbors. Aside from health, education attainment indicators, Pakistan's performance has also been horrible, again, relative to our neighbors. The difference here is even in 1970, we were at the bottom compared to our neighbors. And our progress has been the least, so we not only remain at the bottom, but the gap has widened. And this is true whether we consider secondary school enrollment or tertiary, and it's true for other indicators of enrollment. So the bottom line, Pakistan has failed to educate its citizens, particularly the underprivileged. Now, inadequate investment was a key factor determining this unimpressive economic growth. Investment, whether measured in terms of human capital, which we see in these education indicators, or in terms of fixed capital, which we see here, Pakistan compared to neighbors. Our investment rate has been much, much lower, sustained over the last 5 decades than the neighbors, especially the last 2 or 3 decades. And it has also been trending downward. No surprise then that economic growth has also been weaker. Now, one key factor limiting investment was saving. You can have foreign investment and you can have borrowing from abroad, but together, if you're doing well, if you're a country that is seen as a highly attractive location for foreign investors, you get maybe 2-3% of GDP a year consistently. If you are able to borrow abroad, you can borrow 2 or 3% of GDP a year comfortably if you have very solid fundamentals and so on. So together, this foreign saving, if you will, or foreign investment, if you will account for 4, 5, 6% of GDP. But we need investment. Our neighbors have investment in the 20 to 30% range. We need saving to be in that range as well. So foreign borrowing and foreign investment is not going to bring us even close to that. It will have to come mostly from domestic investment. Domestic investment, of course, then relies also on domestic saving. And the picture on the saving side is even worse than on the investment side. So Pakistan's trend saving rate has been downward since the early 1990s. The gap between Pakistan's savings rate between 5 and 10% and that of our neighbors between 20, 25, 30% is massive. Now, that begs the question, in my view, why is Pakistan's saving so meager? Now, many factors, of course, explain a country's saving rate. Its wealth, the growth rate of its income, structural factors such as financial deepening, which bankers here will be very familiar with. But a key variable in studies of saving behavior across countries is population growth. And actually, the working age population ratio, I think Dr. Salman had a graph on that in his slides. So here's a picture of Pakistan versus our neighbors. And the reverse of this is the dependent population ratio. So this shows what percent of the population is of working age between the ages of 15 and 64. Pakistan's young population is much, much higher. In other words, those who are not yet of working age than our neighbors. Now, to understand the relationship between saving and population indicators like the working age population ratio, maybe a simple example helps. Imagine two families that are identical in all respects except one. So they have the same level of income, they have the same level of wealth, they live in similar houses, they live in, everything about them is the same except one family has 2 children, the other has 6. Imagine which family will be able to save more of its income. Clearly, the one with a higher working age ratio to its total population. The same applies at a macroeconomic country level. Pakistan's working age ratio is so low because of persistently high population growth. With a low working age population ratio, the ability to save is simply not there. With insufficient saving, it is very difficult to generate investment. Without investment, you don't get growth. So apart from the denominator effect that I had mentioned, the arithmetic effect, this is the other key factor in underlying the weak economic performance. Now with that, let me turn to the second part of what I said the story would be. How does this relate to the challenges that we are facing today? And there, the second aspect of the weak economic growth comes in, and that is economic policy mismanagement sustained over a long period. Consistently living beyond our means as far as the public spending is concerned has translated over time into large internal fiscal or external current account deficits that have persisted. So here I start with the fiscal deficit. As you will see, except for 1 year in our history, we have always run a deficit. This deficit over time has caused public debt to accumulate and has translated into a massive interest burden related to that debt. So much so that that interest burden is now, or actually this is before COVID, the last year before COVID, was among the highest in the world. In addition to this heavy interest burden, of course, the diversion of the limited amount of saving in the economy to financing the public sector deficit has meant crowding out of private investment. I will come back to that as well. But now, coming back to the public interest bill, already before COVID, we had one of the highest rates of interest to the government's revenue, 40%. In other words, almost half of what the government was taking in was going to service debt for past spending, leaving very little for current spending. The others with ratios similar to Pakistan's, Lebanon, Sri Lanka, Zambia, Ghana, and Egypt. And I mention these by name because 4 out of those 5 have undergone gut-wrenching debt restructuring. So being that high is a dangerous place. This was before COVID. This is the picture after COVID. Amazingly, Pakistan's interest to revenue, fiscal revenue ratio was 60% almost for 2 years running, the last 2 years running. This is clearly unsustainable. And Pakistan ranks among the highest in this. So this is 60 plus emerging market countries. And I'm not sure if those names are readable, especially from the back, but it's every large emerging market economy that you can imagine. The only ones excluded are small island countries or other tiny economies. Pakistan was the second highest. We cannot sustain having more than half our revenue going to service past spending. It's just not socially sustainable. Now, this was the fiscal side. The other macroeconomic imbalance was the external. A preference to keep the rupee overvalued, which keeps imports cheap, was historically sustained by borrowing foreign exchange. The problem with that strategy is whenever there's a shock, whether it's to world oil prices, whether it's because aid flows decline because of geopolitics or other reasons, or geopolitics in other countries, as now, or access to to international financing it suddenly tightens. Whenever there's a shock, a major external crisis erupts. Now, in the latest episode, the story was magnified. Remember, it was in the context of COVID. Pakistan had widened its fiscal deficit to try and deal with COVID, but then the financing need also expanded. In addition, massive subsidized credit schemes were launched, which gave the private sector the resources to go out and buy foreign exchange, and with that foreign exchange, import massively. So there was a huge import spike and a large widening of the current account deficit. Zafar साहब, मुझे पता था ये होगा, आपने पता नहीं कैसे संभाला. So with that large run-up in the external deficit, the shocks happened. Russia-Ukraine war was launched. Commodity prices, especially of oil, skyrocketed. The temporary financing that had been provided by the IMF through its rapid financing instrument and through a new SDR allocation, the suspension of debt service by the G20 countries called the DSI initiative, all those stopped. As a result, the ability to stay current with external obligations became very much in focus. So Pakistan was facing a $30 billion gross financing need, been in the range of 25 to 30 for the next 5, but 30 for the coming year. Reserves were well below that. Just external debt repayments at the time were 15 to 20 billion a year for the next 5. Things looked quite scary. In response, corrective policies were adopted: import restrictions, devaluation, the cessation of credit schemes, elimination of the petroleum subsidy, adjustment of electricity prices, all very painful measures, but at that point, no choice. It was either that or default. All this led to a jump in the price level, which at least initially also translated into a very rapid rise in inflation, to levels that in my lifetime I don't remember, at least in my recent lifetime I don't remember. Since then, things have stabilized. The base effect of these adjustments has washed through. Internationally, oil prices, commodity prices have come down, so the pressure on inflation has unwound. It has also reduced the pressure on the exchange rate. In addition, the IMF program, or the IMF-supported program, has been adopted, which aims to address the fiscal imbalance by reducing the need to borrow. In particular, it aims to reduce the budget deficit by 3 percentage points of GDP in 3 years, and it will come all from tax revenue increases. The wall of external debt repayments that we're facing has also been addressed by promises from most of our, at least all of our, bilateral and multilateral creditors to continue to roll over Pakistan's maturing debt. So with that, let me talk about what I see as the pressure points in the program that the government has adopted. The tax to GDP ratio, as I mentioned, is to increase by 3 percentage points over 3 years. This slide shows how Pakistan stands relative to its neighbors. Relative to all emerging market countries. So as you will see, Pakistan in green has among the lowest revenue to GDP ratios among all emerging market countries. The red line is the 10th percentile. So the bottom 6 are at the red line. We're worse than the bottom 6. We simply don't collect revenue. So I think moving up by 3 percentage points of GDP is not only feasible, but it is necessary. But doing 2/3 of that, in other words, 2 percentage points in 1 year, strikes me as unrealistic. Setting a target that you will miss not only is embarrassing, but it also undermines credibility. So I think the ambition the speed is too ambitious. On the other side, Pakistan aims to control primary spending. This is spending excluding interest. The idea is to keep interest at a level of 13.5% of GDP over the next 3 to 5 years. The problem with that strategy, as I see it, is Pakistan is already at a level among the lowest of all emerging market countries. I showed you at the beginning our lack of progress on economic and social indicators, especially health and education. With the same level of spending, it doesn't strike me as feasible to be able to make any progress on the social side. We will need to increase spending, but to do that, we will need more revenue. So how does this get squared? I just argued that the revenue target may be overambitious, at least in the very near term. And then I'm saying public spending, keeping it at that level is insufficient. It seems that there's a major tension here. And so it is basically with that thought in mind that many have suggested that perhaps debt restructuring needs to be considered. So the question is defaulting and restructuring our debt a viable and better alternative? And my answer to that is no. No, because it would put the economy in a worse crisis than it just underwent 2 years ago. And the reason is because of the composition of Pakistan's debt. Now, the bulk of our external debt, 85% in fact, is concessional. It is concessional, and it is to multilateral and bilateral creditors who have already agreed under the program adopted to roll over this debt. So at least for the time being, as long as the program remains in place, the risk associated with having to repay it all at once is not there. Because it is concessional, also the burden associated with it is minimal, or at least not as severe. Only about 12-13% of all the interest paid by the government last year was to external creditors. And that implies an average interest rate of less than 3%. Restructuring this debt is basically shooting yourself in the foot. And the gains from it in terms of interest or repayment is minimal. Now, what about restructuring domestic debt? Mind you, very few countries actually do it because of the political problems that generates. But even there, the debt structure is important. The fact is, and I think you will all know this better than me, more than half, 60% of Pakistan government domestic debt is held by the banking sector. And it in turn accounts for more than half of banking sector's balance sheet. If you restructure it, even a small haircut is going to wipe out the aggregate capital of the whole banking sector, even a small haircut. So, and remember, a small haircut only gives you a small gain. And once you wipe out all the capital base of the banking system, who's next? Depositors. If you touch depositors, the disruption to the financial system is huge, and the social dislocation is huge. So unless there is really no other choice, this is not a route that one goes down, and that is why we don't see it internationally. So back to the revenue slide, is there a better way? Is there an alternative? And I argue there is. On the revenue side, I don't think there is any escaping the need to dramatically increase revenue. I think having a goal of reaching the 25th percentile of emerging markets, remember that is the bottom quarter, but reaching just the bottom quarter should be feasible over 5 to 6 years. That implies 1 percentage point of GDP a year. Not 2, just 1. But even that is not easy, but it has to be done. There's no other way. We cannot continue to live as the worst country in terms of being able to generate tax revenue, in not just a neighborhood, in the whole world. At the 25th percentile, mind you, are countries like Kenya, Egypt, Nepal. So these are not, I don't think at least, countries with massively better institutions than ours. If they can do it, and remember, they're at the 25th percentile, there is no reason why it cannot be accomplished in Pakistan, at least over that horizon. So increasing, I'm sorry about this. Okay, I'm going to do this without the slides rather than try to go back. No. So I just spoke about the revenue side. I'd like to just say a few words on the spending side. With the increase in revenue, I think half of it should be used to unlock spending. Of course, when I say that we need to increase spending, I don't mean to suggest that the quality of spending at present is satisfactory. There needs to be a clear reallocation of spending to more efficient and better ends. But together with a reallocation, some increase in the level of spending, half of what we gain from revenue, would allow us to reach the bottom quarter of emerging market countries. That too, again, some comparators, Kenya, Tanzania, Cambodia, not necessarily big spenders, not necessarily countries free of corruption or other issues, but they have managed to reach that level. I think it's a useful goal for us to have. Of course, to support that, structural reform will be needed. I don't have time to go into the aspects of it, but let me just mention those. I think the minister talked about all of these. Expanding the tax base, first and foremost, addressing cost inefficiencies in the power sector to allow for downward tariff adjustments, addressing the quality as well as the scale of social spending, possibly delegating spending responsibilities even more to the provincial level, which in turn would also address the federal-provincial imbalance in resources, privatizing state enterprises to relieve pressure on the budget and also to improve service delivery. All that, I think, is necessary, but there will still be a problem. Having a somewhat looser fiscal stance than what is envisaged under the IMF program will require more financing. Financing from the market is expensive, whether international or domestic, and if you do from the domestic, that means more crowding out of private investment. So hopefully we will be able to mobilize more concessional financing in the near term from external creditors, multilateral and bilateral, and in doing so, relieve some of the burden for domestic private investment. But concessional financing by itself will not be enough. Capital formation needs to be much higher. Investment needs to be much higher than it is now. So getting 2 or 3% more from concessional financing will not do the trick. We need to increase investment by 10, 15, 20 percentage points. For that, we will need to increase saving. To increase saving, what must we do? Here, I think the example of Bangladesh is a useful one. Bangladesh is the blue line. Look at the increase in saving and the steady increase in saving over time. This comes, interestingly, I think, from very successful family planning campaigns. But in addition, there was a huge focus on education, especially for women. In addition, the Grameen Bank and other microfinance institutions lent only exclusively or almost exclusively to women, elevating their position in their households, empowering them with childbearing decisions much more than otherwise. Likewise, the garment sector employed almost exclusively women, effectively giving them the same power as microfinance institutions, something perhaps can be considered or thought about and applied to the Pakistani context, again, from a socio-economic background not too different from our own. So let me close by saying we have to bring down population growth. The way to do it, I don't know, but success there, and the other countries' experience has shown it, has been significant. Bangladesh, India, Even Sri Lanka earlier on achieved very large increases in their working age population ratios in as little as a decade. There's no reason why we cannot aspire to do the same. If we do that, our savings rate can be markedly increased, in turn unlocking funds for investment. With that, significant change in the relative economic performance can be realized. Thank you.
Thank you, Dr. Asim, and you're the expert when it comes to macroeconomics, but what I picked from Zafar Saab was he was smart enough to place his iPad between the two mics. That kept them in one place, but you need a certain kind of an iPad for that. It's just a humble note for all the other speakers that are to follow. Ladies and gentlemen, let's move on to our next presentation. This is, of course, again on the similar subject, and it will be taking it forward. Our worthy speaker is the Pro Vice Chancellor for the University, Community and Engagement at the University of Cambridge. He is also the Professor for Strategy and Policy at Cambridge Judge Business School. Professor Munir has published several articles in leading organizational and technology journals and presented his work at numerous international conferences. He is a Pro Vice Chancellor for University, Community and Engagement at the University of Cambridge, Professor of Strategy and Policy at the Cambridge Judge Business School. Please welcome Mr. Kamil Munir.
Thank you very much, Sidra, and thank you very much, Pakistan Banking Association, for inviting me today. Given that I'm probably the only person in this room, in this rather large room, who does not work for a bank or any financial institution, I'm still wondering why I'm here. The organizers obviously know something that I don't. But that is only one of the problems that I'm facing today. The other problem being that we first decided that I was going to speak on disruption in the banking industry. Then the title of the session changed to Economic Resilience of Pakistan, and I was told it would be good if you can say something on the economic resilience of Pakistan. So that is what I started thinking about. And now it's somewhere in the middle, the two. So it reminds me of the fact that there are millions of Pakistani kids who in school struggle with the subject of English language. Okay? And the hardest bit is writing essays in English. So often what you will find is they memorize a particular essay that they expect the examiner is going to ask. Right? And one such essay we used to hear from our parents used to be a morning walk. Write an essay on morning walk. So they would just memorize it, and as soon as they got it, they would just write it down. And one such kid went, having memorized this essay. Unfortunately, it wasn't his lucky day. And the essay that he was asked to write in the exam was a journey by airplane. So he was in a real, sort of dilemma and conundrum. And so he started his essay. He said, once I had the occasion to travel by airplane, as soon as the airplane got into the air, I looked down and I saw a person taking a morning walk. Right? And after that, it was all morning walk, right? And that is the strategy that I am going to also use today. I'm going to start by I'm going to start by talking about resilience and then pivot to disruption. Okay? Hopefully, the pivot will be relatively seamless, right? But most importantly, I also realize that I'm the only thing standing between you and lunch, okay? So I will also try to keep it short, okay? It'll be an essay on morning walk, but a short essay, okay? It'll be a short walk today, okay? Now, when we talk about economic resilience, what do we actually mean by economic resilience? Economic resilience is not just about surviving, which sometimes in conversations in Pakistan, sort of tends to come across, that we are a very resilient nation because we keep stumbling on. Economic resilience is actually about capacity development. It's about organizing, and it is about talent, developing talent. I don't know many things, certainly not many about banking, but one thing that I do know something about is producing talent, because that's what we do in the university. You saw some of our talent on display today in earlier presentations, that came out of Cambridge. But this, by the way, is a picture you can probably see. This is not Gaza. This is post-Second World War Germany. This is Dresden. And it looked pretty much like Gaza at that time. And the only reason they were able to rebuild is not because of the Marshall Plan. They got about 11% of the total Marshall Plan, which was about 13 billion at the time. It was about because the wealth, as FDR said, the wealth of a nation lies not in its natural resources, but in the minds of its people. It had a lot of well-trained and well-organized people who were able to rebuild the entire country. So if we want to be resilient as a nation, and we want to go somewhere, then that is where you start. You start by producing that talent. And because that is the real capability and asset of a particular country. If there is a country that relies on a natural resource, the day its natural resource finishes, it will go back to olden times. The thing to do is to embody your people with that training. But how do you produce talent? Asim was just showing us some graphs of where we are and where we have been in terms of education, secondary education in Pakistan. But by opening more universities, for example, in Pakistan, which is, something that we have been doing, we even converted a lot of colleges into universities and so on. Have we been able to produce more talent? What produces talent is not just degrees that will award, universities that will award more degrees, and then counting how many PhDs we produced last year and so on. That is not going to make much of a difference. Talent is produced when we solve hard problems as a nation. Some of you might recognize the picture on top is the first integrated circuit that was produced in 1961 by Noyce and Kilby, and who later on created the firm Fairchild Semiconductor, and which became, sort of one of the key nodes in the whole ecosystem. At that time, it was about 50 times more expensive than the other component that was available at that time, which was made by putting wires together and different components together. The big advantage here was that it was scalable. You could keep putting more and more transistors, components on the same little bit of silicon. But where's the market? And that market only emerged because the United States was trying to solve those hard problems. And at that time, Tansri, Azman mentioned the Sputnik moment. And America did not want to lag behind in the space race. And they decided they were going to launch an Apollo program. They were also trying to build ICBMs, intercontinental ballistic missiles, and so on and so forth. So the weight and the technology itself were critical at that time. And the market was created by the US government and the Department of Defense that time. And that led to the creation of these firms, and in 1 year, Fairchild Semiconductor's sales went from a few thousand to $500,000, which is not very much, $500,000, right, in a year. But 500,000 made out of selling integrated circuits that are leading the world is much more valuable than $5 billion that comes from just retailing or something like that, which does not push the technological boundaries of the country. So these investments that were made at that time were with a view to creating and to pushing the technological boundaries of the nation. The picture below is of the university that Tansri Azman mentioned, that he has been to several times. Not many people outside China know about it. It's Zhejiang University in Guangzhou. DeepSeek, that you have all heard of, the new AI model that China produced using much cheaper GPUs because a ban was put on them. You know, they could not import the latest GPUs from NVIDIA anymore, which goes beyond ChatGPT and other models and much, much more cheaply, came out of this university. Alibaba came out of this university. The university has a reputation for spinning out tech companies. It started off with a vision of being the Stanford of China. I think it has gone beyond that now. The number of papers that come out of Zhejiang University, otherwise known as Zeda in China, is greater than any other university in the whole world. The number of those papers that are counted in the top 10% papers of their disciplines is second only to one university, Harvard. So they don't measure the success by counting how many PhDs they have produced. They count how many companies have they spun out of this. Universities are not seen just as a place where people will go in and come out with a degree. They are seen as innovation ecosystems. They can tell you, my Chinese friends can tell you exactly which university to go to for what thing. So for example, if we ask, which university do we turn to if we need expertise in AI? They will send you right here. Jiang, who created DeepSeek, basically studied artificial intelligence at Zhejiang. Are we creating universities here for awarding degrees or being innovation ecosystems? Who is this talent that we want to produce for? I'm staggered. I'm literally staggered. When we have education ministers visiting Cambridge and asking us, what are the needs of industry in the West? Because we want to produce such people and then export them. I'm staggered when I hear that, because countries that are going somewhere produce talent not for others, but for themselves. Because that talent is necessary for their development plans. And where is the role of the state in this? The role of the state, obviously, is to have a brilliant public education system here. When I look at universities like LUMS, perhaps considered to be one of the finest universities in Pakistan, and I look at their MBA program, rather than growing, I see it has stayed pretty much at the same level of enrollment. Because they struggle to find good talent to come into the MBA program from Pakistan, a country of 250 million people. They have an MBA program of MBA class of less than 100, which doesn't compute. And then the job of the state here is to create and support national champions. One of the most competitive industries here is actually banking. Banking has done very well in Pakistan. Banking has control of most of its domestic market. Banking has produced a lot of talent. You go outside Pakistan and you see a lot of Pakistani talent, right, doing extremely well in foreign banks, and vice versa. Then many of those people come in. So there is a process of osmosis that is taking place here. Right? A number of people sitting here have worked in the finest leading banks in the world, and they have come back and to work in Pakistan. So there is talent, there is a domestic market. How do we take it to the next level of global competitiveness? Zafar mentioned that in his opening remarks. The finance minister mentioned that he wants every industry to be contributing to exports. I don't think every industry will be able to, not every, because in order to be contributing meaningfully to exports, you need to be globally competitive. And there has to be some competitive advantage why people will buy your services, your products, rather than somebody else's, right? But this is certainly one industry that can create that global competitiveness. Right? These are all national champions, the pictures that you see there. Right? And the important thing here is to align organizational and national goals. Right? They used to say, what is good for General Motors is good for America. Because when General Motors did well, when it was the largest corporation in America, it produced jobs. Right? It brought income to America. And now, things have moved on. That is the process of Schumpeterian creative destruction. Right? Some industries will do better, some will sort of do better in the future. Now what is good for Apple or NVIDIA is good for America, and America completely realizes that. You've heard statements from Donald Trump recently where he's telling the Europeans that you have not been fair to our companies. Why? Because you have brought all kinds of regulatory hassle. And yes, a lot of the charges for anti-competitive behavior against companies like Google and Apple, they have been levied in Europe rather than in America. They have been fully supportive of their companies. And now they are putting pressure on other countries to also give them an easier ride. Some countries realize that one way, no names, but this was mentioned in the morning, that one way of aligning goals is by taxing success. That is one way, but it is not the best way. The best way is to develop that industry further, to take them to the next level of competitiveness and competitive behavior, rather than starting to tax them with no view to future development. And that is extremely important. Okay? Because any kind of policy that we want to make here, that we want to come up with here, has to be with a view towards the future. This is what countries do. This is what we do in the UK, for example. We have think tanks, we have sort of lots of universities, which are basically looking at how will this industry change? What are the new challenges? In 10 years' time, in order to be successful, what capabilities and assets are we going to use? And that is what they start producing. China is not just sort of leading the world in terms of LLM models or in terms of electric vehicles. It is now also beginning to take market share away in big pharma, an industry that the US dominated for decades. And Chinese companies now have developed a competitive advantage. They do much faster trials and much cheaper. And they are licensing their technology and their drugs in the US, and FDA is giving them those approvals within a matter of months for those drugs. So, when we develop policies, when we want to think about economic resilience, like Tansri and Salman, here is another alumnus of Cambridge. A few years before them, at the university. And what he said was very interesting, because he said it is not the strongest species that survives, nor the most intelligent, but the most responsive to change. And that is something that I want to talk a little bit more about, because we have focused a lot on economic challenges, and we have focused a lot on the immediate challenges that we have, but there is a bigger challenge that we haven't talked so much about, although it has been mentioned in some of the earlier presentations. And that is the very industry that is present in this room is getting disrupted. It is going to see a sea change. 10 years' time, the people sitting in this room will be very different. The talent sitting in this room will be very different. Why? Because of the, you can call it encroachment, or you can call it anything else, of technology into this field. Okay? And this is a challenge that is being faced all over the world. Okay? You always compete for the future. Okay? The graph that I have, the rather simple graph that I have, shows you one thing. The world is moving towards, and this was mentioned earlier, platformization. The biggest companies of our time, the Googles, the Metas, Apple, and so on, they're all platform companies. What is different? That is what this simple graph shows you. On the x-axis, we have market share. And on the y-axis, we have value of your service or your product to the consumer. For a conventional product, the value does not go up with market share. Take restaurants, take cars for the past several decades. Even if Nissan or Honda sold, had 50% market share, the value of buying a Honda to me does not go up because of those numbers. Industries which are characterized by network effects, it is market share that creates value. When you open an account on social media, on some social media platform, you don't compare the features of different platforms. You go where your friends are, where most people are. When you decide to use Outlook for your email, you don't compare the features of different emailing software that you have. You go where everyone else is. So what you see is the value goes up exponentially. And my submission to you is, in the coming years, an increasing number of industries are going to be characterized by network effects. You see the picture below. This one car is owned by Google, the small one, and the bigger one is owned by or manufactured by Sony. What are these two companies doing in the auto industry? The big incumbents were the Hondas, the Toyotas, the BMWs, the Audis, and so on and so forth. What I am also, so I'm the Mr. Foresight here, Salman. I'm, the guy who got locked up. So I can, again, I will speculate, and this is all that is, speculation, that in the next 10 years, the people who will be dominating this industry are not going to be BMW, Honda, Toyota, or any of the names that we have grown up with. It'll be the likes of Google, and other big companies, maybe Apple. or Amazon, or you name it. They have never made a car in their lives. And they will be dominating because the ecosystem is changing. And just like the ecosystem in financial services is changing slowly. But disruption is easy to miss in its initial stages because it starts with the low end. Sorry, I'll just back. It starts with the low, unattractive end of the market. Bits of business that powerful incumbents are not very reluctant to give away. But that's the thin end of the wedge. And then they start expanding. And that is what we see in a number of, let me see if I have that slide. Yeah, I mean, so this is, the first time I noticed this was when I was, sort of talking to Kodak, and this was early 2000s. And I noticed that the industries that are getting disrupted are often the last ones to recognize that there is disruption taking place. I wrote something in the Financial Times, I remember in 2006 or 7, basically saying that Kodak has no chance now. They had just come out with a new strategy and putting another $5 billion in investment into new products and so forth. And I knew the management of Kodak at that time. I had visited their headquarters in Rochester several times, and they said to me, it's interesting how outsiders view our business, which was a polite way of saying, you have no idea what you're talking about. We are the ones who know this industry. And they had grown up. But that is precisely the problem, because they knew the industry too well. And they were too close. So that is point number 3 here. Our core capabilities, which underpin our success, become our core rigidities, the very things that prevent us from changing. Because we make money in a particular way, and we become reluctant to shift away from that. And the other thing is, the companies that get disrupted are not the companies that lack resources and technology, but lack imagination. They refuse to believe that in future, the world could, sort of get by perfectly without them. So they often start by putting themselves in the middle and then imagining a world around them, rather than imagining what will this ecosystem look like, how will financial transactions sort of take place today. So it's about mindset, shift in mindset and in talent. Right? And you're not often replaced. I mean, often companies think, who can replace us? We are the ones who do this the best, and so on. Think about iTunes. When Apple launched iTunes, right? What did it do to the music industry that was basically facing annihilation from piracy? Because music had become digitized, people were just sharing music for free. iTunes, 80% of the legally downloaded music in the world was coming from iTunes. So Apple saved them, right? The music companies, because they had lost their revenue stream. They hated Apple. Because while Apple knew nothing about music, they essentially became an intermediary. And what was Apple's strength? They owned the customers. So now we are seeing a lot of platforms coming into the financial ecosystem who own customers, the customer interface, and that is where the power lies. Every year, Google pays about $12 billion to Apple. They write a check for $12 billion and give it to Apple. What does Apple sell them for $12 billion a year? Access to its customer base. So just like music, in finance, banks could, if not get replaced, although the value chain, I think, is going to be fragmented. Different people are, already coming into, you see different companies coming into the payment space, and you have debt markets now, and, private equity firms, other players, they're going straight, and they're beginning to lend straight away, and so forth. So disruption is afoot, right? And when I see this, right? When I ask my students who are working around European countries and in America, said, how do you choose a bank now? Says the key vote is that of the CTO. No. And every single time they vote for the tech company. So there are significant changes that we also need to, if we want to, because as I said, I think we have a very competitive industry here. How do we take it to the next level? How do we develop the talent that we will need in 5 years, 10 years' time here? So when we think about resilience, right, those are the questions that we need to be thinking about. So I will just stop here. Thank you very much.
Well, thank you very much. Kamal Sab, I think a lot of what your talk actually focused on what disruption really means today. Disruptors don't really have to discover something new. They just have to discover a practical use of their new discoveries. And that's exactly what we see around here. It wasn't long ago that disruption was a bad word, but today we equate it to being resilient. We talk about how it can add to our muscle to withstand the changes. Ladies and gentlemen, it kind of takes me back to the Greek mythology when the son of Helios was actually asking for the power to have the reins of driving the celestial solar chariot. He thought that he has, to prove his divinity by doing so. And although he was relentless, he was given a lot of caution not to go for that. When he did, of course, the chariot was out of his control. The sun ended up scorching not just the vegetation, but killing various people. The myth goes that is when Zeus strikes him, and he comes down like a falling star, and the order is restored. So sometimes you come for disruption thinking that it's a great solution, but is it? And that's the big question before this session as well. As we've heard both the worthy speakers, we now call upon our distinguished moderator. Kamal Sahab made a reference to his publication. He's been the former correspondent for the Financial Times. Ladies and gentlemen, a prominent writer on politics, economy, and Pakistan's outlook with a long track record of writing for domestic and international newspapers. So his is not a short, but a rather long walk, and he has the drone and the macro vision as well. Ladies and gentlemen, please welcome Mr. Farhan Bukhari. I once again take this opportunity of inviting our worthy speakers and panelists for this panel. Please put your hands together to welcome Dr. Asim Hussain and Mr. Kamal Munir. Farhan Sahab, over to you. You'll have the big timer running, and that's the time for the conversation and also for the Q&A. So over to you.
Thank you very much, Sidra. These were two fascinating presentations, and I wish we had more time to discuss the contents, because the subjects are very central to the future of our country, future of the world, and yet I've just been reminded that we are pressed for time. So maybe in the beginning, if I can just ask the audience if you have any questions, because I'd really like to give an opportunity to the audience. Any questions from Dr. Asim Hussain or Dr. Kamal Munir? Do we have any questions? Okay, let me just begin with a couple of thoughts that I have in mind. Innovation, challenging future, difficult past. I think those are the kind of areas that easily and briefly outline what we've heard from you earlier on. Dr. Asim Hussain, we've been here before. As the finance minister said earlier on, boom and bust scenarios have been part of our economic history, unfortunately, and therefore we are right now locked in, I think, the 24th IMF program. Pakistan has become a chronic IMF patient, as people say. do you see hope for optimism and sort of evidence that this time around the consequence is going to be different? That we can turn the corner and become like Kenya or one of the other countries that you mentioned, because the context, the environment, in many ways mimics what we've seen in the past.
So, Farhan, thank you for that question. I think we have to believe that the future is a bright one, or at least there is a prospect of a bright future. And I do see various reasons to think that that's true. I think in the morning sessions, several people talked about the human capital base of Pakistan, or at least the human capital potential of Pakistan. We are a very large country. There is no reason why we cannot have a very large economy. But in order to get there, we need to ensure not only that we achieve or are able to strategically educate the cream of Pakistan society, but to really educate all of Pakistan's society. That massive resource can translate into large growth opportunities. I think in the past also one major restraining factor has been policy making. Policy making, the reliance or at least the propensity to live beyond our means, to rely on an overvalued exchange rate in order to import freely and pay for that through borrowed resources. These policies have proven to not be sustainable, and they do need to be sort of discontinued. And I think the recent changes give me some degree of confidence that we are at least making a turn, and we are starting to head in the right direction. There is a degree of stability that cannot be denied. That's better than where the situation was 2 years ago. But there is still a very long way to go. And sustaining that is not going to be easy. But we must not lose sight of the potential. And we must not lose sight of the importance of not only being strategic in finding the right sectors, the right growth opportunities, where the exports will be, but also making sure that there's an organic way that this happens, that all 250 million participate.
Over to Dr. Kamal Munir. Kamal, in your presentation, you talked about education and not the right kind of education, the skill gap. And this reminded me of one of those times that I was handed over 15 CVs for a news organization in Pakistan. And the one question that I asked all of them was, here's your degree, here's your CV. What was the last book that you read over the past 6 months or maybe the last year, which is beyond your syllabus? So I was trying to probe their interests, wider interests. And to my absolute shock, and this is something which provides food for thought for the larger community here, not a single one of them could name a book. What does that tell you about the skills, the quality of qualifications of graduates who are coming out from our university programs, which have proliferated in the last decade?
No, I mean,
the microphone.
Yeah, I mean, Farhan, you're absolutely right. And this is the point that I was trying to make, that just by creating, and honestly, I also pointed this out several times to Dr. Atta when he was Minister for Higher Education and so on, that just creating universities and expecting the country to develop as a result of that is like pushing a car and expecting it to start. And when you open the bonnet, there is no engine. So you will keep pushing that car for the rest of your life and it won't start. Because industry is the engine. Industry, so if a country is deindustrializing, you can start opening more and more universities, you will basically be, you might as well put them in an export processing zone because that's where they will go, your talent. And that is not a viable economic development plan. Because any economic development plan asks of you that these are the skills that we are going to need in the next 5, 10, 15 years. China, I mentioned China's success at drug development and their biotech sector. They declared that to be a priority sector about 25 years ago. And now they are reaping the benefits of that. So it has to be with a view to future. And our universities need to be integral nodes in a larger ecosystem of innovation and growth and industrialization. Outside of it, really, you're not going to capture much value from them.
Maybe of interest to members of the banking community, they have to tap into the human resource which is coming out of local institutions, local educational institutions. Any ideas, any thoughts, any word of advice on how to make the best of the talent that's available here, of course recognizing the gaps?
Well, when I have such discussions, let's say in Europe or in America and so forth, the talent that banks are trying to retain right now, so it's recruitment and retention. This is an issue that banks are facing with there. It's tech talent. And a lot of their big problem is that a lot of the tech talent that the big banks used to have is now migrating to tech firms and tech platforms because they think they can do more interesting stuff in financial services sitting there than they can in banks. I mean, I have friends and students in big banks, and they have legacy assets. They move slower. Right? So for a young person coming out, it's not that. And by the way, what is also interesting is that the emphasis on degrees is actually decreasing around the world. So employers of today don't really care where you went to school or university. They care about, do you have the skills? Now, you may have developed those skills by working, by taking courses online or on YouTube or wherever. They don't care. They will give you a test. If you can do that, they will hire you. Right? And that is the way the world is going. And we need to catch up.
Finally, just getting to the tail end of this session, I realize this may be very fast-paced because in the interest of time, but I just want to go back to the finance minister's earlier remarks about the existential threat, climate change and population. There are many ways of looking at it, but how does, and perhaps you'd like to, Dr. Asim, also come in on this, how does the community of bankers, of course, every bank, every institution does have their internal CSRs which perform some of these functions, but other than that, do you have any advice on how banks can become involved in these sort of areas, existential threat, which I think to a great extent is true, but they're commercial business organizations, so how do they jump in the fray? Any thoughts on that?
This is a tough one, but so there is a lot of climate finance money potentially out there. They are looking for eligible projects. Banks as originators of projects and as assessors of projects, I think, have a huge role to play in tapping these funds as co-financiers and so forth. So I suppose on that side. On the population challenge, I think banks' role is more indirect. So while education institutions are generally thought to be publicly funded, higher education institutions can and perhaps should be privately funded. And there too, I imagine banks do have a role to play in assessing which potential private education projects have good returns, not just social returns, but actual financial returns that can be funded. Then banks also have important sort of ESG roles. And there, the social returns on such projects can potentially be large. And in a country like ours, the social returns to education are massive.
So let me just add to what Asim has said. I mean, first of all, I think, most banks here are for-profit institutions, and I don't think it's their role to be solving these. I mean, great if they want to do that. But I mean, on climate, of course, there is climate financing, and there are lots of opportunities there, and banks do get involved in that. And in Pakistan too, there are going to be increasing opportunities for that. On population, I think there are two things. I mean, one is there are microfinance banks, who engage a lot more with their customers, and population control and so forth. These are things that BRAC and Grameen and they've been involved in. And the other, of course, is by your population. There are two ways of looking at it. It can be a liability and it can be an asset to you. So turning that population from a liability into an asset, and training. There are institutional voids here, right? I mean, there are other institutions who should be doing this job, but sometimes there aren't, and you have to do those jobs yourself, which means you have to train your, sort of labor or manpower yourself, and they can do that, and they'd be doing a great service to the nation if they were training this, sort of labor market or pool of labor.
Thank you very much. Thank you, gentlemen, for your time. Ladies and gentlemen, before we conclude this session, and my apologies once again, it was slightly fast-paced in the end. I just want to leave you with one thought. And this is a personal message, but it's one that I've taken to different forums recently. This year will be the 20th anniversary since the 2005 earthquake. And if my memory serves me right, in the front lines of people who went up to Kashmir and northern Pakistan, I personally stumbled across lots of young bankers. And then among the list of institutions that came to the rescue, to the relief, early on, banks as well. This is very different from the agenda of this session, but I just want to leave you with this thought because I think you deserve a spot in the celebrations, need to take claim for helping deal with the biggest catastrophe in Pakistan's history that we saw in 2005. 70,000 people, at least 70,000 people estimated to have died in that calamity. With those words, I'd like to thank you, close the session. We have to go for lunch. Thank you very much.
Farhan Saab and our distinguished panelists, may I request you to please come together for a group photograph before we wind this up. In the center stage, please. Thank you. Ladies and gentlemen, after these soulful insights and a lot of food for thought, it's time for actual food. Thank you to our wonderful panel, and maybe have a big round of applause for the second session coming to conclusion. So we've spoken about resilience, disruption, and efficiencies. We are going to put that to test because unfortunately, in the interest of time, we'll have to squeeze the lunch session to about 30 minutes. So let's see that you guys will be able to make the most of this and see you back here in 30 minutes for our third session. Thank you very much. By the way, the lunch is served by the pool side. Thank you. economy doing their business, going about their livelihoods in a certain way. If you're inspiring change, is it going to be truly inspirational? Is it going to be fear-driven? Is it going to be change or be left behind? What is going to be our mantra? And then more importantly, who and how do we position ourselves to be the answers for today and the coming tomorrow? Are we looking at the bottom of the pyramid, or are we truly thinking about a huge social behavioral change? Let's delve into that. And of course, when it comes to technology, there will be skeptics in our society. There will be those who will step on it, but with a lot of caution. They will have their fears, they will have their doubts. So how do we address them? It's evolution along the way. We are not working towards a desired destination. We're all learning along the way. So as we begin this session, our first speaker will perhaps be taking up the theme of transition to a digital economy, a case for national digital policy. Many have actually alluded how our policy framework needs to evolve further. As we learn from the counterparts around the region, as we look at case studies from around the world, what is in Pakistan's best interest and how do we drive it forward? Our speaker, ladies and gentlemen, is a professor of practice and a co-director of the Center for Financial Technology at Imperial College Business School. He has also served as the chairman of the Center for Responsible Leadership at an advisory board member. Previously, he was the chairman of Citi's Institutional Client Group until June 2022. Please put your hands together to welcome our speaker who will be addressing this theme, Mr. Naveed Sultan.
Thank you. Thank you very much for that kind introduction. And I'm delighted to be here. And I really thank PBA for this opportunity to share some thoughts with you. I want to share a perspective as to how do I see the world, the complex transitions is going through, driven by digital revolution, geopolitics, socioeconomic factors, climate, and the challenges and opportunities it presents to us, be it a national level or at a global level, and how do we need to respond from a policy formulation and implementation point of view so that we can create an optimum societal and economic outcome. And hopefully, it will resonate with you. Throughout history, our world has primarily evolved due to the interrelationship of these three elements: the society, economy, and the financial system. It's been a story of push and pull. When the society and economy evolves, new needs emerge. It spurs the financial system to adapt and respond. And likewise, when you have innovation in your financial system, such as payments, to give you a very simple example, it opens up enormous economic opportunities for the society and for the economy. This particular relationship has served us well over the years. However, of late, we are seeing significant stress on this relationship. It's becoming increasingly more tenuous, and there is a clear drift between these three elements. As a result, we are seeing very large socioeconomic fractures in the societies. We are seeing the erosion of differentiation or distinction between value and values, and it does not bode well for the future. And therefore, I think what is important is that how we really think about resetting this relationship. And the manifestation of these two things I talked about, the deep socioeconomic fractures, some of the earlier speakers have spoken about it, is illustrated on this slide. We continue to breach the social foundation and the ecological ceiling of our world. If you look at the image on your right, you will see two blue circles. The inner circle is what is called social foundation or the basic needs. I think Mr. Asim talked about it, which is really your education, health, employment, housing, things of those nature. The reds within that tend to suggest that that percentage of global population is falling below the social foundation, which by implication means they are becoming increasingly marginal and therefore being excluded from the mainstream economic and financial activity. The outer blue circle is what is ecological ceiling, natural resources. We are consuming them at a rapid pace, much faster than how they are being repleted. And those reds outside give you the message that we are really breaching that ecological ceiling. So as policymakers and business leaders all present in this room, we need to devise approaches which allow us to operate in this space between these two blue circles, which is above the social foundation and below the ecological ceiling. Now, to put some math around it, in the last about 50 years, thereabout, the world GDP has grown by almost 15, 16 times. The per capita income has grown by 9 times, and I think naturally, some of the earlier speakers talked about the growth in population, and that's why per capita income is 9 times versus the global GDP about 16, 17 times. But this particular progress actually masks some very disturbing reality. The global 10% of the world population enjoys 52% of the income and 76% of wealth. The bottom 50%, only 8.5% of income and 2% of wealth. Now, in my view, this kind of inequality is not natural, it's not inevitable, it is actually a design failure of an economy and a society. In terms of the distinction, the erosion of distinction between value and values. So Mark Carney, the ex-governor of Bank of England and Bank of Canada, has a very good example in his book, Value Within Bracket Values. He compares Amazon as a business with Amazon rainforest. So the markets today value Amazon about $2.5, $2.6 trillion, which tend to suggest that it's a successful business model, platform business model, and it's likely to remain so in the future. So $2.56 trillion. But the market does not put any value on Amazon rainforest unless we clear it and start, let's say, soybean farming or cattle farming, and does not consider the impact it's going to have on the climate and the biodiversity and all the rest of it. So the question becomes, what do we do about it? How do we reverse or address some of these challenges and leverage the opportunities? I think we have a very unique opportunity to reset that relationship. And why do I say that? The reason I say that is that we are in the midst of fifth industrial revolution, which I relabel as digital revolution. It has enormous potential to transform pretty much every aspect of our society, our economy, our business, pretty much every sector of our business. Mark Twain famously said, "The history does not repeat itself, but it does rhyme." So in order for us to shape the future, we need to study the history. So since 1760, there have been about 5 industrial revolutions. Some call them 4, but I think it's the 5 industrial revolutions. A new industrial revolution comes into being when the previous one start waning in terms of its economic impact and start creating challenges and problems for which it does not. So the other thing to notice here is that all 5 industrial revolutions, all these revolutions have 3 important common elements. They always start with the advent of a new technology. There is always a cheap key input into the revolution, which fuels it, and always new infrastructure emerges, which allows the new economic opportunities emerging out of that revolution to get access to the markets, which were inaccessible before the revolution set in. So take the example of second revolution. So steam-driven machinery and processes were invented. The input was cheap coal, and the railroads allowed for distant access, and that naturally creates more economic opportunities, extend your markets for your products. The 5th industrial revolution, which is digital revolution, is unprecedented. The range of technologies which have come into being. The cheap input is your computing, the cost of computing, which has been going down dramatically over the last few years. And today, if you have an idea, you have a laptop, you have few thousand rupees or dollars, you can launch a new idea, new business, and the world is your domain. And why is that? This new infrastructure is your internet. We've been using this expression for many years now, but it has dramatically changed in its capacity and its functionalities into Web 2 and Web 3. Now, while this is the opportunity, but what it needs is a forward-looking, systematic, and policy-driven approach, not an ad hoc approach. So how do we think about that? We are very familiar with these 2 tools of managing our economy. One is fiscal policy, and the other one is monetary policy. It has shown a lot of stress, a lot of constraints in managing the transition of this complexity. You look at fiscal policy, the global debt is about 3 times the global GDP. And Mr. Asam talked about our debt servicing as far as the Pakistan is concerned. The shadow economy is about $25 trillion globally. The challenge is how do you transition it into a formal economy? Transmission lag, when you execute a fiscal initiative, what is the actual impact eventually? Lower economic multiplier, the same thing. And of course, crowding out the private investment. And again, I think Dr. Asam, if my memory serves me right, said that we have a very high debt servicing due to the public sector debt, and that tend to crowd out the private sector. Monetary policy, in the last 25 years, 30 years, we have seen negative, 0 to very high interest rates. And over-reliance on interest rates prevents you from structural reform, particularly at a time when you have the transition of the nature we are talking about. Builds up asset bubbles, debt accumulation, transmission lag, and quantitative easing, which has been an initiative used very casually, I would say, or very aggressively in recent times, lead to economic inequality. You saw these numbers earlier on. The 10% of the world's population, who have about 76% of the wealth, they tend to become richer because quantitative easing tend to inflate the prices of assets. So the question becomes, where we are today and all the problems we are talking about are to some part attributable to these two. How do we move forward? I submit to you that the third pillar or the third tool, when the problems are so profound, we got to think about new approaches and what I call digital policy. So digital policy complementing monetary and fiscal policy needs to institutionalize the way we have institutionalized monetary and fiscal policy. And why do I say digital policy is important? Because it expands your and grows your formal economy, improves the efficacy of monetary and fiscal policy. And why do I say that? Because your transmission mechanisms become more transparent, more targeted, and there is not much of a wastage on the way from when you execute those initiatives on the monetary and fiscal policy. You know, Aurangzeb gave a statement, I think this morning and also in the press, that we can't afford boom and bust. In a digital economy, when you have a transparency of financial capital and commercial flows, your ability to manage your economy and mitigate the risk of boom and bust increases. CBDC, digital assets, I'll talk about that. The programmability of that actually helps you managing the economic cycle much better. Opportunity to transform your current businesses, industrial sectors, and I think Dr. Kamal talked about the transformation of the financial system, emergence of new industry, financial inclusion, and ESG, by the way, doesn't have to be a separate, discrete, a peripheral notion. It can be actually embedded into your digital policy. Okay. Now, if you put the monetary fiscal policy and digital policy side by side and compare it to across 5 key dimensions, I will not talk about monetary and fiscal because it's well understood, but you will see it's very complementary. So the goals of the digital policy is growth, financial inclusion, broadening of the economy, so on and so forth. What are the tools? Is your infrastructure investment, enabling regulation, open access, standards, interoperability. What is the actual nature of it? You can create a combination between the centralized and decentralized. You need to have a body in the government who is responsible for developing it and responsible for its execution. And finally, of course, considering the nature of the global digital markets, we need to connect ourselves like we connect with the, some of the global bodies in terms of as far as monetary and fiscal policy is concerned. Now, how do you actually create digital policy? Now, when I talk about these concepts, they are not academic or theoretical. There's a lot of research behind it. And when you have a phenomenon of this complexity, you need to bring some coherence, some method, some framework, so that you can develop a roadmap and execute against it. So what's your vision as a country? You want to be an innovative economy. You want to be a sustainable, inclusive economy. Digital ministry and governance. Policy implementation, what's your roadmap, and how you actually gauge your success, the KPIs and all that. Underneath that, you essentially can capture all the initiatives, 4 boxes. Your infrastructure investment, fairly self-explanatory, telecommunication, banking and payments, digital adoption, which is different skills, digital literacy, SME, tech diffusion, service innovation, both at the government level, public and private sector coming up with new value propositions. And of course, the final one is really trust, because increasingly you're moving from a physical world where you can actually look at something and verify its integrity or authenticity to a world which is completely invisible in many ways, and therefore you need to have a trust and confidence in what is happening. And underpins that is public and private partnership. So this is a framework which is simple, very effective. Many governments around the world are using it, so I thought I'll just share it with you. An effective digital policy also aligns all the economic actors in a society and economy, which is absolutely critical. So the four economic actors are your government, corporates, businesses, financial institutions, because it cuts across the entire society and economy, being identified as a separate sector, and households. The government's policy, which I talked about, infrastructure, digital ID, which I know in Pakistan is Nadra, and all the rest of it, then the corporates and businesses respond because of their own economic incentives, leverage that infrastructure and policies, deliver new solutions, monetize these new technologies, and create economic value for the economy and the society. And my earlier point about this relationship between the financial system and economy and the society, financial system responds, adapts, supports that transition to a digital economy by coming up new solutions. And many times it's not just a response. Financial system also tend to lead the economy and the society because of its innovation, because it underpins your entire economy and the society. And of course, household consumes it. The other enterprise participants also consume each other's services, but household play a very important role. And in all of this, ESG can be embedded into it as opposed to a separate and discrete. Now, technology is a great leveler, provided we have the right approach. So on this slide, what you're looking at is average of the developed markets across four important dimensions or measures of a digital economy: your internet penetration, bank account penetration, government service, and digital skills. There is a significant difference between the average of developing and developed. However, there are countries who are leapfrogging the traditional development cycle by the right digital policy. And we talked about Malaysia today earlier on, and they are actually joining the developed markets. Two excellent examples you have in front of you, India and China. Ray Dalio, who's run the largest hedge fund in the world, tells a story that about 40 years ago, he showed an electronic calculator to a Chinese official. And that Chinese official was so impressed, he couldn't believe that there is an invention of that nature. And look where they are now in 40 years, and they have really accelerated through the traditional and bypassed the traditional development cycle. And I think Pakistan has a similar opportunity. Now, where are we in Pakistan? There is an unfortunate bit and there is a fortunate bit. The unfortunate bit is we are 120th out of these 146 countries according to Cisco index, which is made up of these 7 dimensions: basic needs, ease of doing business, technology, and all the rest of it. The fortunate bit is it gives us that much opportunity if we get our policy and our approach right to it. Now, let's come to the financial services, and I think Dr. Kamal talked about it. You look at every function of financial services today, it is being disrupted. There are foundational technologies, which, one of the earlier slides I said, those are being leveraged to create solutions which cuts across every function of banking. It is being used. It's also, the incumbents are working on using those technologies, so are the fintech startups. Just to give you one example, and which is this company or a fintech in UK by the name of Revolut. They picked up one slice of the value chain, cross-border transfers, but the selling point is we're going to give you the best FX rate in the market. Just think about it. And they created a business which is today worth $47 billion. And now they got a banking license, and they're going to grow into a full-scale, full-licensed bank. The point being, because of the technology, they can come into any small sliver of your value chain and then grow from there. And the markets are prepared to reward that because it does have a semblance of the network effect. So anyway, I thought I'll share it with you. Now, this is an index which we built with Imperial College, City and Imperial College, and it tends to track about 100 markets around the world and their transition of their financial system to become a digital financial system. Its evaluation is based on 4 pillars, which is institutional support, infrastructure, solutions, and adoption. The countries are actually clustered in 4 groups: incipient, emerging, in transition, and materially ready. And Pakistan is unfortunately at the incipient. Again, opportunity is very significant. So as the countries execute against those 4 pillars, they move up the index. A 5% move in the index creates enormous benefit for the economy and for the participating countries. So financial inclusion of 220 million people across those markets, depending upon how well they are executing, but it's a collective aggregate 5% move upward on the index, $1 trillion expansion in the formal economy, tax collection up by 100 billion, significant reduction in your operating expenses, so to speak, be it in the public sector and private sector in terms of disbursements, and share shift from the informal economy into the formal economy, which I talked about, a $25 trillion at a global level. Now, Aurangzeb talked about CBDCs. CBDC is a phenomena which is inevitable. It is going to happen simply because it's a cornerstone of the digital economy and digital financial system. And this is an aggregated view of the central bankers in the developed markets and developing markets for retail CBDC and wholesale CBDC. Retail CBDC simply is where the CBDC can issue directly to the consumers, and the wholesale is where it goes through the financial system, like the banks. Generally speaking, they were favorably disposed towards CBDC based on this reasoning. Improves the financial stability, monetary policy implementation, my earlier point of improving its efficacy, financial inclusion, and similarly. Now, the developed markets generally tend to score higher, meaning they have a greater motivation to go into CBDC, and it's very logical because their financial system in emerging markets is not as advanced as would be in the developed markets. Okay, so now you can see the actual result. This is as of June of 2023, 130 countries, 11 countries have already launched CBDC, pilot 21, development 32, and you can look at this, that this thing is moving in a great pace. Now, a couple of more slides if you're just getting anxious about time. Oftentimes, we talk about these things in bits and pieces. So I thought I'd pull the whole thing together on one slide. What are the building blocks of the future financial architecture? So you can break that into infrastructure, enablers, and then client-facing. People around the world, including incumbents, are using some combination of these, depending upon what they're looking at, which part of the value chain, and they are developing new solutions, and they are developing new offerings. And within that is obviously economy and society. In an ideal world, this is how your financial system should look like. There is a range of participants, meaning there is a competition. There are fintechs, there are techfin, digital banks, incumbent banks, offering complete range of services, retail, investment, business banking, lending. And there's couple of common important attributes. It's fully integrated, it's interoperable, and therefore your capital, commercial, and financial flows are fairly visible to the policymakers and business leaders, and therefore they can make more informed decisions as to the policy as far as their strategy is concerned. Different countries, depending upon their local context, are having a go at it. They're approaching it from different directions. But I think eventually the direction is that can we get to this ideal state? Finally, Mark Carney said that we must recognize that a new economy, a new world, and new demographics demand a new financial system. I mean, you heard Dr. Kamal that the financial services will not be what it is in 10, 15 years' time. So this is exactly the point. The new finance shall be developed for new economy and society, not in isolation from it. And I think that is the opportunity for us to reset the relationship between society, economy, and the financial system. Now, as far as Pakistan is concerned, in my humble view, financial system, it is important in pretty much in every economy around the world, but I think it's even more important here in Pakistan because I think it can lead the way into the next phase, the entire economy and the society. And finally, I remember a saying that not all time in life is created equal. Sometimes the life serves up unequal moment, which count more than the others. And perhaps this is that moment for Pakistan. And one of the evidence of that is that PBA has pulled together this get-together and coming up with a unifying narrative and obviously supported by some very concrete and objective suggestions. So I commend you for that, and let's try and make it count for Pakistan. Thank you. Oh, thank you.
Thank you very much, Naveed Saab. We are going to move on to our next speaker, and I understand we are delayed and we are behind time. So once again, my humble request to our speakers and our panelists to please be mindful of that. Our next speaker, ladies and gentlemen, is a highly accomplished executive leader with over 20 years of experience in digital businesses. He currently serves as the Executive Vice President, Head of Digital at Mashriq, leading the bank's digital channels and agile operation model. Please join me in welcoming the Global Head for Digital Banking, Mashriq Bank, Mr. Corey Thompson.
Thank you for the warm welcome. I am humbled and honored to be presenting here today. Thank you for the opportunity. I'm also a little bit intimidated based on the quality of the speakers that we've seen so far. Once again, my name is Corey Thompson. I'm the head of digital for Mashreq Bank. Some of you probably know Mashreq is one of 5 digital bank licensees here in Pakistan. And we're very pleased to share that we've recently reached our pilot phase of operations. So we look forward to progressing the journey and joining you in the real banking world soon. I was asked to speak about the evolution of payments and adapting to a digital economy, as the title suggests. The one condition on me coming here as an Australian was I wasn't allowed to talk about cricket, so I'll leave that behind. It's probably a bit too soon for that joke. But thinking about this topic in a little bit more detail, actually when I think about Pakistan's position in time and space, or rather in time and geography, relative to what's happening in Asia and also what's happening in the Middle East, actually this is kind of more of a back to the future of payments. So when thinking about some inspiration for this talk and how to get started, like any good speechwriter, I turned to ChatGPT, of course, to think about what that back to the future of payments in Pakistan might look like. So I guess this is your version of Michael J. Fox and a DeLorean, but we will get to QR codes in a moment, which is part of the story. So over the next 20 minutes or so, I'll take you on a little bit of a journey looking at the evolution of the payments landscape in China, India. We'll touch on Singapore and Hong Kong. We'll finish in the UAE. But we'll start just briefly with the situation here in Pakistan. Obviously, this is your territory. I'm not going to tell you what you already know. But I think as I've sat here for the last few hours, I think actually listening to the speakers, this has been leveling up nicely to this conversation. We've talked about the state of play within the banking industry, the broader financial and macroeconomic environment, some of the challenges around innovation and disruption, and of course, when we come to talking about this topic, Rust is obviously a very significant part of the ecosystem which we're witnessing here. So, since inception, Rust has done about 850 million transactions. It has about actually 200 million of those in the last quarter or so, according to the State Bank of Pakistan quarters. So we're seeing an acceleration in this, but it's still only 20% of the, well, when we look at transactions overall, 87% of those are digital, but only 27% of those are represented in value. So we're still seeing a lot of money on the sidelines. There's still over about $100 trillion worth of value that's making its way through bank branches and through branchless banking agents. So as of today, the slide here looks at the Rust adoption in terms of IDs. You're at about 40 million as of today. But given that what's at stake, given the size and magnitude of this, there's a lot of ground to cover. So what can we learn from what's come in countries like China and India and Southeast Asia, and what are some of the lessons we can reflect on here? So over the course of the next few slides, I'll share some numbers. I won't talk through them. These are from the Global Payments Report. The numbers you see on screen are in terms of value, not volume, but really just to give you a shape of how the different payment landscapes look across these different markets. Now, in the case of China, obviously, it's the second biggest population, obviously, to India. It's number 2 in POS volumes behind the US, and it's the number 1 e-commerce player in the world. But the payment landscape has really transformed here, and I think what makes China a bit different from the other examples we're about to talk about is this was privately led. So Rust and the other examples we'll talk about will be more government-led, but this I termed pioneering through necessity, that there was no government rails at this particular time. So if we start right back in 2011 with Ant Financial, who really pioneered with the introduction of QR code payments. So here we are talking about QR code adoption in 2025. This is already 14 years old. And when we look back here, by the time that they launched in 2011, By the time we reached 2018, 83% of all payments in China were already digital in that 7-year horizon. It's phenomenon. I think what's also interesting to recognize about Alipay, so it started off, some of you might know, with Taobao, e-commerce player, so it's serving electronic merchants. Payments were a natural extension of that. But then it started to build out its own ecosystem, and we've had comments about ecosystems before. In 2013, it launched Weibao, which was effectively a money market fund. What they noticed was that in their digital wallets, there was residual funds in there. How might they be able to attract and retain those funds? And between the launch of Weibao in 2013 to 2017, it became the largest money market fund in the world. So it shows you what scale economics can be here as well. WeChat, also the other predominant player, started its life through social media means, email in 2011, then moving on to social media in 2013. But really 2017, when it launched its mini app program, did it really go to the stratosphere. So some of you might know, effectively WeChat is an ecosystem where small businesses and large businesses can set up mini app programs to be able to effectively have a digital outlet within the ecosystem for them to operate. And naturally, payments is the glue that links all of that together. So if you look at this evolution where obviously a very strong digitization of payments in digital economies, e-commerce, social, gaming, these things are already on digital rails, there was still a gap in China from online to offline. And QR code once again came to the forefront of this and was pushed very heavily by both Ali and WeChat in driving adoption for offline merchants. In fact, an interesting story in the early stages of adoption, these two players would go out and offer free internet to small merchants on the basis that they connect to their QR code payments. So solving a problem around internet connectivity and at the same time connecting merchants to payment rails. So in today's landscape, the payments landscape in China is dominated largely by Alipay and WeChat. They together control over 90% of all payments, and cash represents less than 10% of POS payments in China today. In fact, if anybody has holidayed in China, you know how hard it is to actually pay cash there. It's almost impossible in many cases. So when we reflect back on the lessons learned, obviously we're talking about a significant market. Scale economies are here. These are both private players, so they're running businesses. They were e-commerce businesses, they were social media businesses. These have network effects. These brought in other users and connected other users to payment rails. And I think finally, we can't underestimate the simplistic beauty of the QR code. A static, simple, visual identifier that allows you to make a payment instantly rather than having to think about and exchange complicated bank account numbers. From a merchant, I can simply just print this QR code, put it in my stall, and I'm on payment rails and I'm receiving money instantly. Just a quick aside, because we'll talk about QRs a little bit today. Some of you might not know, QRs were invented in the 1990s by the Japanese. So they were already around nearly 15 to 20 years before Alibaba caught on, but they were invented to solve manufacturing efficiencies. When you scan a linear barcode, it can only hold so much data. It takes a while for scan. The error rate was high. So it was invented as this highly efficient way to replace regular barcodes and carry more data. But today they serve a very, very different purpose. Moving on to India. And obviously, we'll be talking about Unified Payments Interface, or UPI, which essentially is an instant money or instant transfer service that connects the country, being able to go from account to account, peer-to-peer, peer-to-M, bill payments. I think it's fair to say that it's hard to overstate how much UPI has transformed the Indian landscape, financial service landscape. It's made payments acceptable for those previously excluded from formal financial rails. And UPI today now drives 84% of all digital payments, and that equates to about 16 billion transactions per month. And to give you a sense of the growth and the speed of adoption, there was a 4x increase in growth of UPI between 2021 and 2024. And as we've seen this adoption grow and it's changing shape, we're actually seeing now merchants take up the fight. There are over 30 million merchants registered through UPI, and the growth in P2M is now outstripping P2P, growing at about 67% per annum. So when we reflect, and I know this is an interesting topic, a few people have asked me about this one because of the similarities with this market. And if we compare UPI to RAS, for example, what are the similarities? Actually, the success of UPI isn't just about UPI alone. There are three factors that are really underpinning the success. Some of you might be familiar with the JAM Trinity. So these are the Jan-down accounts. So these are entry-level, low balance, zero threshold accounts, very simple, targeting the underbanked or the unbanked. Very similar to your Asan accounts. There is the Aadhaar digital identity service, the ability to be able to have everybody's record in a digital reference, being able to use that as a way to KYC, the way to authorize, the way to connect to payment rails, not dissimilar to your Nadra. And finally, mobile. It goes without saying. I don't think we can underestimate the significance of mobile adoption, but not just mobile, low-cost devices, and the rapid expansion of mobile broadband. So now we've got digital rails that we can run payment rails on. We have financial infrastructure that allows even low socioeconomic segments to get access to simple financial means, and a faster payment rails that can connect it all together. And then obviously overlaying the digital identity to allow bank account opening, to validate payments, to create IDs, to connect this together, as these three things have really been the catalyst to drive payments in India. You can see here digital wallets, the number at the top actually includes UPI payments in here. It's significant. I think finally, just before I switch onto the next market, it's worthwhile saying, off the success of what we've seen with UPI, the India market is now expanding globally. We're seeing interoperability with other markets, particularly around QR code payments. So potentially, as a UPI user, I could pay via a QR code in Singapore, Bhutan, the UAE, I think in some cases, and I'm also hearing France and Sri Lanka as well. So we're starting to see global mobility of this as a payment rails. There is also interoperability for cross-border remittances with PayNow in Singapore and UPI. And if you start to think about this further in terms of remittance, what would it be? What sort of opportunity does it unpack when you can have foreign workers being able to remit instantly, potentially free, back to their mothers, fathers, brothers in their home markets? It changes the landscape on this quite considerably. I'm going to move fairly quickly through Singapore and Hong Kong because they have similar characteristics. Market sizes are similar. Hong Kong a little bit higher on the spend side. You'll see in the profile of the spending, the shapes are quite similar. Both markets quite mature, have strong banking systems, very well banked populations. Not really a big problem to solve for here, you might say. But both of these really were seeking to modernize their payments landscape and promote innovation and competition. And so to do this, you really need a ubiquitous, free, instant payment solution that helps to connect up the disparate pieces, the bank accounts, the wallets, the stored value cards. They also wanted to move away from the complexity of bank accounts to the simplicity of proxies. Give me your email address, what's your phone number, show me a QR code, I can pay you instantly. And of course, like we saw in China, introducing QRs to remove friction and cost for merchants, particularly smaller merchants. And in the case of Hong Kong, I think a slightly more medium-term aspiration to have interoperability with China on QR code payments as well. One interesting thing on a story, personal story actually, when I was in Hong Kong, I lived there during COVID. It was a particularly tough time. COVID had a very deep impact on the economy. And naturally, the government sought to add some stimulus to promote spending. However, the problem statement that they had was, in previous stimuluses, they would push money, funds down through bank accounts and it would get stuck. The Hong Kongers would simply save the money, it wouldn't make it down to the real economy, you wouldn't feel the second and third order effects of that. So during COVID, they did something quite remarkable, which started to tease the idea of programmable money. They deposited money directly from the government into one of 4 wallets, Alipay, WeChat, Octopus, and there was another one, Tap and Go. So it didn't come through banks, it went straight from the government into these wallets. The money there could only then be used at certain merchants that supported these wallets, so it was channeling down to the lower merchants, and it had to be spent within a certain time frame, otherwise it would expire. So this wasn't blockchain, this wasn't a CBDC, but it was the first kind of practical use case of programmable characteristics of money. The government had the objective of making sure the money hit individuals, that those individuals then channeled that into merchants, and that happened within a certain time frame. And I think that was a very fascinating thing to watch, and I think that it bodes some interesting developments for the future of money. Oops. Finally, back to the UAE, back to Mashreq territory. A smaller market, but as you could see on the slides previously shown, a mature market relative to many of its emerging market peers. But it's been late to the game. I think this is very UAE actually, sort of come late and then leapfrog. So the bank introduced the instant payment platform in 2003. It was one of a 9-pillar program that the Central Bank of the UAE had to transform its landscape. And essentially, it followed the same path as we saw with Hong Kong and Singapore, being able to give free instant payments, to be able to connect wallets, to be able to use QR codes. The customer-facing brand of this is called Ani. Some of you might be familiar with it. There is also a government-sponsored app, an Ani app, where I can go and I can shift money between accounts using the Ani app without having to visit my bank. But I think that one of the main reasons, the catalyst with the Central Bank of UAE was a much bigger desire around open finance and open banking. They recognized that to support the future ambitions of the country, and actually we are now living with regulations around open finance in the UAE, of which Ani is the mandatory payment rails that underpin that. So as you look further out and you think about the aspirations for this economy, for this banking sector, the interconnectivity around that, and particularly any aspirations around open banking or open finance, instant payment rails are hygiene. So just to wrap up, 5 takeaways, I guess, as we reflect on this in the context of the Pakistan market. Solve problems. It's a very simple statement, but it can't just be a faster pipe. This isn't just about having something that runs faster than the previous option. There needs to be more to it. It needs to connect us with some upstream or downstream real problems with the human side of this equation to get adoption. Merchants matter. Over the course of seeing different adoptions in different markets, we've seen some start with P2P, But escape velocity typically doesn't happen until merchants come on board. And I think when looking at Rust, thinking about the pathway to merchants and driving merchant adoption is going to be a significant part of that. Building an ecosystem. On one extreme, we had the private enterprises of Alipay and WeChat. They were ecosystems in their own right. But then when we look at the success of UPI, it wasn't just about the payment rails. It was about the other pieces of the infrastructure that sit around that enable it and drive compounding value. And in fact, when these things connect, then that becomes a new set of rails for an ecosystem, for smaller fintechs, for banks, for other institutions to be able to come on. And as you bring more participants on, you get this network effect that we talked about earlier. Globally minded, and I think about this in two directions. Of course, we're dealing with largely a domestic challenge today, but how might that interconnect with the rest of the world, at least with the rest of the region? How might we connect Rust one day in the same way that UPI is connecting with other markets from an interoperability perspective? But also looking at the inward side of this, how can we connect with remittance rails so that the Pakistani diaspora can easily get money to their loved ones, to their families, instantly and transparently when it needs to be. And future-oriented. While we're solving this problem right here today, it's always good to kind of be a few steps ahead and think in the direction of where things might go. I use the example of programmable money in Hong Kong. With CBDCs have been talked about, crypto have been talked about. I won't discuss them here, but when you think about, particularly in the remittance landscape, and I'll share another story. Living in Hong Kong, we had a helper that lived with us. She was Filipino, and I would often speak to her about her family back home, and she would go down to an exchange house and often take physical cash and wait in line for many hours to cash that in and send that home. But the problem that was friction enough, but the problem that they faced was when that money went home, that they've been working so hard to earn, they had no control over how it was actually spent. It's meant to be spent on school, on groceries, but in some cases it might not be. And I know of a couple of banks in the Philippines that are working on solutions to enable remittances to come in and be programmed so that it actually, as it's sent to its destination, it can be used for specific purposes that it was intended to. So with that, I will finish. Thank you for your attention. Lovely to be here.
Thank you very much for that, Mr. Thompson. Ladies and gentlemen, digital transformation, a journey, not a destination. But we had some fantastic insights from him. And of course, this is clearly aligned with the decade of the future and the world of the future. As we know, UAE is already thinking about UAE 2031, a decade of ambition. And they are aiming to double the UAE's GDP from right now it is at 1.49 trillion to about 3 trillion dirhams in just a decade. And for that, they are using the best use of it. Some of the insights shared over here give us a sneak peek of the future. But what does it mean for the rest of the world and how we do business? For this, ladies and gentlemen, let's segue into our panel conversation. Our two speakers will be joining this panel, but first and foremost, let me take this opportunity for inviting and introducing our distinguished moderator for the session to you. He's one of the forerunners and visionaries in modern-day consulting in Pakistan. He's well recognized for his contribution, notably in the world of digital and financial services. He consistently spearheads through leadership initiatives, actively participates in economic and regulatory reform agenda, and initiatives pertaining to
financial sector, policy making, and acts as a catalyst, an influencer, and an enabler to stakeholders. Ladies and gentlemen, please join me in welcoming Partner Consulting, Strategy, Digital, FinTech Transformation at PwC Pakistan, Syed Faraz Anwar. May I request our distinguished speakers to also join this panel, Mr. Naveed Sultan, Professor, Imperial University Business School and the former Chairman, Institutional Business Group, Citigroup, and also Mr. Corey Thompson, the Global Head of Digital Banking at the Mashreq Bank. Joining them, of course, we have two other panelists, ladies and gentlemen. A seasoned banker with 36 years of international and domestic banking experience. He's worked in the USA, in Abu Dhabi, in Pakistan, with organizations like the American Express Bank, Citigroup, and the Abu Dhabi Islamic Bank. He's been associated with HBL, Pakistan's foremost bank since 2017, presently serving as its president and CEO. Please join me in welcoming Mohammad Nasir Salim. And last but definitely not the least, ladies and gentlemen, a Pakistani-Australian entrepreneur who returned to Pakistan in 2020 to spearhead My Impact Meter, a tech startup focused on generating philanthropic impact. With a robust background as Global Account Director at Cisco in Australia, she has held pivotal leadership roles across multiple continents, showcasing her global expertise in a 214 billion multinational giant. Ladies and gentlemen, please welcome CEO My Impact Meter, Kawal Chima. Prasad, we are going to hand it over to you. We have about 25 minutes, including the questions. So it's pressed for time, but we know that we are in able hands. Thank you.
Thank you very much, Sidra. We will try to wrap it up within the assigned time, perhaps it'll be a little earlier than that. I'm empathetic to the weight that the other panelists and the speakers of the other sessions are going to have. So thank you very much, Sidra. So first of all, thank you very much, Naveed and Corey, for such fantastic presentations in which you covered the global landscape from the perspective of smart nation programs, which obviously is a very, very timely subject for Pakistan, considering the initiatives which are being undertaken by the government. We have recently constituted or implemented a national act, the Pakistan National Digital Act, which lays down the foundation for some of the enablement in the context of a smart nation program, similar to what we have seen in Singapore or India. Let's hope that is the building block for something of that sort to get initiated in Pakistan. And we will have some learnings from the presentation made by Naveed. And Corey, obviously you have talked about some of the pertinent matters that have been discussed, are being discussed at the regulator level in terms of digitizing the payments, because it has been one of the main pain points for the country for a long time. Now we have seen some, some advancement or some improvement in relation to the adoption of POS, and also in relation to the other electronic modes of payments such as QR. So let's hope that the P2P and P2M suggestions and lessons that you have shared with us would provide some insights for us to follow. So, but obviously in the interest of time, because our two esteemed panelists are here, and I'd like to sort of speak with them, engage with them, and then I'll open the floor for the discussions with all the panelists over here. The audience can obviously ask questions. So Nasir, first, the question is going to be to you. And I think this is an area which has been identified by Zafar when he made his introductory speech, and also by Finance Minister to a certain extent when we were talking about the payments and the kind of concentration that we have had in terms of cash, which obviously a lot of cash concentration is there in the agriculture, in the SME, and in the merchant value chain. And we have been struggling with this for quite a long period of time, Nasir. Although there have been some improvements in this space in the recent past, but obviously, the opportunity is such large that we probably would need to take some concrete measures in terms of digitizing that 9 trillion plus cash that we have in the economy. So I would like to ask you some of the suggestions that you may have for the regulator and the government especially, in terms of how they would like to progress with this, pursue this, so as to make this happen as efficiently and as timely as possible.
Thank you, Faraz, for that question. I think a couple of things. I think the Honorable Finance Minister also mentioned the word war on cash. We've talked about it in various television shows as well. And I think till now, what we have been trying to do in terms of digitization is the incentivization of digital channels, and then that driving a certain level of adoption. However, when you look at the parallel economy, because within that cash, there are chunks of where people aren't financially included in the sector, either through wallets or through accounts. So there is a certain amount of cash in circulation, because of that. A lot of it has to do with the parallel economy. And as Naveed Sultan in his presentation was sharing the global numbers of the undocumented economy, that was roughly about 6 to 8%. In Pakistan, when you look at estimated 40% being in the black, it requires, when we talk about war, it's not just about olive branches, but it is about disincentivizing cash. So really we need to look at, how do we, for example, disincentivize it to an extent where it kind of does a level playing field with the sectors like the corporates and others, which are already paying taxes. So when you do it to that extent, then the benefits of coming into the documented economy become attractive to individuals. I think the other big concern is that if I have been in business as a small agriculturist or as a small SME for the last 20 years, if I start to come into the organized sector, what is going to happen about the last 20 years that I've done business? So I think there has to be some level of collective thought that needs to be put into this predicament if we are to move it forward in a meaningful manner and to be able to make a significant chunk out of it. Theoretically, when you look at it, if we were to eliminate this 100% also, there is still requirement for digitization. We simply don't have enough awareness, enough knowledge, especially among some of the disadvantaged sectors. So a certain amount of cash, and I think if you look at India's stats that were flashed, is going to remain, and that's okay. So I think if we take that kind of an approach with a constructive dialogue across all the sectors, including representatives from the sectors which aren't documented, we do need to have a more pragmatic conversation and put the right mechanisms in place that enable us to go forward. Because frankly, no matter how many sweeteners we do, these two elements will always remain in the back of their minds, and they will continue to avoid this until there is a pragmatic solution on the ground.
I think, Nasir, your point is very valid, because when you talk about India example, a lot of it has to do with the way in which you do it. And while India saw a sudden, reduction in the cash in circulation to about 3% or 5% when the demonetization happened, but it is back to about 11 to 15% when the normalization occurred. So I think a set of measures which are meant for long-term stability are going to probably create the difference in terms of what is going to happen in Pakistan for the digitization of cash. And then over to you, Kamal. Since obviously we know that you've got a lot of exposure in technology and most specifically the emerging technology, and we have been talking about artificial intelligence a lot. both in the context of financial services and also in the context of the areas around financial services, all the different industries that work together with financial services. And you have done work in that area in the past as well. So I would like to ask you about what are your anticipations and your insights as to how is the world going to look like globally and locally as well in terms of adoption of artificial intelligence? How far do you see us, in this race? And more importantly, what are the risks that you envision in this area? And how do we actually as nations should try to respond to those risks in terms of better mitigating these?
Thank you for asking about, I think artificial intelligence is probably one of the most important and disruptive changes, or somebody before me was talking about the Industrial Revolution. It's probably one of the most disruptive revolution that is happening as we speak. And the reason for that is because we're commoditizing intelligence. So previously, when you wrote a program, for example, I asked a program to pick up this phone, I would have to define the whole space, time, engineering, the cause science, everything, and I would have to give it extra instructions to the T in order for it to be able to go and pick up this phone. With artificial intelligence, you just have to set the goal. Pick up this phone. You don't define anything else. So there's very little programming that goes into it. You just give it a goal. And you put that goal, like you said, like somebody said, compute has been, so we know Moore's law, which says that compute power is going to double every 2 years. It's actually been doubling every 18 months. Right now, we have on the biggest chip, we have a 1,000 billion transistors, 1,000 billion transistors. And with quantum computing, we don't know where that's going to go. So you put that, neural networks, in that, you just put this goal. It will do trillions of tries. Whatever works, it will keep. Whatever doesn't work, it will discard. Just like a toddler. When you're teaching something to a toddler, you don't tell the toddler, you don't define that whole engineering. You just ask it to pick up the phone, and it's going to do multiple tries, and eventually whatever works, it's going to learn that. But unlike a toddler, even after successful attempt, the toddler might have still unsuccessful attempts. With AI, that doesn't happen. Once something is successful, it will learn. And then all of the other connected systems are going to learn as well. So unlike human beings, AIs can process all of their memory, all of their data. It can access all of it in a second. It doesn't, like we have to go and see what it doesn't. So, and the second thing is, people often ask me, or people often talk about, AI is still far behind us. But let me ask you this question. Let's say, over here we have banking experts, me being a tech expert, somebody else being the best cardiologist in the world, another person, the best marine biologist in the world, some other person, knows game theory really, really well. Can you have one person who knows and is an expert in all of these areas simultaneously and is able to integrate all of them all at once? I don't think there's a single person on the entire planet. I mean, a person can be expert in 1, 2, 3, very rare people, maybe 4 things, but I don't think 5 or 6 things completely different from each other, there would be a single human being. And AI is able to do that. And AI is able to be an expert in an exponential number of things and integrate all of them together. And that's what generative AI is. In terms of banks, I think this is probably that point where if banks today can learn to leverage AI properly, for example, I'll just give you, JP Morgan Chase has a system called COIN, which is an AI-based contract intelligence system where they were able to, or they can use that system to study 12,000 contracts in a few seconds. That's 360,000 man-hours. Imagine how much that is in savings in terms of dollars. And then recently, we just tested for the real estate agency, but I'm sure it's going to work for the banks as well, where we tested agents that go onto LinkedIn. They automate. So basically, with ChatGPT 4.0, you can now make autonomous end-to-end agents, where those agents can go on to something like a LinkedIn or Facebook and search for leads, search for your potential customers, call them, so they can make thousands of calls at the same time, understand exactly what their pain points are, what their tics are, what their likes are, dislikes are, the way they speak, what their tone is, and so be very empathetic to them, call them, and sell them that real estate service. Banks can do the same. So no human being can make thousands of calls at the same time, but AIs can do that. And not only can they make thousands of calls at the same time, they can, each and every call is extremely personalized because they understand the person they're calling at a very deep level. So that's, that's another way. And so there's so many hyper-personalized services. So right now, the way banks will segment their customer base is, the retail, the corporate, the SMEs, et cetera, et cetera. But there's a bank in China, Ping An, who is trying to now leverage AI to personalize each and every single customer and give them hyper-personalized services. With these agents, that is extremely possible now. So, I mean, mass customization, right? So what you can do in mass, you cannot customize. What you can customize, you cannot do in mass. But what has Netflix done? When you open Netflix, your Netflix is completely different from my Netflix because it uses AI to determine what you like. Similarly, my Facebook feed or my LinkedIn feed or my Twitter feed, any social media feed is completely different from your feed. And that's because they leverage AI to make it extremely. So if banks can figure out a way to do that, they would have an extreme competitive advantage. Now, talking about the risks that you said, the thing is that this is a completely autonomous system. In the past, whenever you did anything, you knew exactly at what point to pull back, or if it was not properly working or was not doing what it was supposed to be doing, you knew when to pull the plug. And human beings, what did we do in Corona? Like COVID, 100 patients, we didn't care, 1,000 patients, we didn't care. But as soon as 100,000 patients, everybody cared. And there was a global pandemic declared. Similarly, in the nuclear race as well, once nuclear bombs were used, everybody then cared. Their nuclear treaties came about, and people. Now countries are very, very careful, and the whole thing is controlled. Unfortunately, when you commoditize something like intelligence, you might not have that chance. You might not be able to pull the plug, let's say. So in a few years, not a few years, a few months ago, there was an open letter, which was also signed by Elon Musk, which said to halt all AI, this chatbot production for 6 months. Only 6 months, that letter called out. And that was because we don't know, we had decided we would never put AI on the internet. We would never let it create its own agents, and simply because it can replicate itself. If I ask it to, if I give it a goal, what's to say what the sub-goals will be? If I ask it to pick up this phone, there can be multiple sub-goals. I will never be aware of them because I'm out of the learning process. So the sub-goal could be self-preserve. At all costs, self-preserve. And that sub-goal could mean anything for us, right? And from a bank's perspective as well, the risk to consumer data, at what time, what the goals are going to be, what it's going to decide based on what those, so the classic, just for your interest, the classic paper theory of AI, which says the paper conundrum, which says, this is what was in the open letter as well, which says that what if the goal is to make paper? So if AI's goal is to make paper, at what point does it cross singularity? Singularity is that point where it becomes AGI, which is artificial general intelligence, and so it crosses. So human beings and AIs are different because it's narrow and we're general. So at that point, it's exponential learning curve. And at what point does it, after a few hours, after a few days, it's going to be billion points, IQ points more intelligent than us. At what point does it realize that humans are made of carbon and paper is also made of carbon? And so at what point will it start using all of the carbon from all of the human beings to start making paper? And so this is a conundrum which exists. So I mean, these are the risks. But in the short term, just to wrap up, in the short term, AI is inevitable. Banks absolutely need to leverage AI. Huge cost saving, huge new revenue streams, huge new customers. When you're sleeping, you're going to be able to get customers through agents, autonomous agents. And a potential to do mass customization, potential to do latent capacity, potential to create systems that are completely frictionless. But at the same time, at some point, that regulation and that risk assessment needs to go hand in hand with AI development.
Thank you very much, Kamal. I think this is the time for the audience to have some questions from our panelists. I think Naveed is also here, Corey is also here, so any question that you'd like to ask from them or from the other two panelists, Nasir and Kamar, please feel free.
I was hoping that somebody else will ask a question. But this is the third session that nobody's asking a question, so I thought, let me just try and break that myth. My question is very simple, perhaps Naveed can answer this. How do you see the regulatory environment emerging to control? And we were talking about it yesterday as well, Kamal. Maybe Kamal can shed some light on it as well. How does the regulatory environment fit in with this changing world of innovation and AI and all of this? Can this be somehow boxed in through regulation or not, or should it be?
I think, can you hear me? Yeah. I think it's a mixed bag. The regulators, typically, if you look at traditionally, they're always trying to catch up to innovation. And the point I've made earlier, that we have now historic precedent how to shape the future when you have technological developments of the nature we are seeing right now. So I think there is a growing realization and some of the supranational, some of the sovereign entities around the world trying to catch up and shape this thing where you can institutionalize and create the much better impact. So it's not where it needs to be. I think innovation, typically by the nature of it, in the private sector, surges ahead of the regulation. And I think what is important is that we bring them along. So about 10 years ago, we started, Citi and Imperial started what we call Digital Money Symposium, which is now a flagship event in England. Exactly, we bring all the stakeholders together, including the regulators and policymakers. We discuss the issues like what you guys have done here. It's very commendable, so that you talk the issues together and try and come up with the solutions. One final point on that, it's oftentimes when a new technology comes in, it's considered to be very glamorous. But the technology itself does not guarantee success. So I would say technology plus grind, and I think Aurangzeb referred to it, that if you look at the expression of digital transformation, these are two words, digital and transformation. So first you have to reimagine, transform how you do things today, and then you put technology on top. So this rush to impose new technologies on how we do things, the current operating models, they're inherently not compatible. And you see a lot of wastage in the system. New technologies are being deployed, but they are inconsequential.
So, my name is Umaid. Here, sorry. So my name is Umaid. I just wanted to ask one thing here. So currently we have the largest challenge for the payment securities, right? Why are we not leveraging AI to secure our payment channels, payment trails? So there are a lot of ways which we can leverage at this moment, but unfortunately we are not leveraging in Pakistan. So what is the reason behind it?
You're asking me?
Sorry?
So, who are you asking?
So asking is like not leveraging AI
If
for...
it is AI related, I think she's best placed to...
Okay, so HDFC Bank in India leveraged AI for risk assessment, so security and KYC as well, and for its to decide who to give loans to. And like you said, AI, because I mean the traditional way to do KYC is to look at the credit history and to look at what other things which are already documented. However, AI was used, and this is an example which has already been done. AI was used to look at, to do KYC through social media, through the interactions on the internet that that person has had, because they did use that methodology for KYC for new students, new people who were coming into the banking system for the very first time, and for those who did not have credit history for whatever reason. So yes, AI has the leverage to be an additional kind of system in place to work alongside whatever traditional systems exist today for risk assessment, for security, and if you feed it, so in terms of AI, it's garbage in, garbage out. If you give it the right type of data, good data, and if you train the model properly, then the outcomes are very predictable and accurate.
If I may just add a couple of points here. I think Mark brought up a great slide, which was the first one, back to the future. And the future is out there. So I think when you start looking at the fintech world, there's a lot of things happening that can be applied in many different places. Blockchain has been there for a while, but blockchain hasn't become the mainstream yet. I think for Pakistan, we all discussed about the quality, and I think there was a discussion on value and values. So I think what we need to look at is a two-pronged approach. I think Kaval rightly pointed out the right data sets. Today, when you look at the banking landscape in Pakistan, the data itself and having a standard data methodology, classification, I think there is a lot of groundwork that is to be done before we go and look at emerging. So yes, can we use it in one sliver? Yes. But what is it that we can use across the board, in terms of data security, information security? So I think there are, in fact, when you look at the digital frauds that were happening, and then there was a framework that was brought in, and now you look at the digital frauds, those have literally gone away, and what has been left is social engineering. So I think it again comes back to people, process, technology, and looking at technologies which maybe aren't on the bleeding edge or the cutting edge, but for Pakistan, the positioning is at a minimum we need to be fast followers for innovation that has already taken place in different parts or geographies of the world.
Yeah, before I take Atif Saab's question, just Atif Saab, just a second, allow me a second to request, Corey, if you could also be able to shed some light on the same topics, because you have some experience of implementing artificial intelligence in your respective organizations, and then perhaps maybe the use cases that you might have introduced in your organizations might have, might have some correlation with the question which was asked by the participant.
Sorry, could you just repeat the...
I'm saying, could you just take on that question as well?
In terms of AI?
Yes. I mean, for the use case that the gentleman asked
I mean,
for.
it was a very specific use case around securing payment rails, I think is what you were saying. I mean, I'm in no position to comment on that specific question, but my first, just anecdotally, on that, you need to get the foundations right first. The foundations need to be right, and introducing a technology that people don't fully understand on a subject matter that isn't fully grounded, I think has some risks. So there's definitely some opportunity around that, but I think there are some fundamentals that you need to go through first. In the case of Mashreq, a couple of examples where we're using AI. So for example, if you come into our digital channel in the UAE, this is, and you add a beneficiary or you do a transaction, we use risk-based authentication. So we're using real-time AI calculations based on your device, characteristics about how you're thumbing around the device, the nature of the transaction to decide is this a high-risk transaction or not, and put friction into that journey. Another example of where we're employing AI is in our chatbot. So we've launched a chatbot, which we intend to launch here in Pakistan as well. In the UAE, it serves 80 use cases. This is not just a chatbot, it's services. So I can block a card, I can get an account balance, I can do transactions in the chatbot. So this is where we've been starting to adopt AI and how it can move to a more conversational interface and offer 24/7 service from our clients, even down to the point of raising a complaint or checking on the status of another inquiry. So there are a couple of examples on how we use it.
Atif Saab, please, sir.
Thanks. Just a last quick one. Naveed, thank you very much. Very good presentation on your experiences. Really a framework that you presented was could possibly be a roadmap developed towards the policy framework that can be developed in Islamabad. It seems like it's easy, because on paper everything looks easy. In your experience, how difficult is it to actually practically implement this in emerging economies particularly? And since you know Pakistan, what would it take for you to go to Islamabad, and somebody said not Islamabad, but Pindi, and try to have these policies implemented?
Just one flight to Islamabad, I'm happy to. But Atif, I think it's a very, very important question because, you can get carried away with the glamour of these notions like digital and all that. I think the important thing is to demystify what it actually is. And that leads to education and awareness. And I think at a policy-making level, as well as at the business leadership level, around the world, and Pakistan is not an exception, there is a very significant gap. How to strategically leverage this particular phenomena of digital transformation. So there are three. First of all, you have to, like I said, a complex issue, break it into something which is relatable, which people can understand on a piece of paper and say, okay, this makes sense, they are all interlinked, and this is the likely outcome of that. But the problem you're going to run into is typically, out of experience, is the policy fragmentation and lack of coordination among agencies. The second one is your regulatory and compliance barriers. The third one would be your legacy infrastructure, both in the national level and in the private sector. And so I talked about this. So I think the way to start this thing is, there may be several initiatives in a particular economy, but at some point, once the education level has increased among the policymakers, you need to take a step back, take the noise out, look at what is working, and put that into a coherent framework,
and then that should lead to the roadmap for execution going forward, and then you track it like a business. You know, like you do in banking, you want to start a new venture. Okay, what's my strategy? What is my framework? How, as a CEO of Bank Alpha, I will monitor? And how do I make adjustments on the way? What investment do you need? And whether or not these different elements work together well to create a multiplier effect. So just to say that I think the time has come, and there are two phases of any revolution. One is installation, where it starts holding different elements of it, start taking roots, and then is deployment. And I think we are at the initial stages of deployment, and it's just about the time when you start subjecting it to some management and operating discipline, and that is in the form of policy frameworks, executable frameworks, and things of those nature. And then, I went to India many years ago, and I went to the Prime Minister's office to understand how they are looking at this India stack. I was very surprised, pleasantly, that they were running it like a business, monitoring KPI, and it was a good blend of private sector, policymakers, bureaucrats. They had their management reviews, they had their KPIs, and that's how they were tracking the whole thing.
Thank you so much for that, Naveed Saab. Thank you to this wonderful panel. Ladies and gentlemen, can we have a big round of applause? May I request the panel to please come together for a group photograph? Sorry to have abruptly taken over the Q&A, but we're really out of time and have almost eaten away half into the final session of the day. Ladies and gentlemen, we've been saving one of the most powerful conversations for the very end of day one. This is, of course, going to feature more about sustainability and impact. And as they say about a lot of things, although this one is going to be a little risky because I'm surrounded by a lot of suits, if you really want a job done, get a woman to do it. And therefore, in this panel, we see it is generally very, heavy when it comes to the women panelists. Ladies and gentlemen, may I take this opportunity for inviting my first speaker. She heads the Development Impact Team and is responsible for the assessment and management of the impact that BIL has through its investments. This is the British International Investment, the Managing Director and Chief Impact Officer of BIL. BII. Please welcome Maria Smith.
Hi, everyone. Good to see you all. My name is Maria Smith, and I am the Chief Impact Officer at British International Investment, which is the UK development finance institution. I've been coming to Pakistan for over a decade, investing in different projects across the country, so it's an absolute honor to be here today amongst such distinguished panelists and speakers, and also some good friends in the audience. Some good friends I've been working with for quite some time. So I'm going to give a global context of sustainable finance. We've coined this session the global ESG banking revolution, which might sound a little bit sensationalist, but actually I think it's very appropriate. Today we have over $5 trillion that's been invested in sustainable finance. We are predicting that will go up to $28–30 trillion in the next 5 years. And why this is important is that it's a really important tool for us achieving net zero and our SDG goals. So this is one of the key tools that we're going to have to do to meet our sustainable development goals. So we have seen this sea change. We have seen a remarkable inflow of sustainable finance products. And why is that? Well, there has been a number of global trends happening at the same time. You've had regulatory pressures. So in the EU in particular, you're seeing an increase in regulations come in, and we had 3 or 4 new regulations introduced just last year. We're seeing central banks and international lenders like DFIs and MDBs requiring it from their bank partners. We're seeing an increase in physical climate risks. We're seeing an increase, unfortunately, in biodiversity loss. So banks are actually seeing, this hit balance sheets, and they're hitting corporate balance sheets as well. Consumer demand is growing, especially from the younger generation. So these younger generations actually expect to see social and development goals put into their financial products. And investors and shareholders are expecting this. All of this is underpinned by an increase in sophistication in technology and data, which has made it easier to measure, monitor these types of ESG technologies. Now, I'd be sort of avoiding the elephant in the room if I didn't talk about the US sentiment at the moment. We cannot ignore the fact that there is potentially going to be a slowdown in some of these advancements because of the current situation and the current sentiment of the administration. But we feel very confident that it will just be a slowdown. I mean, the rest of the world has a chance to step up. There is momentum in the rest of the continents in the world in order to continue this growth that we've seen. And also, we've been talking to global asset managers and asset owners, and from their perspective, potentially the narrative changes in that the focus will be less on impact, but they really see the financial benefit. Right? They really see this from a capitalistic commercial perspective, that in the long term, we have to focus on these risk management systems. We have to focus on this in order to be commercially sustainable. So very confident that while we might see a slowdown, the general direction of travel will be consistent. So maybe let's just talk about what banks can actually do. What are the actionable pathways in order to start thinking about ESG sustainable drivers if you're not already? I mean, the first and most obvious one is scaling renewable energy investments. So financing solar, wind, and different hydro projects. This is what we're seeing an increase in across our portfolios and across our markets. Decarbonizing high emission sectors. So the shift to green hydrogen, CCSs, the electrification of transport are an increasing subset of sectors that we're seeing financing for. Green and transition finance. We're seeing a lot of sustainability linked bonds, which are quite interesting, and then you can have performance KPIs linked to hitting these types of impact objectives. Important to adopt a good framework for assessing. So TCFD is certainly the regulatory leading disclosures regime, and so incorporating this into portfolio assessments will be key to being able to successfully execute. And we encourage people to think about making their own net zero banking commitments. So aligning portfolios towards net zero goals, putting in milestones, completely understanding that a trajectory towards net zero may not be linear, right? There may be times where you need to do more or less depending on the country's situation and energy dependencies and energy mix, but as long as the trajectory is moving towards net zero, we certainly would accept a journey that's a little bit more volatile. So in order to accelerate the energy transition, banks really have to move from, I think, what is today BAU to incorporating this way of thinking into all BAU, right? So we don't see ESG as one subsector, that should be done by one or two professionals on the side of their desk. What we see is a complete mind shift from management and board. We see a holistic approach. So some of that is financing the transition, some of the initiatives that we just talked about. But also, it's about engaging with clients. How can you work with your corporate client base to decarbonize on their strategies, particularly in the higher risk, higher emissive sectors? Working with the regulator and policy, pushing for subsidies if they're needed, incentives, regulatory reforms, making sure that the whole ecosystem is enabling to affect this change. Investing in the grid modernization is critical. Working with public-private partnerships, so collaborating with governments alongside institutional investors and bridging the gap that's needed for adaptation finance. And we're seeing an increasing amount of innovative financial tools. So blended finance is coming up more. We ourselves are doing more blended finance. We're trying to think about what would we need to do from a risk-return perspective to de-risk these types of investments, to crowd in and mobilize commercial capital. So the sustainable finance market today, as I mentioned, we are sitting at about $5 trillion. Historically, it's been dominated by the EU and the US, with 39% of the market share currently dominated by Europe. But we are seeing an increase in the Asia-Pacific region, and the CAGR actually in this region is one of the best, so growing the most rapidly. Banks continue to dominate the sustainable finance market. If you look at, for example, the green bond issuances, banks are still 30 to 40% of total issuances, so this sector plays a very critical role to achieving these goals. We're seeing product diversification. So green bonds still dominate, but now we're seeing a movement towards incorporating social goals. So we're seeing social bonds that might be linked to gender or to SMEs. We're seeing sustainability bonds, which do a combination of green assets as well as social objectives. And the regulatory support has gone up exponentially and has really helped provide frameworks and policies that make it clear as to what good looks like. You know, we had some headwinds in the last couple of years about greenwashing, and I think actually the regulatory frameworks which provide clearer guidelines and clearer parameters of what good looks like will be important in terms of sort of maturing the market. So here's just a look at the growth of green, social, sustainability, and sustainability-linked bonds. This is just over the last 5 years, but we're now at over $1 trillion in just these types of bonds issued. Again, the EU has dominated historically, but we're seeing a rise in India and Asia and the US and actually also in Africa. So we have been a part of launching a number of green and sustainability bonds in Africa in the last year in different markets, Egypt, Tanzania, Zambia. So you're really seeing an increase of this in a push from the regulators to really mobilize capital locally and internationally into these types of assets. I'm sure everyone in this room knows what a green bond is. It's basically a regular bond with the use of proceeds going towards positive environmental proceeds. I think as I mentioned, the introduction of sustainability-linked bonds has been interesting. We have seen a regional distribution, as I again mentioned, increasing in North America. And I didn't mention China. China are also becoming increasingly active in this space. So what does good look like? The regulators have stepped up. I think in sort of leading the space, we have the green bond principles. So this was launched by ICMA, and they have really been setting guidelines for issuers on transparency, disclosure, and the overall integrity of the green bond market. And they have 4 components to their guidelines. The first is the use of proceeds, so making sure that the funds are allocated to eligible green projects, and there's quite a bit of detail around what eligible means and what best practice is. The project evaluation and selections, so a very clear outline of the criteria selection for projects and how that's going to be monitored over time. The management of proceeds, so you have to be able to track and manage this quite live, and then reporting with up-to-date records. So now we have a clear pathway roadmap for anybody that is looking to issue these types of bonds in terms of what best practice looks like. The EU also has a bond standard, which is one to watch out for because I think it's leading in terms of the sort of the developed market space. But also, interestingly, we've seen the rise of the introduction, I should say, of the global organization called the Climate Bonds Initiative, CBI. So this is a certification for green bonds, and this ensures that all of the things that we just talked about are transparent, are credible, and can be measured over time. So we work very closely with CBI and try to work with our partners to go through the certification process. I think it's worth double-clicking on climate resilient infrastructure. This is a space that is incredibly important, but actually, unfortunately, is not getting much money through the door right now. So for every, I think it's $87 invested in infrastructure, you only see $1 going into climate resilient adaptation and resilience type projects. This is not sustainable, right? It's not financially sustainable. So we're doing a lot of work trying to think about what we can do with our partners to think more about investing in resilient infrastructure. There isn't a lot of data on this. Investable opportunities are harder to find, but we've helped set up a collaborative amongst different DFIs to think through adaptation and resilience and what we can do in this space. And just one case study, in Pakistan, we're invested in Zephyr Power, which most of you will be familiar with, renewable project that, because of its coastal location, is particularly vulnerable to flooding. So we've been working with Zephyr to implement a mangrove restoration program to help them more resilient to these weather shocks. So this would be a good example for us of investing in climate resilient infrastructure. I'm very excited because I'll be going out to see the projects later this week. But we're trying to do similar things across our geographies that are particularly vulnerable to these weather shocks. So some recommendations for banks that are looking to do more in this space on the climate resilience spot. Setting up standardized climate resilience metrics. So can you measure the risk? Do you know where the risk sits in your portfolio? How can you measure that over time? Incentivizing it. So, we've been using different types of rebates. We've been looking at different loan structures where we can have impact-linked incentives to try to encourage people to look at these types of initiatives. We've been increasing our instruments, so blended finance, concessional loans. We've been looking at guarantees, and like I said, these rebate-linked incentives. TCFD continues to be a priority, and I think in this space especially, focusing on public-private partnerships can be incredibly helpful. So I'm going to stop there. We're going to have a longer discussion with the panel later on, but I guess I just want to say that from a global perspective, it is good to see the progress that we've made. It's essential to meeting our SDGs. There is still a lot to do. And so, thinking about how you can incorporate this mindset into, the ecosystem of the banks, from the leadership down through product development through to origination and how you work with your clients is the key to taking this forward. Thank you very much.
Thank you so much, Maria. Ladies and gentlemen, please put your hands together to welcome our next speaker, who is the Regional Managing Director at Acumen, a global impact investment fund. She has a strong background in climate finance, corporate strategy, and international business, with a career that has spanned across North America, Asia, and Middle East. Please welcome the wonderful Dr. Aisha Khan.
I'm here, good. Assalamu alaikum, everyone. Hi, good afternoon. And wow, when I thought I was speaking, I didn't realize I'd be the last in such an illustrious lineup. So congratulations, all of you, for being here and seemingly still awake and energized. I myself have been absorbing so much knowledge that, I feel like my brain is heavier than it was before I walked in, because not only, we didn't have one professor, we had two professors. And then we had multiple other speakers. So it's been a great day so far. And as we go through the next couple of slides and my points over here, I promise you, I'm going to try and add as minimally as possible to that cognitive load that you have. So I just have one point, and that's the one point that will stay through my entire presentation, and hopefully by the end of my conversation with you, that'll be clear. I'm also really mindful of people perhaps kind of not fully being there, so I will be asking questions. Hopefully you'll indulge me and respond as well. So, as Sidra pointed out, my name is Aisha Khan. I am the MD for Acumen in Pakistan, and really I've spent my entire life from a very early stage thinking about one question, and that question has been, what determines success? At the country level, at the business level, at the individual level. As a little kid, I was fascinated by that. When I went off to McKinsey, worked as a consultant, thought through that, ended up studying for way longer than is necessary to come up with an answer. And now in what I do, I try and figure out what it actually means to build successful companies. And the lens I use is capital. And so all of you over here who are looking at allocating capital and the decisions you make, really underneath it all, how do we allocate this capital? What does it mean when you say you made a good investment? What does good mean? Who are your stakeholders? Is it just your shareholders, or does the planet enter into it? So that's really the theme, and we'll be talking about financing Pakistan's climate resilience. We started off, I think the finance minister in the morning referred to it as an existential threat. But here's a group of bankers, and I truly just want to understand from all of you, does it even matter? I think a few panels ago, Farhan placed this question in front of some of the panelists and said, to you as bankers, does it matter? So just a quick show of hands. Do you think climate change, again, we've seen the floods, this is in northern Pakistan, if you can identify this, in 2022. We've seen the headlines. Does it matter to you as bankers? Show of hands. Yes. We'll see. All right, so a lot of shows of hands. And so if you can just shout out, why do you think it matters? What is, anyone, just, I'll hear you. Aside from the heart, let's assume we have a heart, but as a banker, why does it matter? Okay, awesome. That's excellent. Customers suffer. What else? Any other? You need customers too? So, okay, so if all your customers are carried away in floods, that's not necessarily a great thing for the banking industry in general. All right, so we're seeing a lot of the customers suffer. Anything else? Capital is at risk. All right, so lots, and I heard a few around here as well in terms of there could be certain infrastructure consequences. So you're all absolutely right. There are significant ways in which climate change impacts the banking sector, and if you cluster it, it goes into two big clusters. One is the physical risk that all of you guys were referring to, really risk to your branches, to your staff, of course, to your customers. Again, in Pakistan itself, particular sectors are hit. So when you look at agri-financing and you look, due to floods, 45% losses in cotton, losses in rice, collateral, again, supply chain disruption. So there are direct physical impacts of climate change. And then a second set of risks, which we didn't hear of as much, is this cluster called transition risk. And this is the risk coming from the shift overall towards a lower carbon net zero economy. And what that means is banks needing to be more careful in terms of the types of customers they're financing, the types of businesses they're engaging in, their different stakeholder expectations, their regulatory changes that come in as well. And so there's a whole host of reasons why beyond, and I agree, having a heart really helps in all of this, but there is a real business reason for why climate risk is extremely relevant to the banking sector itself. And look, this is not CNN breaking news worthy. This is something that is super well understood, and in repeated surveys, both by PwC and Deloitte, when they have surveyed globally CROs of the largest financial sector entities, they have all named climate risk as one of the main risks they're grappling with and need to find solutions for. So all of this is not new, and the regulatory standards have shifted. I think Maria had referred to a few of these. Just before I came here, I got a call from the climate ministry. And in fact, the additional secretary asked me, I said, oh, I'm going to go speak to, the Pakistan Bankers Association. And he said, well, madam, there's a message you should give them and tell them that I was on the phone with the SECP and the regulations are coming from them. They have to start lending more sustainably and think of green regulations. So as you see over here, locally, your regulations have already been there. The State Bank has had multiple initiatives in place. The green banking guidelines, ESRM manuals, and SECP with IFRS sustainability disclosure standards S1 and S2, which really have pulled in the TCFD guidelines within it. There's an increasing move to actually start embedding a regulatory focus on sort of being focused on climate risks and opportunities equally. There are global trends as well, and a bunch of them are here. I think you're all aware of them. As I was going through the global trends, I had, earlier this year in January, both my 11-year-old and my 13-year-old came to me and they said, Mama, you're doing a climate fund, right? It's the first, and so Trump is here. Does that mean you're going to drop the fund entirely? And I had to stop and be like, well, President Trump coming in and the US moving in a particular direction certainly has an impact on where the conversation is going. Absolutely, no question about it. And since he has come, he has, pulled out of the Paris Accords again. He pulled out the first time he came, and then Biden put the US back in. And so the US is out again, joining 3 other countries that are out of the Paris Accords, which, no surprise, it's Iran, Libya, Yemen, and the US, 4 countries that are no longer there. As you all may know, the Paris Accords are the largest unilateral agreement between multiple countries, 200 signed on, to pledge to creating a healthier planet, lower emissions, and correcting the distortions in climate financing. So from pulling out of the climate accords to, I heard recently he banned paper straws in the federal government on Feb 10th. So a fair amount of movement, but I think that's not necessarily a bad thing. I think what started happening with the US moving out is that there will be a significant more focus on more viable opportunities. What is actually left? I heard from Professor Kamal Munir that because of all of what's happening, enrollment in sustainability-focused courses is coming down. So absolutely, global trends being what they are, anyone who's on the fringes of it and was just dabbling in climate because it was a trend may no longer think it's a trend. But those of us, and I think it's this audience here, who are thinking long and hard about what it means to allocate capital responsibly, what is the real role of capital? And for all of us, as we sit in Pakistan, a country that we keep hearing about is on the brink, has so much potential, as we start building, where is it that this capital can move and have the most impact? So I believe there is a tremendous potential opportunity in climate finance. And here, once again, a quick show and a question from all of you. And Maria did actually, if you guys were focused on the previous presentation, I think she put out areas where banks can actually invest and build in climate finance. So any thoughts on where we can actually, where does the opportunity lie? There's a risk side of it, but where's the opportunity? For the banks to invest in. Okay, that's one of them. Absolutely, renewable energy, solar. Solar, wind, renewables, okay, so that's an energy shift. Anything else? EVs and vehicles, okay, that's an interesting one, and yes, I'll get to that. May not be the biggest opportunity, but we'll hold on that. Anything else? My heart, my climate fund is all focused on agriculture, so of course I'm going to be a big fan of that. I'm like, yes, absolutely. Water conservation as well, again. Yeah, absolutely. And so I think what you all are hitting on are certain areas that even when the dust settles, and when you talk about real opportunity and building strength based on market fundamentals and saying where does demand actually lie. So the first cluster is adaptation finance. And so whoever said agriculture, the reality behind it is, look, floods, heat waves, temperature changes are not going to stop. There are certain sectors that are going to be hit more than others, and those are agriculture and infrastructure. So there is always going to be demand for actually finding ways and investing in solutions across these spaces. There is a critical need, and countries will not stop investing in this. It actually is a matter of national security as well. So this area remains robust, and there are increasing opportunities to start realizing, developing blended finance vehicles to de-risk investments in these areas, but looking again at the lens of what does climate change really impact the most. And in Pakistan, again, I'll talk a little bit about the agriculture potential over here. $90 billion overall as the market size, and so many of you here, I see Amir Saab here as well, and so many are focused on agriculture, growing at 3 times the rate of the national economy overall, and agri-processing being the second largest industry. So tremendous opportunities in here to start building resilient agriculture systems that are robust to climate change and can support Pakistan's population growth, reduce import dependency, and there's significant financial sense here as well. The second would be looking at carbon markets as well. So while mandatory carbon markets will actually possibly see a down, voluntary carbon markets are doing really well. And so there's a significant growth area in this sector as well. Again, looking at reforestation, carbon capture, carbon-backed bonds as well. In this, again, Pakistan's still in very, very early stages of readiness. I sit on the Climate Ministry Carbon Commission, and we're figuring this out. But I think looking at blue bonds and green bonds and innovative financing models is a huge growth area. And then moving to energy efficiency and renewables. I think you all already mentioned it. We have very high industrial energy costs. So here, whether you believe climate change is an existential threat or not, you realize that your costs of energy are extremely high. And so shifting to renewables, that at this point, even without subsidies, can be more cost effective than the fossil fuel alternative, is a massive opportunity as well. And of course, in addition to that, the export compliance requirements, primarily coming from the UK and EU, but another opportunity. And then the final one I've put there is green supply chain financing. And these are all areas that banks have already looked at and analyzed and seen. And as I said, none of this is new. Banks have been doing this. There's a whole list. I could create 15 such slides and put up exactly what different banks are doing to leverage and build on this climate finance opportunity. I'll just take a minute and talk about one that I'm really fond of currently for no particular reason other than the transaction structuring really fascinated me. Does anyone know where the largest wind farm in Central Asia is located? Any of you? Largest wind farm in Central Asia, Central Asia. Very recent, it's coming online this year. The transaction closed in 2022. Any thoughts? Zaraf Shah, who said that? Someone's like, Okay, someone's awesome. Yes, it's a really interesting transaction. It's a $600 million investment. It's the largest farm, the wind farm in Central Asia, developed by Masdar. You guys are familiar with Masdar of the UAE. Will be powering 500,000 homes, also, offsetting 1.1 million tons of CO2 every year. And while DFIs primarily financed it, and this is the usual cluster of DFIs like IFC, ADB, EBRD, JICA, FMO together, who was actually structuring the green loan and coordinating was FAB, First Abu Dhabi Bank. And so not only did they structure a $102 million green loan facility, but they got the facility backed by Etihad Credit Insurance, ECI. And so this is another example, and a really powerful example, because this wind farm is not only creating history in terms of being the largest in the region, but really showcasing how banks can start catalyzing and building and leverage things like guarantee instruments, support, pull in and even have the DFIs pull in capital, structure transactions, and come up with really just amazing opportunities within this sector as well. So I'll leave this up. I'm sure you've seen all of this, lots of money to be made, and despite everything else, Standard Chartered still is making about $1 billion in income from sustainability-focused initiatives. What is to be done? And so if by now I've convinced you that this is an area, I think it starts with the risk assessment and portfolio analysis internally. And when we first started talking about the climate risks and how to think through them, one of the things I keep hearing is we just don't have the ability, the in-house talent, the sort of even the framing required. Plus, it's a lot of work to actually do a climate risk assessment across your portfolios. However, that risk assessment is not only critical right now, it is the basis of so much significant future opportunity that is based on assessing those risks and analyzing your portfolio. So this absolutely does need to be done. Sectoral vulnerability does need to be mapped out, where you have your exposures, what does it mean, as you said, for your customers, your supply chains, what is the bank's overall exposure as regulation keeps shifting and moving towards more and more transparency, S1, S2 standards as well. What does that look like? So this is a little bit of looking inwards. And then there's an aspect of looking outwards and focusing on product development and innovation. So in this, what is it that's strategically most important in Pakistan right now? How do you focus on key areas like industrial energy efficiency loans, whether it's supply chain financing? And then how do you think more innovatively in terms of the products themselves? Can you look at blended finance instruments? Can you bundle technical assistance with the financing? And so as you start doing this, you start building strength and credibility in the space, which is going to remain important. Whatever the micro trends may be, the big trend is absolutely clear. I think we're not moving backwards from actually having climate change be an integral part of how we look at the future and investing decisions. That's not going to shift, and I think banks need to be engaged in that actively. And finally, taking all of this and building up strategic partnerships, not only with the DFIs who have significant depth in structuring and building these transactions and know a huge amount and can support the commercial banking sector in this as well, but also with technical assistance providers, climate data and analytic firms, because fact of the matter is Pakistan's sector right now, whether you look at infrastructure development or particularly agriculture, the two most vulnerable areas for adaptation, the level of sophistication there is still fairly limited. Agriculture is still very informal. You still have mostly SME clusters, and finding them and building them up to be able to take on projects of the size that we were talking about earlier will require the market to build up and also a lot of support from the banking sector. So this is where we'll move. I did say I had one message, and this is my one and only message to you that your biggest risk right now as bankers is not taking action on climate finance. And your biggest opportunity here is being amongst the first to act on this. I think the space is completely open. You have so much within this room. I thank you for all of this. Take care. Bye-bye.
Thank you for that, Aisha. And now, ladies and gentlemen, in the best part of the final session, which is going to be the interactive panel discussion. First and foremost, let me take this opportunity for inviting our moderator for this one. Previously, he's worked with HBL, Pakistan's largest bank, from 2012 to 2016, where he was the head of strategy, having earlier served as the regional general manager for Afghanistan and Bangladesh. Ladies and gentlemen, please put your hands together to welcome the regional director, South Asia, for British International Investment, Mr. Habib Yusuf. May I also request our speakers, Ms. Maria Smith and Dr. Aisha Khan, to please join us up on stage. We are also going to be joined in this panel by someone who brings 25 years of experience in the financial sector with a strong focus on financial service institutions, managing strategic partnerships, and strategy formulated to benefit people at the grassroots level. She's the chairperson of HBL Microfinance Bank and is the first woman to chair Nida-e Khan Fund for Economic Development Institution. Ladies and gentlemen, please welcome Chairperson HBL Sustainability Forum, Maya Ismail. Habib Saab, over to you, and of course, you will have about 25 minutes, which I understand you'll use to the best of your abilities. Thank you. Habib Saab, before you continue, we have one more panelist who I would request to join us. He, of course, is a seasoned senior executive with over 22 years of extensive experience in banking, finance, risk management, and public policy. His career includes significant roles at notable organizations such as the Standard Chartered Bank, Barclays Capital UAE, ABN AMRO Bank Pakistan, and Citibank USA. Ladies and gentlemen, please welcome the President and the CEO of Mobilink Microfinance Bank, Mr. Haris Mahmood Chaudhry.
Assalamu alaikum, everyone, and assalamu alaikum, panelists. Good afternoon, Maria. Thank you so much for sharing your insights and reflections on global best practices. Aisha, for you highlighting opportunities and risks in Pakistan in climate finance. I'll come to more specific questions later. But let me first start with Maya. Maya is a chair of HBL Microfinance and also heading Sustainability Forum at HBL. Could you share your experiences, focusing on, the group's motivations, drivers, leading them on the journey to sustainability? You can also talk about, the challenges that you faced from external as well as internal stakeholders and moving forward with the agenda, and also the priorities that you have set for yourself in the immediate term.
Thank you, Habib. It comes from the AKDN and the Nida-e Khan Fund for Economic Development ethos of quality of life and ensuring that whatever our institutions are doing are going to improve the lives of the people that we impact in the markets that we operate. It's very important that this brought in right from the top. And going back to 2020, the board of directors at HBL took a clear decision under the guidance of the AKDN Environment and Climate Change Committee that they would not lend to coal. So it was a no coal, no new coal financing. And this is a stated policy. And whatever we do have in our portfolio in coal, we will be exiting that by 2030. So I think when you make those kind of commitments, obviously you get pushback from internal as well, because we had our businesses that turned around and said, but this is going to impact our bottom line profitability, it's going to impact our ability to service the customer, etc. But these are the kind of tough decisions that you need to take. And I think what we've been able to do in the last 5 years, it can be seen. And in that, external stakeholders, when there are requests from the government, then you also have to push back on those. So you have to make these difficult decisions. What's important is the fact that you need to measure the impact, because whatever actions you are taking, you need to be measuring them, whether they are KPIs, whether they are dashboards. For example, when Maria was with us on the board of the HBL Microfinance Bank, we instituted an impact and sustainability matrix, which is monitored by the board in every single board meeting of it every time it meets. And that shows what number of borrowers, what number of women borrowers, how many agricultural loans, what projects are you doing, you know, the number of women employees, for example. So these things have to be tracked, they have to be monitored, they have to be worked upon. It just doesn't happen overnight. So there are difficult decisions that need to be taken, and they just can't be arbitrarily done.
Thanks, Maya. And I think highlighting that, you know, tough decisions need to be taken, and it's obviously helpful that you have strong shareholder support.
So, and also, like, I mean, you know, Amir Saab is here, Amir Aziz and HBL Zarai. So this is, again, the commitment that we have from the sponsor to set up a wholly owned subsidiary, put whatever resources need to be put there to, as the largest sort of, with the group, with HBL and the Microfinance Bank, we are the largest agri-lenders, and we work with over 360,000 farmers, out of which 300,000 farmers are small farmers. Now, they're going to work in high-risk areas. They're going to work in areas which will struggle from climate change. We do have the food basin, which is Lower Punjab, which continues to have trouble. So you need to have that commitment as a shareholder and as a sponsor. Continue putting the money behind it, to continue, whether it's capital, whether it's the resources, whether it's that ability to absorb the losses. You have to have that. I think you have to have the courage. That's where I would have to have the courage.
So let's end on that, and we'll come back to questions, and I'm sure a lot of people are going to ask you about that. But moving on to Haris. Haris, you worked in commercial banking, now leading a microfinance bank as well. There is an increasing focus on ESG, but I think one of the challenges that institutions face from time to time is balancing sustainability and commercial objectives. How can banks find that right balance between these two? And how are you at sort of, in particular at Mobilink Microfinance, addressing these challenges?
Okay. Thank you for having me over. Yusuf, the profitability and sustainability cannot be opposing forces. They go hand in hand. It's not my research, but World Economic Forum research says $1 you spend on the climate financing, you will generate $19 as a revenue. So that's the amount of business you can generate through that. So when it comes to ESG or the climate financings, at Pakistan, we are at early stage. But this is not something which we're going to ignore it, because, as Maya just said, it has to come. We have to take that tough decisions to do that. Initially, it was an understanding issue, and even at Microfinance Bank. So what we did is that we need to understand what ESG means. It was taken at a very different meaning, only environment. But important component for Pakistan is the S part of it, which is the social part of it. And when I talk about the social part of it, that's because we have very low unbanked, underbanked population in Pakistan. So that's where the social S part comes in. And that's where Mobilink Bank and JazzPay Cash comes and plays a very critical role and takes the responsibility of 47 million customers of Pakistan, including the branchless banking. So that's where the social part comes in, and providing access to finance to unbanked and also underbanked customers. So that's where this social plays a very critical role, and also that leads to a woman financial inclusion, because we have an absolute gender gap of roughly around 33%, and that can only be filled with the branchless banking wallets. That's where Mobilink Bank comes and play that role, and that's where I see that the sustainability and profitability goes hand in hand. And maybe in shorter term, you might feel that is an investment and that's a tough decision you have to take. But long term, it's going to build that resilience among the organization to be more sustainable and take it to that level to Pakistan where it's not there right now. Especially when we grow with a purpose and innovation, profitability is going to follow anyways. So at Mobilink Bank, so what we are trying to do is to understand what ESG policy is going to be for microfinance customer, how it's going to help. As I said, that we hold 46 million customers in wallets and the bank. So the data security, the governance part is also very critical. That's where we play a very important role in enabling them. So all these customers who are not very tech savvy and not very literate, but can also be provided the security so they can actually get used to it. And when we talk about the G, which is the governance part of it also, is that's where the bank, Mobilink Bank is playing a very critical role in the initiative like RAST. So most of the operations of the RAST which are being routed through is through Jazz Cash. That's where you can do a lot of RPA using technology, robotic processes in which a lot of transactions can not be only automated, but also the data can also pull in you, give you the insight where you'll be able to make those decisions. So it's not just sustainability or the profitability. I think it's more to do with long-term thinking of looking at the future of not only microfinance, also at the banking sector in Pakistan, which is going to drive the financial inclusion and going to support the economy for Pakistan.
Thank you, Haris. So a few takeaways, I guess, for me here. Sustainability and profitability go hand in hand. Investing for the long term in sustainability will give you access to a larger customer base, allowing you to serve more customers and therefore increase revenues and profitability in the long term. So thank you for that. Before I go to Aisha and Maria for questions, I just want to check if there are any questions in the audience, so I can balance time. Show of hands will help if there are any. None. So let me then kickstart this discussion. So let me start with you, Aisha. You mentioned the challenges that there are in climate finance in Pakistan. Acumen is launching a fund here, and how are you sort of leveraging your knowledge on climate finance in setting strategy for the fund in Pakistan?
Thanks, Habib, and thank you for this question as well. So, as I mentioned, for the past many years, I've been focused on, this mic is very strange. I feel like I'm echoing. I don't know if I am. Hopefully you guys can all hear me, otherwise I'll put this to the side. Yeah, all good? All right. So for the past 6 years, Acumen has been developing, again, when you start with the premise of what is this capital for? What sort of instruments can we create so that they benefit those who need it the most? So for the past 6 years, we've been developing private equity-based instruments. We have 6 climate-focused funds in Africa, 2 that are non-climate focused but look at displaced populations in Latin America. The 7th climate fund, which is the one you're referring to, obviously the one that's closest to my heart, our first ever single country fund, investing in climate adaptation in Pakistan through putting equity investments in growth stage agribusinesses. And the reason why Pakistan is the right country for this, again, we've done 7 funds and all of them have been regional funds. We never ended up thinking that a single country fund would be necessary, but Pakistan is truly unique. And the agriculture sector is uniquely positioned to be able to be robust in the face of all of the macro headwinds. Plus, not only is there a massive strategic reason, again, you guys all know, 2 out of 3 Pakistanis are living in rural areas and are dependent on agriculture for their livelihoods. The impact piece of it, I don't think I need to convince you on how the sector is so deeply vulnerable. But the opportunity piece of it, which is when you're developing a returnable fund, which actually has dollar returns connected to it, do we have the right sort of businesses in Pakistan at the growth stage that can absorb anywhere from $1 million to $6 to $8 million of equity investment? We started off with a question 4 years ago, looked at the entire pipeline, had a few hundred agribusinesses in our portfolio, and then refined the thesis further to come up with the fund structure that now we're super confident about and really excited. We do believe it's going to be a ground-changing fund for Pakistan, not only transforming agribusinesses and enabling them to add to the climate resilience of the economy, but I think catalyzing investments by all of you, pulling in the private sector, creating the space, the structure, the formalization required, because our capital markets overall are shallow. And I think we need to start demonstrating successful investments, successful companies being built up. We're deeply confident that we're going to be able to do that, and I hope, in the coming years, as I come and speak to this audience, I have more and more examples of success stories to share with you. So that's the premise right now, based on a lot of ground research and a lot of experience in the climate finance.
Thanks, Aisha. Maria, for you, I mean, you also been on, as you've been in BI for a long time, starting out as an investment professional and now Chief Impact Officer. You've been through the journey of taking banks and now institutions through an ESG process in which they end up improving standards, practices, et cetera, aligning with global best practices. What sort of challenges have you faced in doing that? I mean, obviously it's not easy, encouraging companies to move in a direction which they're not familiar with. How would you go about doing that?
Yeah, thanks, Habib. To Habib's point, so I spent the first 10 years at British International investing in financial services, so investing basically in banks in our markets and in microfinance institutions. And I'm happy to say I've been involved with the HBL investment for all that time. But in some of our markets, so when we go to invest in a bank, especially on the equity side, but through any product, we take a hard look during due diligence at processes and systems when it's relating to any of these things, the environmental, the social, overall corporate governance. We don't expect, actually, it to be perfect on day one. What's important to us is that there's an intention to make improvements. And so we go in with an action plan on how to fill any gaps, how to move towards international best practices, how to drive businesses to focus more on where there's opportunity, whether that's on the sustainability side, but it could also be gender. It could be doing more with SMEs, just depending on the local gaps in regulatory framework, et cetera. And then we work with them over the course of our investment to manage that. So it's never perfect on day one, and there's always lots of challenges. I mean, some of the things that we see repeatedly, despite the market, is one, the human capacity part of it. So, often people will come in and they think it's a bit of a box-ticking exercise to put one or two people that maybe used to be in marketing or used to be in a different part of the bank and put them in as, ESG specialists, and then they've kind of got that covered. But going back to the point I made in my presentation, the point that Maya made, is this is really about a culture shift, right? So when it works well, it's when you've got shareholders committed to this, when you've got the board subcommittee overseeing it, you've got management bought in, and you've got the right human capacity on the technical side. So bringing in people that have a couple of years experience in doing something like this, whether it's in the market or outside of your market. I mean, sometimes what we've done is we've seconded people from one of our markets, for a couple of years to another. We've seconded people from BII into organizations to upskill and build that capacity, but making sure that you have buy-in from the top and the right human capacity is clear. I think the other thing that we have seen is when there is market volatility, which there almost always is in the markets that we invest in, sometimes people see this as a short-term economic, strain, because you do have to invest in this way of thinking in these processes and systems. And when you're faced with rising inflation and a disadvantageous rate environment and other macro shocks, investing in this in the short term seems like it can be penalizing. But really looking at the longer term benefits economically and showing people both from a risk assessment perspective, but also at the opportunity side, all of the things that Aisha and myself talked about in terms of the opportunity set, hopefully we get people to see the medium to long-term benefits.
Thanks, Maria. Going back to the audience.
Yeah, and just for the information, Pakistan's first green agri-bond is going to be done by Infrazam in the next couple of months. I'm on the board. So Maheen Rahman and her team are doing a great job. So we'll do that and we'll flaunt it when we do the listing on the stock exchange.
Brilliant. Yeah,
In the same vein, since Munir Saab has just blown the trumpet of his own, the company